RMN, RUBI, SLNO.
TSL.
Good morning.
USGO. GLL.
Morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, March the 2nd. We got about 4 minutes to go before the opening bell. Oil is up, gold is up, futures down. VIX is up. VIX could launch off of this level. If you took the put flies, we've been suggesting
GLL.
for hedges, you should be fine. I guess the president's saying this business could take a couple of weeks. All right, coming into Friday, we're looking at the 6,600, 6,500, 6,400. This 6,600 is the area where we're thinking we could bounce that area. 200 days right here at 65.59. I was going to roll these up 50 points, 75 points. I didn't do that on Friday. I still have these. Thank you, Russell. Microsoft's hanging in there. Very interesting. Okay, we've got 2 minutes to go. 2-minute warning. Really nothing to do at this point.
PG1, RUBI, TURB.
PGY.
PG1,
Okay, let's get ready. 1 minute to go. 1 minute. All right, first 15 minutes, I'm not doing much of anything except checking for profits. I might take some of these oil and gas names off. Okay, Microsoft's on the move here. Microsoft. Microsoft gapping down, but is moving higher now into Friday's price action.
PG1,
Okay.
RUBI,
Microsoft. Sorry if I killed your eyes there. Okay, let's get ready to rumble. Not going to do much of anything the first 15 or 20 minutes. Certainly not the first 30 minutes. Take some profits off if it makes sense to do so. Looking for VIX to spike to 30. Could launch off of this 20 level.
BDMD.
RUBI,
If it gets to 30, look for 6,600 level, 6,700 level for S&P cash. Okay, let's flip to S&P cash. S&P cash. Okay.
ONDS. NFLX.
Okay, S&P.
INFU.
Got a little bounce here. Looking for Netflix to follow through as well. Netflix. Okay. Charter Communication. Valero.
Low tick alert minus 800. Extreme low tick alert.
Valero. Take some Valero. Let's see what Valero looks like. I don't want to just
NFLX.
take it off just because. VLO.
EMNR.
Okay, big gap up. Okay, that could keep going.
AXTI. UUUU.
Valero.
INFU, AXTI, RPRX, TPET, NUCL, ZAP, SABR, FDEV, ONDL, ONDG, IDNA.
Okay, Valero gapping up. Futures on the move. Futures on the move. Be careful buying the dip. A
LITX,
lot of people are going to buy the dip,
LITX.
most likely. Let's see if they get torched or not.
TRCA,
AXTI.
RSPS,
ONDG.
TPET,
Okay, I'm going to grab some 30 Delta calls and puts.
NUCL,
If Thinkorswim will cooperate here.
FDEV, ONDG, RPRX,
PURR. ONDL.
CRCG,
NFB. VG.
Calls are expensive. Puts are expensive. I would do call flies
ET.
if you're considering that. Call flies.
TPET, AXTI,
ONDG.
LITX,
And 30 Deltas.
CCZ,
Quite expensive, actually. So I do call flies if you're thinking upside. Put flies if you're thinking downside.
ONDG,
AXTI.
FIGR,
Looking for VIX to spike.
IBRX, BURU, NEXT, BATL, BDMD.
Okay, VIX still moving here. Okay, Netflix on the move. There goes NVIDIA, Microsoft. Okay, we got a bid in stock. Core Weave is moving higher. Core Weave. We got a roll Core Weave. Okay. Nice reversal. Bitcoin. Bitcoin pouncing here. 66,000 Bitcoin.
NOWL, KTUP, BATL, RLYB, BDSA, BDMD, MUU, RZLB,
Okay, number of stocks advancing, only 123 on the S&P, 25 on the Q. So be careful just chasing
ABXX,
call side bounce at this point.
DFNS, RCAX, NMR,
Futures are still off 58 handles.
MD.
SUNE, ONDL, NEXT, CCUP, EOSU, KTUP, ASPN, RLYB.
Okay, let's take a look at some of these oil and gas names. Exxon Mobil on the watch list, gapping up. CVX, Chevron gapping up.
ELTX, DFNS, MULL, RCAX, NTLA, SUNE, CCUP, RKLX, TURB, SNXX,
All right, Chevron.
CRCG,
Let's take a little bit of this off. Let's see.
Less than a minute.
ELTX,
Got April.
MULL, DFNS,
ONDL.
CLPT,
All right, Chevron. I took a little bit off of Chevron. I know some of you are probably still in this from January.
TURB,
Chevron.
SNXX, RKLX, RCAX,
Valero.
RCAX.
MUU,
EDSA. AXTI.
QURE,
QURE.
TE, PURR,
ONDL. RDWU. CRCG.
RDWU,
EOSU. PURR. SOUX.
TURB, BDMD,
INFU may res in 10 seconds.
RCAX,
TURB.
SOUX, ETSA, FGRU,
ALOI Malta down. FGRU. RCA.
Okay, Apache, I heard that's been very active this morning. Okay, all of these gapping up. Futures. Okay, Netflix on the move here. Netflix following through. Okay, so we see the follow through. We want to see that volume continue to pick up as well.
BDMD.
CISS, ETSA,
MRAL. KRMN.
LUNG,
XWEL. PURR. IBRX.
RCAX, CTIO, ALBT,
Chevron,
ALBT.
S&P. I'm
CLPT,
going to hold on to these put flies for a while.
RBN,
ADT.
S&P still moving. All right, Microsoft looks good. Microsoft coming off the low. Still basing, but
ETSA.
looking better.
MRAL.
Netflix, obviously, we just talked about that. Looking good. NVIDIA reversing. We had the dip getting bought at the 200-day.
ONDL.
NVIDIA dip getting bought.
SABR.
Not that surprising, is it?
CLPT,
CLPT.
RBN,
Okay, the pharmaceutical stocks like J&J,
CRCG.
Merck on the watch list. Merck,
ETSA,
S&P, spiders,
LUNG,
bouncing
MRAL.
along this level. This is the fourth time we've hit this level.
AEHR.
Actually, a little surprised that they are buying it.
ONDL.
I think it's probably just shorts covering for now, right? You
SABR.
would think.
MRAL, TPET, RLYB, ETSA,
Shake your booty. Shake your booty. Got Casey and the Sunshine Band on the brain here. All right, so pretty interesting bounce already. Wow,
XWEL.
very
HYMC.
interesting.
NAMM, XWEL, SABR, EONR, CRMS, TPET,
ETSA.
RLYB,
So far,
CRCG.
markets
CRCA. SLS.
seeing a lot of short covering.
TLA.
Palantir, number one on the NASDAQ 100. Palantir, Zscaler, CrowdStrike, MSTR with the Bitcoin bounce, MSTR. Intuit, earnings last week, that's higher.
CLPT,
NVIDIA bouncing, obviously. Micron bouncing. Micron, what's Micron doing? I had some puts on Micron.
HYMC.
ETSA,
ADT. CRCA. CRCG.
RUBI,
All right. Let's see how the markets shake out so far this morning.
TPET,
SLS.
Okay.
ETSA,
NTLA. EDSA. ADT. AEHR. CRCA. CRCG. CCUP.
RUBI, CLPT, CRCG, CRCA, CCUP, EONR,
See if we get a higher low here or just roll over.
LXY,
Shorts covered.
ETSA,
PURR. NTLA.
USO, crude oil.
CRCA.
RUBI,
CRCG. AEHR. TURB may resume in less than a minute.
CCUP,
Turn
CRCG,
this down a little bit.
CRCA,
ALBT. HYMC.
Okay, let me turn that up.
ALMU.
Mhm.
Well, obviously, Ohio oil prices does impact, the economy in general. We're powered on energy, and that means that prices could go higher, and affordability goes down. And as a result of that, it means that you don't necessarily want to cut rates because you want to kind of temper growth. to kind of maintain, keep a lid on inflation. That being said, oil prices also has an impact
S&P.
on oil prices. So I think it's one of those things where the Fed is actually, I think, been dealing with this a lot, which do we care more about, inflation or growth? And I think it just depends, as Annette said, on the time, how long this is impacted. If oil prices stay sustainably higher for a while, then growth will be impacted, and then the Fed, I think, can cut because they will care more about that in the short term. But if it doesn't,
Got a little bounce, a higher low for now. Core weave pushing higher, core weave.
Good stuff there. Fed is indeed in a pickle. And let me get back to here because I was surprised throughout the weekend. I was paying attention to all those crypto, Bitcoin, and if this would happen a couple of years ago, I think you would want to see that safe haven trade go into Bitcoin. But that hasn't happened, Liz. Why do you think that's the case?
That's how what?
No, it hasn't necessarily, and strategists have pointed out that Bitcoin hasn't very much been the sort of digital gold that it has been talked about. I did get some commentary from Sean Farrell over the weekend about Bitcoin and the price action that you saw. And he did note that it was a notable price action when you saw Bitcoin going down to around 63,000. And then it spiked up to 68,000 in the same day on Saturday. So he said, that is significant. That it means that, yes, there was risk off, but then it went even higher than the initial level once there was more clarity as to what was happening in the afternoon. So he does note that is positive. But he also noted, again, going back to the oil issue and the energy issue, if you have a slowdown because of sustained higher...
All right, looking for this bounce to continue. All right, futures are pushing back up again. A lot of volatility as expected. Let's see what VIX looks like. VIX. Okay, VIX. Okay, so the high of the day was 25.24.
Yeah, I think in the next few days, my mindset is really focused in on what exactly we'll see at the price of the pump. We're expecting anywhere from 10 to 30 cents higher in the coming days.
Okay, my plan is on CoreWeave, if you're still holding on to that, I'm going to take the same strikes, 80.75 put. I'm going to roll that out to April. 80.75, going to roll it out to April. CoreWeave, if you're still holding on to that. Let's see, Netflix is looking good. Netflix, all right, off the highs. NVIDIA looking pretty good off the 200-day. Microsoft coming off the low, still basing. Futures trying to rise here. Futures. S&P cash looks good.
Everyday shaving and grooming. Innovation in the palm of your hand. Try risk-free with 45 days money-back guarantee.
Okay, we're still flirting with this area, trying to move into the gap. Futures are still down 45. Okay, CoreWeave, I just rolled to April for a $25 credit.
There's really nothing quite like that fresh start. Let the fireworks fresh start. Give yourself a refresh with more than 20,000 levels at your fingertips. Available anytime you want. Plus, with
No Wi-Fi needed. There's always space for
Okay, let me just
now that's what we call
TMD.
FAFO. I have a lot of friends, not a lot of friends, but I had friends in college that were next door neighbors, super nice people from Iran, college students. We used to barbecue quite a bit. Just, I keep thinking about them. Wonder what they're doing these days. They're probably working here in the States. All right, futures continue to ramp higher here. Watching for it to fail at some point. If it doesn't, that'd be quite surprising.
Brian Sullivan. We are getting S&P Global Manufacturing now a few moments ago. Let's get to Rick Santelli. Hey, Rick. February final read on S&P Global Manufacturing PMI raises up 0.4 from its original.
Manufacturing is doing better. Breaking news. Rick Santelli talking. All right, so we got a little push here into the gap, a little bit higher.
And many have pointed towards past episodes of geopolitical issues being a flight to safety going into treasuries. This one, of course, seems to be paying more attention to the cost of things like oil and potentially the cost of war. But ultimately, the moves in treasuries were up about 8 basis points in a 10-year. But do remember, the 10-year closed at the lowest yield since October of 24 on Friday. So there is some of this kind of bounce energy involved, but we are above 4%. And if we look at 2-year note yields, they're also up fairly equal shift on the yield curve. Short maturities and long maturities are all up about equal amounts. Squawk on the Street will return after a short break.
Okay, Trace is not working at the moment. Okay. $7,000. We've got the low here at 65, right around that 65 level. Okay, we have nothing but negative gamma down here. S&P. All right, so all of this is negative gamma down here below. At 6,900, 6,800. This gets very negative here. All right, futures are still rising though. Looking pretty good so far. All right, looking good. All right, there goes Tesla. Tesla's on the move. I did not expect this. I will say I did not expect this. A lot of short covering, I would assume. Okay, S&P still on the move here. Okay, Trace is finally working here. Okay, so 0 day, you can see right there, 67.70. Somebody sold some premium. Okay, 67.70. Okay, there's nothing below that. Okay, hedge flows rising. SPX hedge flows rising for now. Somebody sold a bunch of puts, a credit spread down there. 0 DTE credit spread. Was it 67.70 we said? Yeah, 67.70. All right, so it looks like a nice move here so far. The New York Fangs are all catching a bid. NVIDIA, tap the 200-day. All right, so NVIDIA bouncing at the 200-day. You would think that's institutions, right? Buying the dip. NVIDIA is not going out of vogue. It depends on where it decides to pivot. Pivot low at 200. They're going to do that. That looks good so far. Okay.
Defense names, not surprisingly, near the top of the list on gainers. There's LMT, Northrop, RTX, L3 Harris, Boeing, by the way. Also
VIX spike and drop. VIX
as we've erased some opening losses.
still drifting a bit lower.
6,800 at the open, which would take you back about 2 weeks.
Haven't done anything. Only thing I did was roll some CoreWeave. I sold some Chevron into Strength. Have a bid, an offer to sell some Valero as well into Strength. Okay, that was up quite a bit this morning. Along with oil and gas names, gold, silver. Let's see what that looks like. GLD. Okay, off the highs. Silver gapping down. USO, crude oil, fading.
FG and XP halted. CONL. BETA.
Okay, there goes Bitcoin. Bitcoin ripping here. Whoa, what the hell happened to Bitcoin? BTC, Bitcoin, ups, BTC. Bitcoin futures on the move, off the low. Okay, Bitcoin, watch Bitcoin. Bitcoin. Okay. A lot of unexpected moves here. So I want to see how this settles down. You know, there are things moving that don't make any sense. There are other things moving that makes a lot of sense. Bitcoin off the screen over there. Let me just adjust my chart.
TPT may res in 10 seconds. And SRX may res in 10 seconds.
Okay, Bitcoin, nice bounce.
XRP may res in 10 seconds. NXTC may res in 10 seconds.
S&P 500. Give it a few minutes. I wouldn't be jumping right in feet first. Did take a few things off into Strength. I rolled some CoreWeave out to April.
We held up that chart of the defense stocks. I know that AeroVironment, which is AVAV, is up 40, but this is a drone maker. I think this is the less expensive way to be able to, when you read those stories, well, maybe we're out.
Tesla starting to fade. Tesla.
That's Wahid Nawabi. They can produce fast, they can produce cheap, they can produce good. So that is the drone company that I think that the U.S. government is favored. I love the cheap drones for purposes we all know that big hardware may be suspect. But AeroVironment, if you believe in drones, it's there, and it's it's $117.
Baker Hughes off the high. Baker Hughes gapping up. Chevron. Nice bounce now on Chevron. What's ExxonMobil doing? ExxonMobil. Okay, all those gapped up. I wouldn't chase them. CoreWeave, Micron. popped, Micron popped, and flagging at the moment.
Not down. Bitcoin seems to go down every day. I want to check it out today. And I'm watching, of all things, the company I have wanted in Cummins, because these are companies that are still doing data center, and data center seems to be winning. Cummins has engines, they have truck engines. Jennifer's just an extraordinary CEO, and if you can take a look, obviously that stock is just a home run. The engines that they have do back up for the data centers, which obviously
Thomson Reuters turning back up.
they have to be 20.
Right. Meantime, the street's going to have to keep one eye on the macro and the geopolitical. We're going to get a ton of specialty retail. Target, Best Buy tomorrow. AEO.
Just watching S&P for now.
Best Buy is hurt by the DRAMs. Let's hope they're not.
Watching MACD.
New CEO, but if I were him, I would lower things and get that out of the way. But he's coming in like gangbusters. I like that.
It's their investor day tomorrow.
Yeah, investor day. It matters a great deal because this is Fidelity. This is not Brian Cornell's target. But you know,
Turning around a retailer is not easy.
I was going to say, Bonnie, turning around a retailer in a world where there's Walmart and there's.
Speaking of Walmart, let's go take a look at Walmart. Okay, Doji, Gravestone Doji for now. All right, let's see how we're doing. What the verdict is. 136 stocks advancing. Okay, look for a fade. Looking for a fade. 25 stocks on the queue. 25 out of 100. 24 out of 100 are advancing. Okay, 76. 76 are declining. IWM is off. Let's see what IWM looks like. IWM. Here's Walmart. IWM. If you're itching to do anything, I'm thinking about adding to Netflix if this keeps up this strength. Netflix looks good. Big gap up, plus 22% last week on Netflix. No surprise there. We had Paramount Skydance. I was going to put that on the watch list too, but we know Netflix. We know about Netflix. Paramount Skydance pulling back below the 200-day. Okay, Microsoft, watching for that to continue. Okay, IGV, Captain talking IGV. Software Group, XSW, also Software Group. Still basing. Holding up. It's not lower today. It's pushing back into Friday's range. Needs to get to Thursday's range and take out the high. Okay, a lot of things have gapped up. Don't chase. We'll see if they settle down and follow through or if they're going to fade off the high. The morning bounce. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Monday, March the 2nd. Now, remember, we did have selling into the close, selling last week. So a lot of that money collected by institutions probably putting money to work. Russell just looking at NVIDIA short. I'm looking for NVIDIA to stand its ground or lose the 200-day. Big range, no surprise here. Big range on NVIDIA. It's been range bound since June, July last week. We're right around that area from summer of last year. I said last week. Last year. Okay, so that's NVIDIA. Tesla. Tesla at the lows of this range. Does it bounce off of this area? Robotics. Self-driving. Robo-taxis. Not just about the cars anymore. Microsoft. Microsoft, nice move off the low. Continuation. All I have is Microsoft shares, MSFU. Haven't added to it. Haven't done anything there. Apple with the bounce. Apple looking better. Okay. Almost put that on the watch list. Apple. Yep. Top of the month.
We are live at Post 9 of the New York Stock Exchange. Stocks are under pressure as the markets Israeli strike on Iran over the weekend. The S&P 500 down 0.5%. One bright spot in this market is energy because oil prices are surging. Most everything else is lower, although information technology is holding up well. You've got some strength in names like Palantir, no surprise, up 5%, sort of a defense tech play. NVIDIA is higher, though, as well, and so are some of the other semiconductors. But consumer
Apple, watching Apple here.
Down 2%.
See if it fades.
Services and financials, all the cyclical groups. Treasuries also making a move. They're buying the safe haven U.S. dollar, but selling treasuries potentially on this inflation trade, right? With higher oil prices, higher inflation, the 10-year yield goes back above 4%. We've got full coverage of the war in Iran, the impact on global markets. Great lineup of experts coming for you. Ian Bremmer from the Eurasia Group, former Defense Secretary Mark Esper, former Israel ambassador to the U.S., Michael Oren. We're going to get through all the key details that investors are looking for.
First up, though, busy day for some manufacturing surveys. Let's get back to Rick Santelli. Hey, Rick.
Hi, Carl. Indeed. Now, these are the ISM PMIs, and these are fresh February reads. On the headline, manufacturing expecting 51.5. In the rearview mirror, 52.6. We come in 52.4. And if we look at prices paid, we'd rather have these go down, but zoom, 70.5. Well ahead of the 60-ish. We're looking for 59 in the rearview mirror. 70.5 would be the warmest since June of 22. And if we look at new orders, 55.8, better than expectations, but lacking in terms of sequential. 57.1 in the rearview mirror. 55.8 would be the weakest since Dece of last year when we were sub 50 at 47.4. And
There goes S&P on the move here.
very key. We get the big jobs report this week. Well, 48.3 expected, 48.8 better than expected, and 48.
Okay, rising out of this.
Rearview mirror. So it's better than expected. It's better than the rearview mirror. Here's the problem. It's the 29th consecutive month under 50. Interest rates are moving up. Parallel shift on the yield curve. The short end and the long end are each down about 8 basis points. Sarah, back to you.
Okay, Rick, thank you very much. Rick Santelli. So where do we look on a day like today? You have to start in the energy market because that is driving a lot of the price action and a lot of the concerns about the economic impact of this war. Look at Brent crude oil, for instance. That's the global benchmark. It is surging. Gas prices, especially in Europe, surging as well. After Qatar made that announcement that they would be pausing. Remember, Qatar is a big gas supplier to Europe. What the market is telling you is that this is going to hurt inflation, the consumer discretionary travel stocks under pressure a lot.
Core weave turning back up.
Wolf Research put out a pretty good analysis.
Market's pretty volatile, very choppy.
FRB US model for 20%.
I think it makes sense to sit back and wait for a trend to develop. We bounced off of a level so far,
And nearly 40 basis point boost to headline CPI.
and we've hit 3 times before.
Projection of what, say, a $20 increase in oil prices would mean for CPI, for inflation. And you can see, I mean, there's an elevated effect for, the better part.
Doesn't actually look that bad, does it? Only or shy of 3%, right at 3%.
Increases in overall CPI. They say general rule of thumb is for every $1 barrel increase in crude, there's a rise in gas prices of 2 to 2.5 cents per gallon. In other words, consumer feels it.
Yeah. Meantime, the Journal is putting together some numbers on core PCE for January, which is already
Right at 3% at the moment.
If you look at the inputs from CPI, the inputs from PPI, which was hot on Friday, you'd be looking at the hottest core PCE since March of 24, roughly at 3.1.
I know. I mean, the question is what happens to the progress that we've seen, or at least the stabilization of inflation? Does it perk back up? And yes, there were already signs even before this that there was a hotter PPI, for instance. Let's see what happens with oil prices. As we know, it's an important.
We're looking for something positive.
First of all, it's a big component of how consumers spend money, but also
Not expecting it, but okay. Stochastic's pointing lower at the moment.
Yardeni over the weekend has what he calls a short war scenario, in which crude actually goes lower after all of this is said and done, which would feed what he calls his roaring 20s thesis, which has been long-standing.
I mean, that is a bull way to look at it. The only
Okay, so 1, 2, 3, 4, 5, 6, 7, 8 distribution days now.
And this could take a while, and so the market
That's Friday's volume. So
I think on asset prices and on the economy. Just a few other places I wanted to highlight in the market right now that we don't necessarily do at the top of every show, but I think is important. The U.S. dollar. Dollar is a safe haven. Remember all the talk and the worry that no, the dollar's not a safe haven anymore. People are selling the dollar. Guess what? Times of turmoil, buy the U.S. dollar. That's what the market is telling you right now. And another interesting bright spot, I thought, world markets are selling off right now.
all right.
Concerns about
Bitcoin's been down here for quite a while, basing Bitcoin.
stock market, which is actually surging today, and it is being driven by some of the defense names.
Looks like it's moving back up into the range.
That has been
Okay, Bitcoin.
a winner for the last few years, I would say, ever since October 7th. But
Okay, going on week 5, going on 5 weeks of basing.
along with other safe havens,
We're holding on to 65,000, so that's good.
higher, and shippers are also higher, right? Because we're talking about some
Okay,
real
stocks on the watch list like STNG. Been on the watch list for a few weeks. That gapped up this morning and faded. TK Tankers.
Hey, David. Well, look,
Okay, that one faded as well.
lawmakers be briefed today by Secretaries Marco Rubio,
Chevron,
Defense Secretary Pete
Oil and Gas, ExxonMobil,
Expecting
all of these moving up.
briefings
Apache.
from those officials. After those briefings, we're expecting both chambers to vote on a war powers resolution. Now, that resolution would require Trump to get further congressional approval before any additional strikes in Iran. So far, we've already
Taking away the possibility of a
War Powers Act because they want Congress to really
nuclear
exert
weapon.
power in declaring war.
They'd use it.
You've got several Democrats who really support these strikes on Iran. They're going to be breaking their own ranks and voting against.
Okay, looks like we're going to keep going here. Looks like we're going to keep going.
It will be very key to watch, but
Looks like we're trying to go here. S&P.
pass both chambers. Trump can just veto this, and Congress lacks the vote to overcome a veto at this time. Meanwhile, a lot of lawmakers, they're looking to these briefings to try to provide some clarity on what comes next, how they might want to position themselves. Senator Mark Warner, he's the top Democrat on the Intelligence Committee, one of the few lawmakers who was actually briefed last week on Iran. He told MS Now
Apple.
lawmakers don't understand why
Apple's still going. So is Microsoft and NVIDIA. Netflix is pushing a bit higher. Netflix. I want to add to Netflix. Just like to see more, more substantial base. Netflix gapping up. It's kind of hard to measure where this could go at the moment. To keep an eye on open interest and see what that's a good idea, actually. Let's do that. Given changes in open interest.
Has been shut down for more than 2 weeks. Of course, the House has already passed the bill. The issue now is with the Senate. Not clear if the Senate's going to be doing a vote. We know that Senate Democrats and the White House have been exchanging paper on trying to get to a yes, but at this point, it doesn't sound like they're anywhere close. Guys? Democrats say that he launched this war illegally.
Okay, I'll come back to that in a minute. Let it do its
That's
thing.
not true, is it, Emily? I mean, the War Powers Act
S&P.
of 1973 authorizes the president to use military actions. We've seen that from many presidents before him. Sarah, you're right about that last part. There are a number
S&P just grinding.
actions like this without Congress weighing in. It's really been decades since Congress has formally declared a war. Yes, it's a power that was given to them in the Constitution, but like so many other things with Congress, you've seen them give more and more of that power over to the executive branch. So they're still able
All
to
right,
take a vote
Core
on
Weave
war
turning
powers
back up, trying to get above 78. Core Weave. I rolled that out to April. Same strikes, 80.75 for a $25 credit. Sold some Chevron into strength this morning.
Let's bring in Ian Bremmer, Eurasia Group president this morning, talk about what might be in store for us. Ian, good to see you.
Good to see you.
Curious how you're thinking about duration right now and scope as we keep an eye on some of these reports about, for example, strikes on Hezbollah.
Well, Hezbollah, I mean, the IRGC, the Islamic Revolutionary Guard Corps, Iran, have great influence over.
Okay, I'm out of Chevron for now. Chevron.
Essentially management seats, board seats in informal governance of Hezbollah. So in some ways, the Iranians are making more of the calls of what Hezbollah is doing than they are with their own military units.
I don't know if you noticed, but I'm not really active at the moment. Okay. I want to see how the markets flesh this out. I mean, we're only 40 minutes into the trading day. It is 10:10. 10:10 wins in New York City. Good station. ExxonMobil trying to bounce. Okay, Valero. I have some Valero and some VST. That's bouncing. Valero, VST. Okay, not much there. Valero, though, looks good. Bitcoin. Okay, what's Nokia doing? Nokia spiking. Okay, Nokia spike.
Missile strikes in the region, most of which get intercepted, but then it's drones. And the drone war, they'll be able to engage in for a much longer period of time. And the question of to what extent you're going to see interceptors, and are they going to run out? Because the U.S. can't maintain this level of naval presence in the region if they don't have interceptors boats to protect them. So I do think, well, as this war continues, yes, at a lower pace, but you could start to see more drones getting through, and on a daily basis.
Okay, Nokia is on the move.
Fairly significant attacks with casualties.
Okay, S&P looks like it wants to keep going here. Wow, this is quite surprising. I thought for sure we were going to go down to a little bit lower. We're going to take this level out. Let's look at Trace again. Trace is, a little wiggle right there, but 0 day, non-zero day. Okay, so that's new, right? That right there. Look at 930. Look at this level right here at 67.70 at the open. That wasn't there. That built up. You see it? See 67.70 right there? 67.7. Watch that. From the open to now, somebody sold credit spreads right there. We see some right there at 6,900 being bought. Okay, see 6,900? See that right there? 6,900. That grows as well. So somebody's going long there. That almost looks like a credit spread. Dealer long, dealer short, 69.10. So just grinding up here. Looking good. Looking good. Well, you got to go with what you see, not what you think. S&P is definitely climbing. VIX, let's go check out VIX. Okay, Apple's on the move. Apple moving up. Okay, that looks good. Looks good. Oh, there goes the markets. There goes the markets. Okay, we're about to go green on the day. Wow. Futures about to go green.
The Iranians have a lot of those capabilities, and if they're going to use them in a decentralized way against hotels and airports.
Okay, so we're about to go green here after being down this morning. We were down what, 175 bips, 175. Wow, that's crazy.
Ian, finally, certainly appropriate to talk about combat, but let's just end here on outcomes. Realistically, where in the range of outcomes, can you give us some sense as to how you're thinking about it and what seems most likely?
The most
futures
likely thing is that the Iranian people are going to continue to experience the worst levels of casualties. A matter of 2 weeks in January, probably the worst civilian killings that we've seen since the genocide in Rwanda. And that's an extraordinary thing to say, and that repressive capability for the paramilitary groups and for the Iranian Interior Ministry, that continues to exist today. The regime has been decapitated, but its repressive capacity domestically is still very strong. And so, I mean, to the extent that what Trump wants here is a government that he's going to want to work with, and a government that is representative of the Iranian people and that stops engaging in brutal killing, as well as the export of terror and the rest around the world, which
Apple.
continues to be a very real and present danger. Those things.
Wow, the New York Fangs are. I'm quite shocked actually. Impressive. So, first trading day of the month, you know, portfolio managers have to put money to work. What was the best look? I think Nvidia probably was the best look, bouncing off the 200-day over there on the right. That's the 200-day right there. That's a $5 move already in Nvidia. Dollar, you trading Nvidia this morning? I know Russell was looking at going short. NASDAQ, Nvidia. Okay, MicroStrategy, MSTR strategy. I'm going to still call it MicroStrategy. MicroStrategy, you know what I'm talking about. It's number one. MSTR, number one. MSTR. Numero uno. Okay. Whoa, look at the Bitcoin go. Holy smokes. I have Riot on the Riot. Watch Riot too. Wow. Wow. RIOT. Okay, that had a nice run up, huh? Off the low. $15 over $1.25. $1.25 move. Intraday. That's nice. Nvidia is still climbing. So is Netflix. Wow, this is not what I expected. Not what I expected when I looked at futures last night. Said, maybe we get a bounce. I know Russell was looking for a bounce going green, right, Russell? I think you were. I thought let's see how it fleshes out this morning. Well, I tell you what, this is pretty impressive. New York Fangs all catching a bid for the most part. Google's not getting much follow through, but Amazon is pushing higher. There goes Meta. Hey, kitty cat, came to visit. You did? Put your food over there. I put your food over there. Look, go look over there. Go look. Okay, Apple, Nvidia. Nvidia's still going here. Very nice. Okay, I'm going to take a 2-minute break. I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're not even an hour into the trading day. Superb bounce. I wouldn't be shocked to see the markets fade, but we are moving higher, so they are buying the dip. So it appears. We got Apple up, Amazon, Microsoft, Nvidia, Netflix, Tesla, Meta. Superb price action here. All right. I'll be right back. Give me 2 minutes.
A major comeback here early off the lows as Wall Street reacts to the war in the Middle East. The S&P was down more than 1.1% shortly after the open. It's down 0.2% now. CNBC senior markets commentator Mike Santoli is with us as industrials now join technology and energy in the green.
Guess what's in industrials? Defense stocks. So I do think that what this market has gotten in the habit of doing very well is sequestering the stuff that seems vulnerable in a given moment and rotating money into the things that seem insulated or even beneficiaries of it. That's where we are at the moment. I also think that investors had 2 days to review the standard playbook for how these things tend to go, which is sometimes a short risk off trade, a couple of weeks of confusion perhaps, but then it always seems like a buy unless oil really spikes like 30% or something like that. Or if the economy and the market was already in a downturn, that's when it seems like a real exacerbating factor. Obviously, we don't know how it's going to develop. It could go badly relative to the market's expectations. But I always ask in these moments, what specifically should the market be repricing today based on what we know? And the market's decided if oil's going to stay within this 1-2 year range and we don't really have anything to change the equation on the macro, then we're not going to reprice anything radically. I think we're also benefiting from the fact that the market's been kind of confused and kind of trading messily and kind of hedged up coming into this period. It wasn't like we finished Friday thinking everything's great, nothing can go wrong. I think we already had hedge funds with substantial short positions. If you look at their positioning, it's very neutral at the moment, but mostly it got neutral, not by them selling their stuff, but by going short a lot of things. And so I do think that's helping us in a way because we weren't over our skis in terms of risk appetites coming into it. Now, we don't know how it's going to play. All I'm looking at is the market's range. The S&P 500, even at the lows this morning, did not threaten the first quarter lows that we've hit a couple of times. And, even the December lows are below that. So far, not much change. I am interested in how tech is trading off of this. So software has been beaten up badly. It's got a bid today. So you have a counter trend move right there that I think you're going to have people hunting for parts of the market that aren't dependent on oil or trading goods.
Yeah, well, I mean, on Friday, obviously, as we should have, we focused a lot, continued on private credit, on the banks in general, and credit. The banks are kind of showing some signs of life now after opening down. So are the alternative asset managers. And then to your point on technology, NVIDIA, which of course had extremely strong earnings, to which they got a very negative response, but it's showing real signs of life this morning, up some 2%. Did announce these 2 deals as well on sort of optical infrastructure for data centers with both Coherent and Lumentum.
Yeah, and I think it's really more, David, the way the market is kind of holding itself in this weird equilibrium. It's not as if everybody had a big rethink on NVIDIA's numbers and now thinks that at 177 it was a screaming buy. It's just kind of like, well, nothing has changed enough to take all of these things that far out of the range where they've been in for a while. Doesn't solve the big AI questions. It doesn't necessarily tell us that credit is not giving us a scary signal or that it's late cycle kind of dynamic starting to take hold. But it also doesn't necessarily make those things worse in an immediate sense.
I guess almost 8% move in Brent crude oil prices doesn't change
It's
the
not nothing.
inflationary
I have to
outlook.
say, it's not nothing. And look at the consumer stocks; they're not doing well right now. So it's not as if we're totally shrugging off the impact. But if this is what it's going to be, I guess the calculus is it's absorbable at the moment. Yeah.
Mike, thanks. Mike Santoli. Coming up after the break, former Defense Secretary Mark Esper is with us on what could come next in this growing war with Iran. Israel's former ambassador to the U.S. will join us with his take on the future power balance in the Middle East on a busy Monday. Stay with us.
DLX1.
All right, we're starting to fade.
So I think that's what he can do. I think they've been under-earning a bit because of that. I also think that Buffett has given us a big softball with the $307 billion of cash. It's also under-earning at these low rates. So between operating improvements, some improved rates, hopefully on this big cash, treasure chest, I think they're under-earning right now. I think the next 5 years can look quite promising for shareholders.
Bitcoin still going. Bitcoin.
He has to be a capital allocator then. But the cash pile has been that for a while now without them making any big moves. Do you think there's any pressure on ABIT to make bigger moves with that cash pile?
Yeah, that's a million-dollar question, Julie. I think over time there will be pressure. I think we'll be given a bit of time. In their defense, that cash pile is quite attractive on a day like today. We've got volatility. We've got market.
Riot making it up to just shy of 17. 1670, 1675. Riot moving with Bitcoin.
As Buffy used to say, some chance for his blood in the streets to really make some money.
Berkshire Hathaway stock has been kind of sideways over the past year or so, couple of years. If you're an investor who doesn't own it already, is there a case to be made for buying it now at these levels?
Yes, that's a good question. The stock has been flat for a year, Julie. You're right. Over 5 years, it has shockingly still outperformed the S&P 500 because it didn't really lose in 22 when there's pretty significant market correction. So it's been a good 5-year run. The last year, not so much. So yeah, that does provide a decent point. it's not mouth-wateringly cheap at 1.5 times book value, Julie. That's why the stock, was not purchased by Able and Company in 2025. To put it in perspective, in 2021, they bought roughly $25 billion of their own stock each year. So that's telling you something there as well. So it is decently priced. Probably the best value proposition for is this gives you
the former regime had every chance to make a peaceful and sensible deal. But Tehran was not negotiating. They were stalling, buying time to reload their missile stockpiles and restart their nuclear ambitions. Their goal, hold us hostage, threatening to strike our forces.
That was the Defense Secretary, Pete Hegseth, this morning, insisting that Iran had the opportunity to make a deal before the U.S. and Israel launched strikes on that country on Saturday. Let's bring in a former Defense Secretary, Mark Esper. He served during President Trump's first term. Good to have you, Mark.
VANL.
Don't care. Don't care.
STAK.
What you need?
Grabbing
Dusters?
Yep.
Market's bouncing.
Yeah.
Nokia higher today. Figures, right?
Sold it, yeah.
But you got a profit. That's a good thing.
Yeah. That's like 70%.
STAK.
STAK.
VATL.
All right, so JP Morgan, I didn't catch that. Upgraded Netflix to overweight, price target 120.
URGN.
Is whether the technicals suggest to you whether we had seen a bottom, and that given everything in mind today, with perhaps the market somewhat pricing out as many rate cuts, given maybe the impact that the oil prices could have potentially on inflation down the road, how you're thinking about price action down the road for Bitcoin.
Down the road, it is definitely something to consider. Recently, Bitcoin did fall to about its 200-week moving average, which has historically been the bottom we've seen in large bear markets. It's also now trading at its cost of production of about $65,000, which is up from $60,000 a few weeks ago. But that's a very important.
Baker Hughes from the last couple of weeks. Baker Hughes. Buyers at the low of the day.
Getting pushed out, that could ultimately lead to pressure on Bitcoin. Long duration assets struggle when financial conditions tighten, and so that's something we're watching.
ExxonMobil fading.
Great to have both of you on. I really appreciate on this day.
All right, so we are almost 1 hour into the trading day. Microsoft still has a bid. So does Meta. So does Tesla. Nvidia seeing a little profit taking. Same thing with Netflix at the moment. Amazon still has a bid right here. The oil and gas stocks, those are pulling back a bit. Bitcoin's on the move. Bitcoin.
Trading at Schwab is powered by Ameritrade.
Baker Hughes coming out of a squeeze. You can see buyers at the low of the day today. Following through, that's on the watch list as well. Futures pulling back a bit. Watch for a fade. Keep your eyes peeled for a fade. Let's see what VIX is doing. VIX. Okay, starting to bounce. VIX I was thinking about taking some 30 calls. I have the 2030. Also have some March 20s. Need to take some of those off. If you already did so, congratulations, VIX. Did spike up towards 26 this morning. 25.
It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
VANL.
Okay.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock
S&P 500 fading a bit off the high. VWAP down below. Let's see if we bounce at VWAP or not. Futures pulling back now. All right. We're back to down 30. We're almost green there, right? Back to green at one point.
The stock and other cybersecurity names have been caught up in this year's so-called SaaS apocalypse or SaaS scare, whichever you choose. CrowdStrike is down 20% in 2026. Palo Alto Networks is down almost 20% as well, and Zscaler is off by.
Okay, let me take a look at the open interest. Actually, let me look at Money Magic's levels on Netflix. Should be on the watch list, right? I should have done that. Watch list. Netflix, yeah, I have the 100 level is a Money Magic level. If you don't know what I'm talking about, Money Magic has a channel on the left side of your Slack window. Check out Money Magic's levels. You can expect resistance at the calls overhead and support at the puts below. I'll get into why that's the case in a little bit, but for now, 100, the 100 strike. Watching S&P fading now. A lot of people going, uh-oh. Let's see what happens at VWAP.
And they believe CrowdStrike is that leader. Delving deeper, the analyst went on to say that he believes AI is an opportunity for CrowdStrike and not a replacement. It shouldn't be caught up in the
All right, we're dropping off pretty fast here.
Create the next multi-billion-dollar security opportunity as enterprises look to secure a new attack surface. He thinks that leaders like CrowdStrike are well positioned to capture that opportunity over the coming years. There's another aspect to this upgrade as well. It's the belief that the cybersecurity consolidation is a major tailwind for CrowdStrike, given the fragmented nature of the market and CrowdStrike's role as a consolidator. So instead of it being this, fear that we're seeing the sell-off, he actually thinks that CrowdStrike's
S&P.
The company has spent about $1.4 billion on acquisitions.
S&P still fading.
And is likely to continue doing so, especially in the identity area, which the firm says they believe, quote, has gone under.
Apple's still pushing, still got a bid. Microsoft's starting to see a little profit taking, same with NVIDIA, Netflix. People starting to take some profits off as they see the S&P starting to fade. For the last 15 minutes or so, 20 minutes, S&P has been fading from the high. Bitcoin still going. Bitcoin futures still moving. Nice bid in Bitcoin. And its proxies.
Just before 2 a.m. Sunday, and struck people sitting outside a popular bar and on its patio. They say he then parked nearby and shot at passersby with his rifle before he was eventually shot and killed by police. The Supreme Court is hearing arguments today in the Second Amendment case over a federal law barring illegal drug users from owning guns. The Justice Department is fighting to uphold the law, which has been challenged by Second Amendment advocates.
And First Lady Melania Trump will chair a meeting of the United Nations Security Council today as the U.S. takes over the monthly rotating presidency. The White House says she will emphasize education as a tool to promote tolerance and world peace. A UN spokesperson says it will be the first time
Bitcoin still pushing. Bitcoin.
chaired a Security Council meeting. Sarah, back to you.
Okay, thank you very much, Pippa. After the break, why one firm says it sees a big buying opportunity right now in NVIDIA.
Netflix flows are light, you said? Okay, cool.
On this market reaction to the growing conflict in the Middle East, as stocks stage a big comeback off the early morning lows. Don't go anywhere.
Netflix.
MVO.
CoreWeave. Baker Hughes. Where are you, Baker Hughes? What are you doing, Baker? Baker bouncing. Buyers at the low of the day. Bitcoin looking really strong today. Bitcoin. All right, Microsoft, nice bounce off the low. Still basing, Microsoft. Microsoft. Let's see, Microsoft. Still basing, Microsoft. The software, IGV, software, tech, iShares, looking better. Okay, you can see where we need to get through. We need to get through 87. We're at the 21 day now, so this is looking better. MACD, stochastic, RSI, everything is grinding higher, so looking better. Probably going to take a little bit longer, but any one of these days we could start to see a pop into this Kirby overhead. There's very little volume. As you can see that histogram on the left, very pronounced in this area. That usually indicates a base or accumulation phase, phase one. Institutions picking up shares when everybody else is scared. That's when they start buying. Apple trying to get back above the 50-day after a drubbing on Friday. Meta. Looking for a bounce in Meta. Looking for that to get above the 50-day. Once it does, I'll add to FBL shares. Meta. All right, looking for a higher high now. All right, futures starting to bounce. Tesla. Higher lows, higher highs off the low. Trying to get back up to even for the day. Get back to Friday's close. Bitcoin is just crazy. Bitcoin's looking good, eh? Bitcoin off the low. Bitcoin. Threw me off there for a second. I forget that this trades 24 hours. 2 o'clock in the morning is this turned. Bitcoin. Yeah, that's looking really good. Let's see what Riot looks like. Riot's a fairly inexpensive way to play this. Riot.
Berkshire Hathaway posting its last quarterly earnings report under Warren Buffett as CEO. Operating earnings fell 30% year on year, stock down almost 5%. And then clean energy supplier AES at the bottom of the S&P, down 17%.
Riot. I have some 25. The 25 call. It's out of the money. I've had that for a while. Riot on the last run up. Riot. Apple trying to get back above these levels. Apple. Okay, number one stock on the NASDAQ 100, MSTR. This looks like it's going to come out of a base, MSTR.
York State will look at the impact on inflation and on stocks. By the way, don't miss Jamie Dimon, JP Morgan's chief, live from the company's annual Global Leveraged Finance Conference. That's coming up at 1:40 p.m. Eastern Time on the exchange. We're back in a minute.
Okay, futures a little bounce there, so shorts covered.
VANL. SKYQ.
No follow through. S&P.
GBR. STAK.
Let's see what junk bonds are doing. Junk bonds. Oh, junk bonds got clocked. Whoa. All right, so these people are definitely out. They're on the sidelines for now. Junk bonds, high yield corporate. Below the 50-day. Okay. Junk and high yield.
STAK. GBR.
Okay, so biotechs, that got a bounce on Friday, but back down. Let's see, IBB. No. Healthcare did catch a bounce on Friday, inside day. Retail, no. XLY, consumer discretionary, below the 50-day. Materials, XLB, hanging out. Communications had a big pop on Friday. Gave it all back. Now we're starting to bounce back into 50% into Friday's price action. Okay, communications. Okay, can we get back there? Looks like they're buying. Netflix.
MSTU.
STAK.
MSTX.
Microsoft looking good. Microsoft about to go again. All right, let's keep an eye on Microsoft for a minute.
VANL.
Tesla's also going. Tesla. Microsoft, Tesla, Amazon. He's looking pretty good. Tesla. Apple. Nvidia bouncing there. Meta's still pushing. Meta. Okay, Meta. I'm going to add to Meta FBL maybe if that keeps going. If it gets above the 50-day, I would definitely be interested. Meta.
SKYQ.
Meta. Bitcoin. Wow. Expected a move over the last couple of weeks. Didn't happen. Now we get the move on a day where everybody else is like either sidelined or getting chopped up, not paying attention to Bitcoin. Bitcoin's moving here. That's a risk on signal, despite the fact that junk bonds are risk off at the moment. So we have conflicting signals. Let's see what breadth looks like. Breadth should be pretty crappy, I would think.
Carl, I think that wars historically have been inflationary to various extents, right? I mean, we could argue how much inflation there's going to be. I think it's
And CNBC's tiresome. Why don't they focus on what's working in the markets? I mean, at least Schwab is doing that. Okay, Microsoft. Okay, so breadth. I was just looking at breadth. Okay, not the best at the moment. Let's look at New York. Oh, by the way, RSP, CT. RSP, equal weight index is hanging in there. It's not below the 21-day. So with the New York FANGs bouncing, that's a good sign. S&P equal weight trending, almost a straight line on that 21-day, the orange line. Breadth is off, so it's fewer stocks participating, but we do have the New York FANGs turning up, so that's good. That's good.
Post last week's earnings, which again caused a couple of days of decline in the name. So I think this is an interesting
area, especially when it comes down to, as you mentioned, the investments they're making in the optical electronic space. Lumentum is higher, laser is higher. Applied AAOI is another one of these names in that space.
Bitcoin still going. S&P 500.
That are moving higher based on these catalysts for Nvidia, but I think Nvidia is moving higher just based on the appetite to purchase it, considering it sold off quite aggressively Thursday, Friday of last week. There's also an element, I think, of defense and semiconductors and AI, and that's why I brought up Palantir as well, which is actually trading quite well today in the context of the technology stack.
S&P.
And the Russell just looks like it's popped its head in the sunshine right now as well. So I suppose that's an encouraging sign. George, always appreciate
Bitcoin still going.
Checking in on how
CoreWeave rising. Starting to base down here, CoreWeave. I rolled that out to April. Same strikes, 80, 75 put.
Stocks in Abu Dhabi and Dubai will be offline again tomorrow as officials monitor the developments in the Gulf. The Israel stock market, though, rallied to a record following the events over the weekend. Stocks out in Asia trading mostly lower on the session. Airline stocks like Singapore Airlines and Qantas falling as traders weigh travel disruptions and the impact of those higher oil prices. Energy stocks are rising across the region. Australia's Woodside and China's CNOOC rallying, helping those markets offset losses. Defense stocks in Japan also rallied. European stocks continue to trade sharply lower today. The FTSE, the DAX, the CAC and the IBEX are falling over 2%, although the FTSE's off the session's lows now. Oil and defense there also trading to the upside. BP and Shell both higher. Airline and travel trading to the downside. In currency markets, the Swiss franc and the yen both gaining from safe haven demand off the back of the initial attacks, although the Japanese
CoreWeave rising. All right, top 10 on the NASDAQ 100. MicroStrategy, Palantir. Let's take a look at Palantir. Palantir. Okay, big gap up on Palantir. I think, David, you had last week's calls, right? Palantir.
Or even retiring. You can count on Schwab for market insights, live support, powerful trading.
Palantir, gap and go.
400 branches, all at your service, all so you can invest.
Palantir, gap and go.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst. Next on investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand.
First trading day of the month. You would think some money would be put to work. Let's go take a look again at what's actually moving. Why don't we? Palantir, it's up 6%. Coinbase off the low. That's up almost 6%. Axon, we identified Axon last week. That was very active. Gapped up from 445 up to 500. Continues this morning. CF Industries, fertilizers, Raytheon, Northrop Grumman, Corning. We also mentioned that early last week before. Apache, APC, all of these headed higher. So we've got a nice mix of stocks that are moving on the S&P. Let's look at the Dow. Dow, Nvidia, Microsoft, those looking good. Chevron, I did sell some Chevron. Honeywell, Goldman Sachs. The banks got shellacked last week. We need a bounce there. Travelers Insurance, Caterpillar up 0.1%. Walmart trying to follow through. That's on the watch list as well. Boeing. United Health. Okay, I'll keep an eye on the S&P. Palantir looking good. Palantir, big gap up on Palantir. So nice base. Look at the base over here on the left. All right, you can see right here, accumulation, institutions. Doesn't look like they're going to leave it down here very long. You got the ceiling overhead lines up with like just above the 50 and the 200-day right there. The ceiling starts to grow. Where's it going to be? Where there will be more resistance overhead. Right now, there's not a lot of resistance. So if you're buying Palantir, you're probably going to get a nice follow through. Already have options on this one. Been off. Just sitting here waiting for it to do something. Palantir. Yeah, Palantir is doing well. Got March 20 calls.
Through this holiday sales, and I think that's going to show itself this quarter as
challenges, as you point out. So in that execution,
Palantir.
I was wondering what signs of progress we should be looking out for, particularly on the earnings call.
Okay.
yeah, I think what you
Baker Hughes bouncing. Let's see, Chevron. Chevron bouncing. Okay, Palantir. Let me just put Palantir here. Palantir.
to buy all kinds of goods. You know, they're already
Okay, nice move on Palantir. Palantir looking good.
change isn't going to change in the near term. So it really
Palantir grinding higher. Don't hear them talking much about Palantir right now, so people not paying attention to it. It's at the high of the day. Palantir grinding. I already have a position. I'm not going to do anything today, but looking really good. Palantir, thank you very much.
So we want to see them shift away from that. So it's really the product mix for us that's going to make a difference, because those are obviously the higher margin products. Like I said, those are more loyal consumers. So that's the most important thing that we're looking at.
BITX. That's another way to play Bitcoin. BITX. I have a decent sized position in BITX. Looking for this to turn. Continue. We've been looking for this to happen for the last couple of weeks. We're finally getting a bid in Bitcoin off the low. People wrote off Bitcoin for the most part. Palantir is pushing a bit higher now. Palantir. He's talking Target. Let's take a look at Target. Target. Yeah, it's been trending. Target, Walmart. Looking for Walmart to take out 130 this week, maybe. RSI is rising. MACD stochastics turning. Volume is okay. Let's see. TJ Maxx. TJ. Love TJ Maxx. TJ. Inside day. TJ Maxx. Ross stores. 5 below. Okay. SPY. Still holding this low. I just don't trust it. It just feels like this is going to lose it. So if you're like me, you think you need protection on the downside. I have put flies 66, 65, 6400 on the put flies. Okay, so they're running about $300 average. Okay, so this is what I've been looking at for the last few weeks. Because we've been just like banging along, we weren't able to get above the 50-day for more than a couple of days before rejecting again. So we're in the lower half of this big range, down 3% as of this morning low. But I've been trading this 66, 65, 6400. They were about $300 per contract. Only have 5 of those, so. But it was a hedge. Also, I had some March 20 calls, and I have some March 20, 30 spreads that I want to roll out. Okay, on VIX. VIX. Okay, 2030s. I might take some profits there. If we get another spike, I'll hold on to them for now. That's a hedge. It's not a trade. All right, S&P rolling over now.
So I think there are things that are specific to Best Buy on the kind of product innovation front that can overcome the memory challenges.
Adam Coons, always appreciated.
Palantir still grinding higher. Palantir.
Winthrop Capital Management. Let's trade it now with Tom White, host of Fast Market. That is a target. Just talk us through an example trade here. As Adam pointed out, do expect the new CEO to perhaps undersell, over deliver. Let's see. Talk us through the approach, Tom.
Well, yeah, I mean, you look at the rebound that we've seen so far this year. It had been in a 3-year, falling knife type of scenario as far as the price action goes, but up about 16% so far in 2026. I'm not sure if everything is going to be fixed. This is going to be the new CEO's first earnings event here. So I looked at a strategy. If you think maybe it pulls back a little bit.
Robinhood. Did that get a move? Robinhood. Okay, coming off the low. Still basing down here, Robinhood. Okay, Robinhood still basing.
Options that expired in about 18 days. And I bought that at the money 113 strike put. And then against that, in the near term March 6th weekly options that expire in just 4 days, I'm going to sell the 105 strike put. So a bearish $8 wide put diagonal to the downside. You're going to pay roughly about,
Okay.
around there. It's probably trading closer to 360 now because the stock has continued to move higher with the market.
There goes Palantir going. Palantir is going.
That 105 strike over the next 2.5 weeks for this trade to work out. Anything below about 111.
Palantir is going here. PLTR. Okay, institutions were active last week. Palantir.
About a 60% implied volatility on aggregate in that March 20th to 113 put you're buying, and selling about 100% implied volatility on aggregate in that 105 strike put that you're selling in the March 6th weekly option. So that dispersion really lowers the entry point price, but this is a strategy that takes advantage of a pullback in volatility levels.
Palantir on the move, folks. There goes Palantir.
We are waiting for a little bit more execution on that turnaround strategy. Any signs of progress on this name across the retail space? Tom, really appreciate it.
Gap and go on Palantir. While people not paying attention to it, focused on other things. Okay, is it above? I didn't check, but I gotta believe it's above the call wall. Palantir. Okay, Sam Bardis from Australia. Okay.
It's smooth. It's perfect. Meet the Butterfly Kiss Pro by Skull Shaver. It's built to give you the best. Hands, legs, underarms, shave it all. Anytime, anywhere. No ouch, no oops. Just 2 minutes and done. Say goodbye to cuts, irritation, or missed spots. Use it wet, dry, with or without cream. 60 minutes of cordless use, precision, speed, and safety all at once. Shop now at skullshaver.com.
Palantir on the move. Mm-hmm. Mm-hmm.
Unconfirmed reports are coming in on. He's already playing the next level.
Oh, God, it's stupid.
IONX.
PLO. Valero. VLO. Big gap up. Buyers at the low of the day. Valero. I just sold a little bit of Valero into strength. I've had this since the breakout several weeks ago over here, Valero. End of January into February, this broke higher. Consolidated right after that. Kind of just sitting here waiting for a pop like this to take some profits. Probably going to keep going. So, yeah, Valero.
You're looking at a live shot of the White House this morning, where we are expecting comments from the president on Iran as he awards the Medal of Honor to 3 U.S. Army soldiers this hour. We'll bring you there live when it happens.
We'll also start with the latest on Iran. Defense Secretary Pete Hegseth saying this morning the U.S. will not be pulled into a, quote, endless war like Iraq. The chairman of the Joint Chiefs of Staff, General Dan Kane, adding that the administration expects more casualties.
Valero, ABCD pattern, Valero.
President Trump saying, quote, we haven't even started hitting them hard. The big wave hasn't even happened. The big one is coming soon.
Also watching the impact on the energy markets today, and for that we're joined by Brian Sullivan back at HQ. As we said earlier this morning, Brian, LNG is a very big story, especially for Europe.
Yeah, LNG is a big story. Oil's a big story. Chemicals and fertilizers are a big story. Carl and Sarah, and I know we're waiting for the president as well, so I'm going to get moving here. Here are some of the top stocks that are moving. I'm going to kind of blast through them and talk about each one because they're different. These are all sort of energy-related names. Number one, you got natural gas up. Oil's up 6%. But by the way, it's not up 30%. It's not up 20%. Some of the worst predictions simply did not come true. Natural gas, big story there. But quickly, let's look at the biggest movers. And the number one biggest mover right now is a natural gas and LNG-related stock, Venture Global. They had their earnings as well, but guess what? Qatar Energy being offline, at least right now, maybe tomorrow, we don't know how long, is moving all the natural gas and natural gas complex stocks. Venture Global was heavily shorted, to be fair, so got some covering here. It's up 22%. Cheniere, another company that exports natural gas, in fact, celebrating their 5,000th cargo later on this year. Cheniere is also up. CF Industries, not getting a lot of attention, guys. Oil and gas getting all the play. But you know what also moves through the Persian Gulf and Strait of Hormuz? Chemical fertilizers, ureas, phosphates, nitrates, etc. A lot of them are made in that region. CF, along with Mosaic, MOS, one of the bigger makers of fertilizers here in the United States. I actually trade this stuff. Some people say I still do. Insert joke here. Matador and Synovus, those are also on the move, sort of mid-cap oil and gas companies. Conoco, ExxonMobil, and some of the other larger caps are on the move. Cord, another mid-cap oil stock. And then Golar. Okay, who is Golar? Golar
LNG. Golar LNG. Yeah, we know who Brian Sullivan. I like Brian. He used to be over at Bloomberg back in the day. Got to be 20 years ago. Brian Sullivan. He's a good guy. Good Irishman.
If you're going to ship LNG, you're going to pay more for it. The insurers, they're going to take their cut, guys. But the ship owners, not just for LNG, but also oil, freight, everything else, they're going to take their cut. So a wide swath of movers that are all moving today on the back of what you guys just talked about.
And what do we know about whether ships can pass through the Strait of Hormuz, right? That was the big worry, is that it just
Oh, boy.
global energy production and shipping going through that key area, and whether Iran has the ability to close it and will do that.
Well, you asked the exact right question, Sarah, and I would expect nothing less. That is a live map from marinetraffic.com by Kipler of all the ships in the Strait of Hormuz. Red is a liquid tanker, oil, natural gas. Green is a freight ship. Blue, other. There's also a couple of cruise ships that are in there, by the way. I guess if you're going to be stuck, you might as well be on a cruise ship. And you see a couple of those blue and green ships at the top starting to move through. The oil and gas markets and chemical markets and fertilizers, they're going to move based on how that graphic looks. And if that live map begins to show more ships going through that narrow stretch at the top, I would expect oil and gas to come down a bit. But if that goes on, meaning very little movement, everybody kind of at anchor, we'll see what happens because they can't get insurance, or if they can, Sarah, it's just too expensive.
Okay, markets are doing its thing.
If that goes on,
Confusing most people.
probably okay. It goes on for more than 7
Palant
days.
here looks good.
The president just saying we haven't even really begun to fight, or whatever Horatio Nelson sort of quote there. Then we're going to have a very different story. And that's when those predictions of oil 80, 90, and maybe up those could start to come true. We have to start to see some traffic, oil and gas, through that Strait of Hormuz, and soon. Because by the way, guys, too, the oil is still coming out of the ground. It has to go somewhere. You run out of storage. Eventually, you turn off that tap, or you put it on a ship. You hope for a U.S. naval armada, some sort of escort convoy, whatever, and you go through.
RCUS.
Yeah, that's why we're watching both production and the choke points, as we said earlier, Brian. By the way, we should mention we got a production hike out of OPEC in the midst of all of this, of a couple 100,000 barrels a day over the weekend, although it's just a fraction of what they've already removed.
Yeah, they're still pulling off about 1.65 million
Oh,
barrels.
what's Netflix doing?
Pre-COVID, Carl.
Netflix hanging on to the highs. Same with NVIDIA. There goes Meta. Meta's on the move. So if you're trading Meta, I'm looking forward to get above the 50-day right here. Okay, once it gets above the 50-day, I'll add to FBL. FBL is the 2 times Meta shares. Okay, I have FBL Granite shares, 2 times long Meta. So that's what I'm looking to do on Meta. Okay, Meta looks good. Okay, Meta looks good. Nice solid base. Looking for it to pop through this area. You can see the, whoops, you can see the Kirby over here. Once it gets above the 50-day and into this area overhead on the left, you can see that histogram. Volume by price. That's where prices, that's where most of the action took place in the past. It's a lagging indicator. It just tells you what happened in the past. Doesn't mean people are still here, but there is memory. So once we get above this area, anyone that wanted to get out will probably be gone, and we can get Meta to start trending higher. There goes the S&P. Futures pushing higher. Apple popping up. Apple's doing really well. So they're active on Apple. So it seems Apple trying to get back above the 50-day. Lost it on Friday. What's Riot doing? Riot, very nice. Almost a bullish engulfing candle on Riot. Bitcoin.
What do you expect to be the big risk around energy this time?
Well, I actually did my PhD during the second oil price crisis, all about OPEC, oil surpluses. And
I figured you were an expert on it. That's why I went there.
So one of the few things I learned from that PhD is you've got to be very careful jumping to a conclusion. I still have a stack of research that showed all sorts of gurus at the time saying how oil prices going $100 a barrel and higher. And actually, before I finished my PhD, and then for the next 20 years, they went down. And, you know, I've lived through my professional time lots of various, you know, versions of this before. I remember actually flying into Kuwait the day that Iraq actually bombed them. And, of course...
All right, goes futures. Futures on the move. Looking good.
I kind of reflect on...
All right, goes Apple.
Pretty dramatically. So I think Brian, your colleague, sort of got to the crux of it, but I think there's a bit more as this day goes on. Obviously, the scale of choking at the Straits of Hormuz is obviously really important, but as evidenced by the relative price of nat gas to oil, the fact that Qatar's LNG supply appears to be off-grid in itself is why we've got those price movements, but it's a sign that the Iranians are not sort of being limited by anyone they can lash out at. And so who knows what they're going to do next while they've still got some ammunition to fire. And so I think it is very, very uncertain just in the next few days. And like many other people, especially outside the US, I suspect, you know, I'm trying to fathom out whether Washington and Trump and his colleagues have actually got some coherent big picture strategy here. And my God,
What a dumbass thing to say. You think? Where did they find this guy?
compared to the Iranian attacks back then. Further their agenda.
Oh, that is just the dumbest thing I heard somebody say in a while. You'd be interested to see if Trump actually had a plan Oh.
Iran. So I think across the board, the market starts to look at these things and say, you know, if we could just be a little patient right now.
Supposedly the Saudis, UAE, and the Dubai and that area. I think they had like a video call last night. Was it last night or this morning? Whatever. Anybody know? They're not happy with their countries getting attacked, so they're actively doing their thing. All right, I'll stop talking about that. Futures are moving higher. That's what I want to be focused on. I want to be focused on the markets. I apologize. Futures turning back up. Okay. Easy to get sucked into this news. There goes Apple. Apple's on the move. Apple going.
You also have energy has been one of the leading sectors, and you also have the value play. So these short-term events, I think.
Oh boy.
Buying opportunities, and if you've got the stomach to take advantage of them, there's a pretty good opportunity that is possible. But again, nothing is guaranteed. What's happening in Iran right now, if this were to become a protracted situation,
If
and could cause bigger price changes with oil pushing the price higher, that could hurt the consumer a little bit, and so all bets could be off. But I do.
Okay, there goes Palantir. Palantir is still pushing the high of the day.
And another place opportunity is presenting itself here, and I saw it in the notes that you sent over before the events of the weekend. International stocks continuing to outperform U.S. equities here. You know, what do you think is driving that rotation into international? And also, do the events of this weekend change your outlook at all for the international stocks?
No, they really don't. I think what we're looking at right now with the international markets is really for about 15 years, they have underperformed the U.S. markets. My
Apple,
feeling, I don't think we're going to see the U.S.
Meta. Man, this is not what I anticipated. When I saw the markets down 175 handles at one point last night, this early morning, I did not expect this kind of action from the New York Fangs, but it makes sense. It makes sense from the point of view as it already pulled back. Many of them are bouncing at the 200-day. Okay, so this is looking pretty good. Not what I anticipated.
And needing that time for us to see how that's going to shake out. But Rick, we appreciate you joining us this morning for that insight there. Rick Gardner, Chief Investment Officer at RGA Investments. And we've got plenty more for you on Trading 360. Stay with us. We've got the big three coming your way next. 3 stocks, 3 charts, and 3 trades. Kevin Green will be taking us through the technicals this morning, and Tammy Marshall will join us for her picks. Rocket Lab, Monster Beverage, and Walmart. That's next on Trading 360 on Schwab Network. Jim O'Neill, always valuable to talk through.
Yeah, this looks good.
You're welcome. Have a good one.
Futures at the high.
Yeah, you too. All of us.
When we come back, the former lead negotiator on the 2015 Iran nuclear deal, Wendy Sherman, will break down the latest on the fighting in the Middle East and potential endgames.
We'll see what hedge flows look like now. Hedge flows. Okay, so we got this level overhead. 6,900. I wish it was 9,900. 6,900.
the moving
Sorry about
averages
that.
on
Didn't
the side of
realize
the
you were
bears
on
are holding
mute.
up above the 200 simple, but just be cautious out there.
All right, so let's move into your first trade then. Your first pick for the big three today is Rocket Lab. This is not a new one for us in the big three. You're not the only person who likes this one. Pretty much flat on the year, in positive territory, but did just report a record annual revenue. So walk us through this one.
Rocket Labs.
Yeah, Rocket Lab has defined Fibonacci risk of 60 to 65. It's a pretty big cluster that I have on my chart. There again, we do have a few of the moving averages on the side of the bears, but we're still holding above that 200 simple. So I can still make a case for the bulls here. And as long as your risk is defined, you can keep those losses minimal in case we do turn around and continue to move down. But just remember that Rocket Lab did just have great earnings. It did pull back some. Because of the expected delay of the rocket launch.
Robinhood.
I'm still looking to get bullish on Rocket Lab. I've been bullish for a very long time.
Robinhood. Nice bounce on Robinhood's part today.
Position. I have a simple call debit spread for you for the 17th of April. We have a 20-point expected move, which gets us to about $90. So we'll use the 17th of April. And it's a 75 to 90 spread, which cost about $4. So you're risking 400 to make a max profit of 1,100.
All right, so KG, as we take a look at the technicals for Rocket Lab, in the last 52 weeks, up almost 250%, but year to date, not quite performing as well here. What are you seeing in the technical setup?
Meta just off the high. Apple. Nice flag. Futures. So supposedly, thousands of Iranian officials are calling the United States requesting immunity. Yeah, okay.
Back earlier this year, and now it is kind of pulling back here a tad bit, but some buyers have actually stepped in at that $65 level. So you kind of have a situation where we are testing the 20-day moving average to the upside right now. Next area of resistance is $77. But if this is the start of the base and potential breakout once again to new highs, you can make the case that it could go back and retest that 99, or let's say that $100 level. MACD is kind of flattening out as well, maybe potentially setting up for a bullish cross with 12 EMA above the 26 EMA, and RSI is still making higher lows. So you can get a little bit confident with this name. If it breaks down further from here, you're looking at the 200-day moving average at $53.14 as your major next area of support.
All right, and let's take a look now at your next pick here. We're talking about Monster Beverage here. Having a bit of a down day today, actually, down almost 3.5%, but performing well on the year, up almost 8%. Take us through this one, Tammy.
Yes, Monster Energy Drink is doing great. It has all the moving averages on the side of the bulls. Here again, I love my Fibonacci defined risk. That zone is 80 to 82. Long term, it has just been really a great chart with a lot of momentum. We just had earnings, strong quarter, but not necessarily great. However, a little light on profit. Lots of upgrades are centered around the $90 to $100 price targets. Let's give it time to work. I have a call debit spread for the 17th of April. We'll give it an expected move about about 6 points, so that'll get us to about $90. You risk. Let's see.
All right, futures. We're coming in. Wow, it's almost 11:30 already. Wow. Almost 2 hours into the trading day. Apple. Just watching Apple at the moment. Apple.
All right, yeah. It depends on your comfort level and the amount you want to spend, but can certainly always double, triple, quadruple, whatever you want, any of these suggestions. Kevin, as we take a look, though, at the technicals here, are you seeing the possibility for this momentum to continue?
Yeah, I mean, this is actually probably one of the more simple charts that we've seen in the market in a very long time. If you actually look at it around this time last year, we did see a consolidated or a defined range to the upside, looking at around that $60 level as your major area of support, up to around that $68, $69.
Okay, here we go. Here goes Apple. Starting to go. LETSGO, Apple. Microsoft. All right, they keep buying. This looks good. First trading day of the month. Looks like Apple's getting looks like Microsoft's getting a decent amount of flow.
trend line. Once again, another area of support. And you made the case that once again, it's going to maintain the trend and maybe go back to the upside, and you're looking at around the 89 to around that $90 level as your next major area.
Bitcoin's still driving higher. Bitcoin.
50-day moving average is going to be the first one, and then the next area of support would be around $66. So higher highs, higher lows, well-defined trend to the upside. This one is you trade the trend until it actually breaks, and it has not broken yet.
Yeah, George Tillis' favorite. Don't fight the trend. He loves to say that whenever I do example trades with him. And then your last pick here, Tammy, is Walmart. We're about to come into a bunch of retail earnings this week, but take us through Walmart year to date, performing well, outperforming the markets more broadly, of course, on the year in the last 52 weeks, also outperforming. Walk us through this one.
Yeah, absolutely. I wanted to give you some diversification, away from tech. So we just had earnings, a strong fourth quarter earnings, and they raised guidance. Long term, the chart looks great. There again, I'm a bull until I'm not, right? When on some of these stocks. So it looks very strong, pulled back to the 20th SMA. I've got a simple call butterfly for you. We'll go to the 17th of April to give it time to work. We have a 10-point expected move, which gets us to around $90. So that call butterfly is targeting about 140. We'll use 130, 140, 150, which cost about $2 per contract. So one contract risks $200 to make a max profit of about $4,000 if we pin. If we don't pin, you could reasonably get up to about half of that, $1,000 or $2,000. So that is a great trade on Walmart there.
All right. So with that trade on Walmart, taking a look at the technical setup, KG, what are you seeing?
Once again, higher highs, higher lows, well-defined trend. There is a little bit of breakage when you're looking at the oscillators, though. So if we're looking at the one-year daily chart, you have seen a scenario where the stock really does find a pretty decent range to the upside, and that's exactly what we are seeing right now. Now, the trajectory for Walmart is a little bit out of character, so we have to be mindful of that because it is a staple. But if we continue to have this rotation trade taking place, the inflows on the staples are obviously going to flow into Walmart. Right now, it's testing that 20-day moving average. You'd like to leverage that as an area of resistance. Right now, area of support. Right now, it's acting as an area of resistance. So let's just be mindful of that. If we do break lower, you're looking at $120. That's going to be the next major area of support, that 50-day moving average. And anything below that, looking at $106 at 200-day. Here's where you get a little bit concerned. You are starting to see a bullish or bearish divergence on the RSI, where it is making lower highs as the stock is relatively making higher highs. And so this is just showing that price momentum is waning for the time being. The 12 EMA is also below the 26 EMA on the MACD, but it's trying to hinge higher here. Cautiously optimistic that this range does hold, but once again, if we break down below, let's say that 120 level, it probably could get fairly aggressive to the downside for Walmart.
All right, right now Walmart trading at $127.91. Want to thank you both for being with us for the Big Three today. Tammy Marshall, Analyst at Elliott Wave Trader, or AKA the Fibonacci Princess, and Kevin Green for being with us to break down the technicals today. Coming up next, we are going to spotlight the conflict in Iran and how it is impacting markets. Stay with us.
Man. Sometimes, you could have done better.
All right, we're just hanging out at our high. Apple.
Level up and invest smarter with Schwab.
Morning movers, be the first to find
Don't get complacent. Watch. Keep an eye on the markets. Still not convinced this is over with.
Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Bitcoin having a good day. Bitcoin. Wow, that's a pretty big move. That's really nice. USAR. All right, critical metals. What are we doing there? USAR. Let's go take a look at some of these. USAR. Okay, nice bounce. Okay, so a higher low on USAR. Higher low. Okay, that looks good. Higher low. Let's look at the 60-minute. Okay, once above the 60-minute, we want to start to see this make higher highs and higher lows. Then we can use the 20 EMA 60-minute, the green line, for a trailing stop. If that continues, always call this caramel. Critical Metals, and MP Materials. MP looking good. MP on the move.
Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern.
MP Materials on the move. Okay, Microsoft, a little profit taking. All right, so the future's pulling back now. Don't get so enamored with your positions you don't pay attention to the future. The futures are pulling back pretty aggressively right now. S&P pulling back aggressively.
Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant, I probably met 20 years ago. Jim's really been there to answer any questions I ever had.
Okay, puts are being bid at the moment. Puts on the futures on S&P. SP Cash puts are bid at the moment.
I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight the market response to the U.S. and Israel launching a joint attack on Iran. Joining us now, Brian Jacobson, Chief Economist at Annex Wealth Management. Brian, great to have you with us this morning. You know, seeing a mixed reaction, actually not mixed anymore. Now the Russell is low on the day, so an entirely in the red reaction to the events of this weekend. You know, I would love to just start with your thoughts on the response that we're seeing, and if it is of the size that you expected when you saw the headlines coming across this weekend.
S&P.
Yeah, thanks for having me. I think it would have been a little different if the markets were open on Saturday, right? You probably would have seen a bigger response, but it did give us some time to digest the news, see what
Yeah, I agree with that.
there was. And I think that really what we're seeing here, you know, if you look at oil prices going up and then also copper prices going down, to me, this is a classic, almost like an inflation and growth jolt. It's almost like a punch, but not a knockout. And I think that's what the market is really pricing in here, because we are seeing with the 10-year treasury yield moving higher, but it's mostly because of shorter
MP Materials, nice move on MP.
and the possible cost of the deficit spending associated with, you know, replenishing all the missiles and the defense buildup. So I think that what we're seeing here makes a lot of sense, but it is more one of those things.
OCUL.
Oh, I think we may have lost Brian there. We'll give him a moment to take a look at that connection and see if we can get him back. But let's take a look at where the oil prices stand right now, as he was just mentioning them. Oil had gone up. Crude is above 70, 88 a barrel. That's come off some of those highs. We did see a jump as of early this morning. If we're taking a look at Brent, we are up close to 7%. Still there, up 6.8% at 77.85 a barrel this morning on these increased geopolitical risk concerns regarding the ongoing situation in Iran. We will be back right after a short break.
Okay, now we just rolled over. Puts just rolled over. Wow, this is a pretty choppy market.
Stay connected to the markets with Schwab Network.
S&P drops and then it pops back up. Volume coming in. Watch your MACD. Watch your MACD here.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more.
Bitcoin at the high of the day.
Directly to an education coach. It's interactive learning at its
Chevron.
Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to to Trading 360. I'm Marley Caden. Joining us again, Brian Jacobson, Chief Economist at Annex Wealth Management. Now, Brian, let's start where we left off here. We're talking about oil, talking about the reaction that we're seeing in the markets. You said not totally unexpected, with some time to digest some of the headlines that we got Saturday and yesterday. But you said something really profound.
Okay, now we roll back over. Wow. This is quite choppy. Quite choppy.
Third-order consequences can play out over longer horizons and in unpredictable ways. Now, we are hearing from the administration now that the potential 4-week timeline may no longer be in play here. This could be a longer-dated issue here now in this ongoing situation with Iran. What are your expectations of some of these unpredictable ways that we might see the impact?
And that's around where we are right now in the opening. And typically you do see oil prices higher,
S&P,
higher. Like this is
very choppy. Watching that MACD, see if the momentum starts to shift. Looking at Trace, making higher highs, higher lows, but it does look like a sine wave, and we got resistance just overhead 6,900. I don't think we're going to get through that level today.
Time now for a news update. Pippa Stevens has that for us. Morning, Pippa. Good morning, Sarah. French President Emmanuel Macron announced this morning that France will increase its number of nuclear warheads in what would be the first addition to its nuclear arsenal since at least 1992. France is the only nuclear power in the European Union, and Macron's speech comes as several EU leaders have voiced concern about U.S. comments to defend Europe under the so-called nuclear umbrella. Venezuelan opposition leader and Nobel Peace Prize winner Maria Machado says she will return to her home country in the coming weeks and that elections will be held. But Secretary of State
Palantir, just off the high today, Palantir.
Phases of transition and has not said there could be elections there in the short term. And Live Nation, the concert company that owns Ticketmaster, in court today for an antitrust trial, accusing it of operating an illegal monopoly. The DOJ argues Live Nation has used its dominant market position to stifle competition and drive up ticket prices. Live Nation denies the accusations. Carl?
Pippa, thanks very much. Up next, we're live outside Anthropic's headquarters in San Francisco after the company was blacklisted Friday by the Pentagon. OpenAI now signing a deal with the DoD. Also comments.
Okay, now calls are getting a bid. Wow, very choppy. Very choppy, shaking people out.
Private credit concerns and how this global conflict is impacting investor sentiment. We'll be right back.
All right, we need to make a higher high. Hedge flows need to make a higher high. Let's go see what Hero says. All right, so they're selling puts, buying calls. Selling puts down below, that creates positive gamma. Okay. Let's see what Netflix is doing. Netflix. Okay, Netflix. Qs. Qs look okay. SPY. Looks like their put data. Looks like the puts data is having an issue. All right, so we're turning back up. S&P turning back up. Hope everyone's having a good morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, March the 2nd. All right.
AVXX.
EOSE.
AVXX.
S&P continues to climb. Looks like a big range. Looks like we could hit the top of this and get rejected. VWAP is just below. MACD's crossing, volume's picking up, so this looks like it could sustain it for a few.
Term dip in the market, and it gives you an opportunity to buy some things on sale. Before. Historically, it has been, typically if you go back again over back to 1941 and you look at the 25 geopolitical conflicts we had, typically the recovery on average is, within 2 to 3 months from the bottom. And so, and usually 6 months later, you're even higher. It can be a tactical buying opportunity, and I hope it is this time. I think the one thing, and I'm not a geopolitical analyst, but the fact that we did have something.
The Department of Defense now striking a deal with OpenAI to use its AI models. The company stepping in after the president ordered the government to stop using Anthropic, their main competitor. Our Deirdre Bosa is live outside of Anthropic's headquarters in San Francisco for today's Tech Check. Morning, Dee.
Hey, good morning, Carl. So there are fresh chalk messages of support out on the sidewalk here and in front of OpenAI headquarters. That is new because the story is still moving very quickly. Just in the last hour, Treasury Secretary Scott Bessent announced the department is terminating all use of Anthropic products, saying, quote, no private company will ever dictate the terms of our national security. So this is now spreading beyond the Pentagon. The administration is making an example of Anthropic across the federal government. Anthropic, for its part, says that it will challenge that supply chain designation in court. And yet, the backlash is going in the other direction here. Over the weekend, Anthropic's Claude app, it hit #1 spot on the App Store, dethroning ChatGPT for the first time ever. So OpenAI may have won the government, but Anthropic is winning the narratives with consumers and developers so far. But this is far from over because at its core, this is about who should decide how the most powerful military on earth uses AI, an unelected CEO in San Francisco or elected officials and the laws that they pass. Now, a source familiar with the negotiations tells me that the real deal breaker for Anthropic was the surveillance piece of this. The Pentagon wanted to use AI to analyze bulk data on Americans. The current system, it shows where you've been, but add in AI and that becomes a lot more powerful. It can predict theoretically where you are going. OpenAI's deal only restricts private data, not this kind of publicly available data. And all of this matters because now the template for every AI military deal and what comes after it. This is sort of set the precedent. And it could also be a playbook for the labs as models are increasingly becoming commoditized. Anthropic is essentially...
All right, we're about to break higher here. There goes the S&P.
Across town, guys, OpenAI...
Okay, here we go. S&P ripping now.
As well. They are being greeted by fresh messages on their sidewalks as well against the deal that Sam Altman signed over the weekend. And
Nice move on the S&P.
messages on the sidewalk there are directed towards OpenAI employees, asking them to use their voices and call out what's happening. And remember that nearly 100 of them signed a letter before the weekend backing Anthropic's position over their own company's deal. So how Altman responds to them may tell us a lot about what comes next.
Dee, it's one thing for the Pentagon to cancel your contract. It's another for
High tick alert plus 800.
High tick alert. High tick.
vendors. On Friday, critics called that a form of corporate murder and wondered if it would have
High tick alert.
on tech's willingness to do business with the government.
such an interesting debate right now, right? It's who makes this call? Is it the government or is it a private company CEO? And that is certainly the part that Anthropic is challenging, saying that they're going to challenge that supply chain designation in court. And it's very split right now. I mean, OpenAI, Sam Altman, he saw the opportunity to take this deal. It's a $200 million Pentagon deal. But like I said, Anthropic is kind of winning the narrative here because the fact that they're willing to walk away from it tells, corporate America in particular, that they have a great model that the Pentagon wants, but now they're replacing or trying to replace, and two, that they will walk away from things based on principles. And that could be powerful. We're seeing that it's powerful with consumers already. We'll see how this shapes up during the day, because I think the employee piece is going to be really interesting. We've seen this in tech before.
Okay, nice rip here, S&P. Let's see what Trace is saying. All right, okay, we made a higher high there.
As Claude goes to number 1 on the App Store. Dee, thank you very much, Deirdre Bosa. When we come back, JP Morgan's head of capital markets on AI disruption, the deal environment, private credit, plus how the fighting in the Middle East unpacks all of it. Stay with us.
Palantir is the top of the S&P 500 and also the top of the NASDAQ 100. Okay, Palantir. All right, nice little rip there on Palantir's part today. Just off the high of the day. Okay, looks like we're going to continue. S&P is pushing. We are about to go green on the day. Okay, flagging at the high. Can we go a bit more? Watching the futures here. Futures. Nice little move. All right, here we go. Popping now. We're popping. Futures popping. Looks good. Looking good. Okay, Palantir catching a bid. Palantir, there goes CoreWeave turning back up. What are the oil and gas stocks doing? They're catching a bid as well. Off the dip this morning. Futures continue to push higher. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Monday, March the 2nd. I got about 15 minutes to go for the lunch hour here on the East Coast. The best coast, the coast with the most. Let's see what we can do out of this. What we can get out of this. The futures are rising, so our calls are bid. Calls are bid.
High tick alert plus 800.
High tick alert. Calls are bid. All right, nice little rip there. S&P still going. Let's see if we can't get something out of this. S&P 6,900s. Looks like a lot of flow at 6,900. What are you saying, Money Magic? Anything? I'm sure you're watching. If you're not paying attention to Money Magic's levels in his channel, you're missing out. Let's see. There's quite a few calls traded today. All right, we're still going here. Still going. S&P still going. Nice rip. Now that looks a lot better. Still going. Future's still going. Looking good there. Nice. Okay, we're coming into lunch, so I would be taking some profits off into this rip. See if we can't go a little bit further. Farther. Okay, Bitcoin making new highs.
Green, now followed by the Russell got below 6,800, and if you'll recall, levels around 6780 are where we bottomed 3 or 4 times, really, going back to Thanksgiving of last year. Of course, a lot of this is the industrial.
Watch your MACD.
Which would include your.
Watch your MACD for entries and exits. Watch the volume. All right, so hedge flows looking good.
Nvidia is actually having a comeback after, again, really strong earnings, but maybe not the reaction that you would expect.
Wow, Nvidia is going gangbusters here. Nvidia, what do I have left in Nvidia? Okay, NVDX.
Netflix continues its positive momentum after abandoning the deal for Warner Brothers Discovery. So there are definitely some pockets of strength out there, and I keep mentioning the U.S. dollar because it is also notably stronger. It's up more than 1%. So for those wondering if it was still a safe haven, yes, it is still acting as a safe haven when things get tough. Gold also still higher in Bitcoin, having a little bounce. That's why Jim O'Neill was saying that maybe this is just like the positioning thing happening right now because everyone was piled against it for a few months.
Yeah. Bitcoin getting almost to 70K once again would be the highest, really going back to, say, the 10th of February. Moving names like Strategy, at one point the biggest gainer on the NDX. There's a look at the president and the White House as he's about to award the Medal of Honor to some U.S. soldiers, some of them posthumously, and we do expect him to make some comments on Iran. After really not giving much to the press last night, other than sort of a merry-go-round of phone calls to various reporters.
He's been speaking with reporters. He released that video, of course, late night when the attacks first started. But now military leaders are saying more forces are heading to the region. There is no word on how long this war could last. We have 4 U.S. service members confirmed killed in action as these operations now enter their 3rd day. So I think people are very eager to hear from the president in a live way. There are questions about
Nvidia's still going.
Is the end game here and how he will define a success and how he will convince the American public that this is the right time to do this right now. Let's listen.
Jeff, great. Wonderful job. Appreciate it. And thank everybody for being here, and please feel free to sit. So before we begin this important ceremony, and there's no ceremony that can be much more important than this, let me provide a brief update on Operation Epic Fury.
Cool name.
The United States military continues to carry out large-scale combat operations in Iran.
All right, watch these.
Grave threats posed to
Looking for higher high, higher low.
terrible terrorist regime. Following our obliteration of Iran's nuclear program in Operation Midnight Hammer a short while ago, we warned Iran not to make any
40 plus years. Wow, that's crazy.
because they weren't able to use the ones we so powerfully blew up. But they ignored those warnings and refused to cease their pursuit of nuclear weapons. In addition, the regime's conventional ballistic missile program was growing rapidly and dramatically, and this posed a very clear, colossal threat to America and
Clear and present danger.
overseas. The regime already had missiles capable of hitting Europe and our bases, both local and overseas, and would soon have had missiles capable of reaching our beautiful America. The purpose of this fast-growing missile program was to shield their nuclear weapon development and make it extraordinary.
NIMO is still flat.
Anyone to stop them from
NIMO is still flat. Spy.
by us, nuclear. We were the ones that were complaining. We were the ones that wanted it stopped. But everybody was behind us. They just didn't have the courage to say so. An Iranian regime armed with long-range missiles and nuclear weapons would be
All right, we're backing off now.
to the Middle East.
Snowflake rising. All the New York FANGs are near the highs of the day for the most part. Netflix is a little bit off, but most of these look pretty good.
It was very nearly under threat. I was very proud to have knocked out the Iran nuclear deal by President Barack Hussein Obama. That was a horrible, horrible, dangerous document. They would have had nuclear weapons 3 years ago, and they would have used them. But I'll not let that happen. For almost 47 years, this
Here.
has been attacking the United
Okay,
States.
so we know what he's going to say.
Every time you see
Okay,
someone,
he's pretty much saying the same thing. I'm going to switch channels here. Let's see if we can get some deals here. Let's see what's working still. Let's see what's working today. Having a good day. Palantir up 6.5%. Axon gapping up. We looked at this one last week. I thought it might go. I didn't take a position, I don't think. Let me just check here. I was talking about Axon, body cams, etc. No, I did not. Okay. So, but that did gap up last week, followed through today. Looking good. MPC, Marathon Petroleum. Okay, these all look good. Exxon, Chevron, all of these coming off the low, off the dips this morning. Profit taking, gapping up. APA, gap up and fade. S&P. Just got to keep an eye on the S&P. See if this higher low leads to a higher high. You can see Bollinger Bands coming together. So it looks like we might start to fade a bit and consolidate. MACD's flattening out, volume starting to taper off as well. All right. It's almost 12 o'clock on the East Coast. Almost 12 o'clock.
We're good at this. We've done this before. We've practiced this, and I think the Iranians would be wise to toss in the towel as soon as possible and get an agreement, because otherwise they do risk regime overthrow by their own populace.
General, since you retired, of course, you've advised companies, top leaders. To the leaders that watch this program, the leaders on our platform, the CEOs that I talk to, what should they be doing in uncertain geopolitical moments like this?
Well, I think you have to plan for some disruption of shipments in the region, travel in the region, and so forth. But we've got the electronics to do most of that by Zoom. I talked to people today in Dubai. Nobody's on the streets. Everybody's on Zoom. So a lot of business. The question marks are what happens in the long term? What about China? How does China get its oil if the Straits of Hormuz raids are usually closed? And what's the Chinese activity right now? There was a Chinese destroyer out there. So these are the sort of things that we're watching inside, and hopefully China will, and thus far they have stood by. Obviously, they want this over. Neither China nor Russia like to see American military power employed, but both have their own objectives, their own strategies, and right now their strategies are stand aside and let this play out.
And of course, Operation Epic Fury comes alongside this tussle between the Pentagon and Anthropic. General, from what you can tell, they represent a supply chain risk.
Okay, there goes Amazon. Amazon's on the move. Microsoft trying to break higher, so is NVIDIA. Tesla's at the high of the day. There goes Apple. All right, these looking pretty good. Market's looking pretty good. Consolidating Apple. Into the lunch hour, nothing to do at the moment. Apple.
Where we did exactly this kind of operation. We had 1,000 aircraft, 5 aircraft carriers at one point. We were completely encircling Serbia. So there was a lot of stuff going on, and it was mostly done manually. We've moved a long way in terms of automating this, and so I'm sure we're using every kind of neural networks and early AI system that we have on hand to make sure we deconflict the flight paths to time and get the ammunition and missile uploading correct on our aircraft. It's a really detailed planning process, and it needs detailed support.
General Clark, thank you for making time for me on this important day. Of course, thank you for your service to this country. I appreciate it.
Thank you.
Stern Hat Julian Hyman will keep you on the pulse of this important day for the market. Again,
There goes Amazon. Amazon's starting to go. Amazon. 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 Apple. Broadcom. Meta. Google starting. NVIDIA, Microsoft, NVIDIA. All right. New York Fangs look good.
It's quick, it's smooth, it's perfect. Meet the Butterfly Kiss Pro by Skull Shaver.
Well, pleasant surprise. I did not think the market's going to do what they're doing. I thought there was a shot at the 6,600 level if we lost, 6,700. But the way it's going right now, looking very strong. So it looks like they're buying the dip.
At AT&T, everyone deserves our best deal. Like the new Samsung Galaxy S26 Ultra for $0. New customers, existing customers, everyone. Reimagine your world with Galaxy AI. Make it pop. Make it art. Make it yours. New and existing customers can get the new Samsung Galaxy S26 Ultra for $0.
All right, looks good. New York Fang Index is doing well. Apple cruising higher. Apple, wow, Apple's very impressive. Okay, just looking at the New York Fang Index here. Okay, New York Fang. This does not look bearish. Stochastic, MACD, RSI, everything rising. What was that? What was that? Okay. Something that Josh mentioned, Josh Brown. I just took profits in. T10 looks like it's going to go. Is he still talking? I'm sure he is, but Schwab, what's Schwab talking about?
Yes. Now we're in the car together.
Okay, it's commercial.
That they've learned from that, right? He said this is not going to be a rock. We are not going to be in here indefinitely doing
Markets like that kind of talk.
But I think there are questions onto what the end game and end date, Eamon, might be. So is the president set to speak?
The media is so stupid. How the hell we know what date, what day it's going to end? It's just like it just started. Dummies. Speculation at its best. Just watching price action. I don't see anything worth. I don't see any reason to be concerned at the moment. Look at Microsoft. We've been looking for Microsoft to break out of the space for ages, and now we're starting to see some decent volume in there. Once Money Magic's levels update tomorrow, we're going to be able to see where the call walls and put walls are. Money Magic talking about levels during the day earlier. Flows. Netflix, I think you pointed out, right? Netflix. Okay. Thanks for all you do, Money Magic. Appreciate it. Very much appreciated.
All right, Carl, thank you very much. We, of course, begin with breaking news. Welcome to the halftime report. I'm Scott Wapner, front and center this hour. We are following the markets and the reaction to the conflict with Iran, trading the fallout from that ongoing military operation, which you just heard the president speaking about. The investment committee is here, of course. Joining me for the hour today, Joe Terranova, Stephanie Lake, Jim Lebenthal. Also with us for the full hour today is CNBC senior markets commentator and overtime co-anchor Mike Santoli. So we'll lean on his market expertise for the next 6
I like Santoli. I wish Santoli would take over this halftime report and Wapner just do his thing in the evening. It's just too annoying.
NASDAQ is now green, as is the Russell. So the Dow and the S&P obviously are well off their worst levels.
IWM, nice little rip on IWM, pushing back up. Need to get back above 266, 267.
And I truly believe that the market did a very efficient job in pricing in a premium over the last month for energy prices and for bonds, and for whatever reason,
certainly equities were discounted over the last month. So that puts you in a position today where what could be perceived as a significant geopolitical shock that acts as a catalyst for a precipitous decline in risk assets is not unfolding, and we're kind of just back to where we were last week, understanding where the opportunities potentially might exist in the marketplace. I also think it's interesting that it is the Mag 7 that once again are coming to the rescue on a day like today. It is Apple, it is Nvidia moving higher, it's Microsoft, it's Alphabet. So if there is ultimately an equity safe haven, those names once again prove themselves to be exactly that.
The commentary, Mike Santoya, I'll come to you here just to lean on you for a moment, seems to be anything from
Palantir.
the markets will react, geopolitical shock.
Palantir at the highs of the day. Palantir. Okay. IWM. Qs. Okay. S&P. Okay. Consolidating at the highs. VWAP way down here. All right. Watch this sneaky volume coming in. You can see the selling volume as we kind of leak from the high of the day. Leak some of these gains from the high of the day.
As Joe mentioned, we have been sort of clenching up in advance of this. You had a 21 VIX going into the weekend.
You look at the New York FANG components, that's telling you the markets could stay strong. Look at the Microsoft. Wow, Microsoft just very impressive. Microsoft. Okay, Microsoft. Mr. Softy coming off the low. Let's look at the 60-minute. Okay, once we start to get above the 60-minute, you can see it's pretty flat right now. The green line and the red line, that's the 20 EMA on the daily. Once this turns up like it did over here, hopefully we see an extension for weeks and months. The 20 EMA will be our trailing stop, much like it was on Chevron. Remember Chevron from January? January, after Maduro was taken out over the weekend, that Monday we gapped up. Okay, that Monday we gapped up, faded for a couple of days, got back above the 20 MA, and that's been a trailing stop ever since. That's what I'll be looking for on Microsoft, this exact same kind of action to a lesser degree, more or less degree. The 20 MA, nice trailing stop. One of the biggest issues that new traders, swing traders have is like, when should I take profits? And do you take profits off too soon only to see the stock just continue to go? Okay. Apple, back above the 20 EMA, not yet. Nvidia, back above the 20 EMA, not yet. Range bound. Tesla, not yet. So these have work to do. Amazon, trying to. Meta, Meta's back above the 20 EMA. Okay, Meta. So this is going to start heading higher. Get above the 50-day. That's going to see. We'll see some more follow through most likely. Palantir turning the corner. Whoops, what happened there? Palantir, PLTR. Palantir. Why is this doing this? Build a chart. Palantir. Palantir. Okay, this is what we're going to see on Microsoft and all the rest of these. Broadcom. Okay, Apple. Okay, S&P. S&P 500. Range bound S&P.
To me seems like a pretty good outcome.
Let's see what VIX looks like. VIX. Okay, futures look like they want to go again. Futures look like they want to go. Looks like they want to go. Futures. Are you annoyed? Are you annoyed, Missy? All you do is sleep, kitty cat. Love these kitty cats. Never been a kitty cat person, but man, they grow on you. They come lay on you, purr. They can sense when you're pissed off or whatever. Calm you down, right? And she's good luck too. This one's good luck. Whenever she comes in the room, markets tend to pop. Oh boy. Okay, so I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, the 2nd of March. First trading day of the month. A lot of window dressing perhaps to consider. So that's one of the things we want to consider. All the New York FANGs, for the most part, are bid. Microsoft coming off the low. Microsoft's been basing for the last few weeks, looking for Microsoft to get something going. IGV, India Golf Victor. IGV, India Golf Victor, the software ETF. And SXW, XSW, Xerox, Sierra, Whiskey, XSW. Okay, let's take a look at that XSW. The ETF, let's go to the daily over here. Okay, coming off the low, this is the software, iShares software. S&P, sorry. iShares is IGV. IGV. Okay, these look okay. Microsoft, part of that group. I don't know if Palantir. I think Palantir is part of IGV. Palantir coming off the low. Okay, there goes Palantir. You like that? You like when I pet you? You're so cute. Kitty cat, you're so cute. I don't do a whole lot this time of day anyway. So I'm looking for markets to perhaps give us some higher lows, ABCD patterns this time of day. Palantir is trying to take out the high today. Palantir, this looks really good actually. Palantir. I want to add to my position something further out, say May, June. I think May, June's probably a good area. This dip getting bought. Okay, we were down 175 points of the futures. We've come back to almost green on the day. We've touched that level a couple of times to get green. Netflix turning back up. Netflix. Nvidia's looking good. Microsoft, Apple, Amazon. Amazon trying to push a bit higher. So is Google. I think Brett's going to be on at 1 o'clock, I believe. Let me go over to Spot Gamma. I think he's going to be on at 1 today. Spot Gamma. Yeah, he'll be on with Matt Cashman today. That's going to be on YouTube. Okay.
It's simply too early to buy any dip until you get a sense of how long this really could last. Yeah, and I think that was premised on the idea.
Okay, Palantir. Palantir looking for more upside. A lot of people not even paying attention to Palantir, I would suggest. Okay, more stocks advancing now. We've got a limited amount of stocks advancing, so that's something to consider as well. It's only 191 stocks advancing. Of those 191, it looks like 10 of them are New York FANG components. They weigh 37% on the S&P. So if you're going to trade anything and you're thinking long, make sure you're checking out the equal weight index to see how it's doing. Okay, equal weight, removing the weight of those top 10 New York FANGs. It's hanging in there. It's in the middle of last week's range. Okay, if we look at the weekly, we're still above the 10 EMA. For the past 3 weeks, we're just kind of sitting here 4 weeks. Okay, S&P equal weight. Let's go see what that looks like. Actually, you know what? Let's look at breadth first. Breadth, small caps looks good, but big cap, mid cap, small caps look good. NASDAQ continues to move lower despite what we're seeing on the New York FANG. So not 100% on this yet. We still got a lot of bearish signals. Okay. Junk bonds got shellacked here. Junk bonds just gapped down. That's telling you these people are just got out of the way. Okay. They were already getting out of the way on Friday, but they definitely out of this trade for now. Junk bonds and high yield corporate. This is a risk on, risk off signal, currently risk off. Okay. Now, that's New Jersey. I don't think so. Let me listen to what Mr. Santoli has to say. He's good.
Energy. It's the same chart. Like they basically have had the same trajectory of move in the last, month or two. So I think that's why the other dynamic, it's hard to pull apart what the.
He reminds me of a friend of mine that went to Notre Dame. He looks so much like him, Art Margiana. Pretty funny. Okay, Microsoft's still going. There goes Apple. Meta high of the day.
So we are seeing a little bit of a growth scare, so it makes a lot of sense. I think
S&P equal weight. All right, number of stocks above the 20. Number of stocks above the 50. You can see this is fading, not turning yet. VIX. Big fade on VIX. Big fade on VIX. Starting to hold. I might buy some 20, 30 call spreads on VIX. Probably won't right now. This could drop further.
Private credit is still on the minds of many. I know you were talking about credit spreads. They had widened, and they're worrisome to some. They're being watched. There's no question about that. By the way, Jamie Dimon's coming up later this afternoon with Leslie Picker. I think it's at 1:40 p.m. You don't want to miss that because I know that she is going to ask Mr. Dimon about what is currently taking place in private credit. We'll get to that in a minute. What I want to get to, though, are the tactical sort of decisions that you're making and other investors may be thinking about and or making themselves today. You bought the Israel ETF again. Yes. So let's just discuss that for a moment. It's the EIS. Take me through that, something you had owned before. Now, why again now? Over the last several years, I've traded this, obviously, from the long side. I believe this is a moment where it is at an all-time high. It is up 5% today. I think you have to ignore that. I think you have to look at this on a secular basis and say, where is this going to be over the next 2 to 3 years? The composition of it is exactly the exposure that I believe right now works in the market. It is healthcare led by Teva Pharmaceuticals at 9% holding. There's some banks in there at a 15% holding. Then you get a little bit of exposure. And I lost my exposure to some of the cybersecurity names. You get exposure with
New York Fangs are still looking bid. They're still strong. Very green. Very green. Snowflake's kind of flattening out at the moment, but that's the only one. Netflix not following through yet at the moment. Netflix. Here's Netflix. Netflix kind of flat. 60-minute, 20 MA. Netflix. Way extended. So I wouldn't be surprised to see this pull back a little bit. 200 stocks advancing now. Okay, we're moving above the 200 threshold for the S&P 500. If we see this improve throughout the day, that would be really impressive. 1-to-1 up down volume, 1-to-1 up volume, 1-to-1 up volume across the board. NASDAQ Composite, SPY, Qs, Diamonds, IWM. The only thing down is 1-to-1 down on the New York Stock Exchange. Let's look at the New York Stock Exchange. When in doubt, you always want to check this out. New York Stock Exchange. So you can see basically for the last 3 weeks, we have this range that we're in. Okay, so we're in a range. Whoops. Okay, so we're in a range. Past 3 weeks, that's all we've been doing. Range bound action. So what do? Do we break out? Or do we break down? Okay, that's what we're waiting for right now. S&P, the futures are driving higher. Let me see. Do I have any more here? Yes. Okay, so 0-day calls. I suggest having a put and a call in the active trader window. Okay, When I say a put, I mean like a 30 delta put, a 30 delta call, adjust them during the trading day. By having that active trader window open, you can like very quickly get into a trade. You hear a high tick, boom, you jump in, you get 15 cents on 10 calls. You know, you get 100, a very nice trade very quickly. This active trader, I'm getting more and more used to it. It's really good to have. Okay, so that's what we're looking at. New York Stock Exchange. I got a feeling we're going to break higher the way it looks right now. Buyers stepping up at the low of the day. Okay, back to Palantir. Palantir still at the high. Futures trying to go. Futures trying to go. All right, let me go back to the S&P here. S&P. Okay, so coming out of a squeeze.
That may catch you, Scott, by surprise, but here's why. It's just been an incredible stock, okay? And it's not just the 42%.
Yeah, I agree with Jimmy. ExxonMobil been a very strong candidate. ExxonMobil. Let's see what Jimmy's doing here. Okay, it's at the low.
There does have to be one fundamental note of caution here, which is to say before the weekend's events, we were definitely in an oversupplied situation globally in terms of crude oil. That was something that was liable to hit.
Okay, futures trying to go. Futures trying to go.
But for the moment, I'm going to ride it until I see it starting to roll over, and then I'm going to have to trim it. Now, I do think, and Steph, I think this was
Okay, futures trying to push.
ways to play the energy sector. You're talking about SLV. I would look at Transocean, which I've talked about for
Microsoft at the high, Apple at the high, Nvidia at the high of the day, Meta just off the high of the day, Amazon just off the high of the day. Oh, basically the high of the day. Google trying to push. Tesla looks okay.
Let's take a look at the S&P now as well, which has gone green. And, you know, Michael, there was a lot of concern, consternation.
S&P 500 going green, looking for a follow through. Can we close green?
We followed through negatively this morning.
First trading day of the month.
It's worth watching. Goldman was not good last week. Goldman's now up 2%. You do still have these.
Yeah, let's look at the banks. Let's look at the banks real quick. No, we don't need to. Looking for the New York Stock Exchange, the chart you're looking at, looking for that to pop higher. Okay, JP Morgan. Okay, these are at the 200-day. A lot of noise down here. So Goldman Sachs, GS, Wells Fargo. Okay, what are the pharmaceutical stocks? Merck. Okay. What's working? Palantir up nearly 7% on the day. Marathon Petroleum. Eight different sectors represented here. Okay. You got tech, software as a service. You got petroleum. You got Exxon. Body cams and military, you name it, paraphernalia. Coinbase, Bitcoin at the highs. You got Raytheon, defense, fiber optic for AI, ONOK, OKE. What sector are they in, ONOK? ONOK. Okay, what do they do? ONOK. I don't think I've ever traded ONOK actually. ONOK reported in line. ONOK. Yeah, I'm not crazy about the metrics here. Gas. Okay, ONOK, natural gas. Okay, so if you already answered that in the room, thank you. What is that? NVDX trying to push higher. Netflix. Microsoft, ONOK. So ONOK, Robinhood Financials, broker dealers, aerospace defense, CF Industries, fertilizers. A lot of chatter about the fact that fertilizers have to be shipped, some through the Straits of Hormuz, asking for higher rates. Okay, that's the S&P 500. Let's look at the Dow. NVIDIA, no surprise there. NVIDIA, outside day, bullish engulfing on NVIDIA. Microsoft. Okay, so it looks like if you overstayed, you're welcome. Bears overstaying their welcome. Looking for a drop below the 200-day. Instead, we get a reverse on NVIDIA. We get a nice bullish engulfing candle. Now, what happens tomorrow is what we can determine. If we close up here, we're going to follow through tomorrow. We can trade it all the way back up to the upper part of this range. Pretty clearly defined RSI turning up. With the exception of those two distribution days, we've had some nice bullish volume. MACD stochastics resetting, so maybe a follow through tomorrow on NVIDIA. Well, at the end of the day, we'll get Money Magic's updates tomorrow for NVIDIA and the rest of these New York banks. There goes NVIDIA. It's by the front door. Be safe, dude. Look good, man.
It's going to take some time to heal. This is not something that I'm saying at the end of March, the stock's going to be back on its feet. Because of what I said, redemptions. People are watching how many redemptions come out of the investment vehicles that are in Blue Owl or any of its competitors. And that's going to take time, much like with BREIT.
Man, my son's got a lot of cologne on. Wow. He's going to knock me out.
Because they've gotten hit really hard. The financial services sector is down 6% year to date, more sector year to date. And they don't have big exposure. They have exposure, don't get me wrong, but it's like 10, 12% of their total assets. In the meantime, remember JP Morgan actually raised numbers last week? So we're going to start to see numbers go higher for this group, and buybacks are coming. Basel III endgame is coming at the end of March. That's
Google. All right, maybe Google gets something going too. Let's see. NVIDIA. We want NVIDIA above the 60-minute 20 MA. Almost there. Range bound, pretty obvious. Google. Okay, that's got a ways to go. Apple as well. Microsoft. Okay, Microsoft looking good. Okay, it's going flat. What comes after a drop? Flat 20 EMA. Once the 20 EMA turns up, that's our go signal. Okay, S&P spiders, range bound spiders. IWM, let's see what IWM looks like. IWM, also range bound. Back above the 20 EMA though. Looking good. Apple, looking for that to get above the 20 EMA. Palantir, we talked about Palantir turning up. So that's your first bullish signal last week. Now we're following through. Gap up today. A lot of people weren't expecting that with Palantir. That looks like a good one. Let's see. What do I have on Palantir? I'll share that with you. Palantir. Palantir expecting a multi-day move on Palantir. Now that it's above the 20 EMA on the 60-minute Palantir. Let's see. I have 155, 160. So 155 is right above the upper Bollinger Band. Just below the 50 in the 200-day. I have the 150, 155. 155, 160. Sorry, 155, 160. 160 was chosen because that's the 50-day. And the 200-day. Yeah, Palantir follows through tomorrow. That'll be a nice trade. Future's still hanging out at the high. There's still potential to slap this down. So you want to be taking hedges at the high of the day, not at the low of the day. So if you're going to buy puts, like the credit spread I have, 66, 65, 6400. Butterfly, put butterfly. If you're going to take that, you want to do it at the high up here, not at the low of the day. I don't know what you can get that for now. Let me just check. Let's see. S&P. S&P. That put fly is going for, survey says, $3.05. All right, so you can put on a put fly hedge for $300 per. We have 5 of those, and it's purely a hedge. It's not a day trade. It's just in case the markets fall apart like they did. I thought we were going to close down there, or we're going to hold down at 175. Instead, we get this nice bounce. We're green at the moment, trying to stay green. 1,500 flights total, 41% of schedule canceled. Okay, watching the S&P here, futures.
They're not really flying in and out of Dubai right now. Understandable given the situation. As for the American carriers that fly into the Middle East, Delta, American, and United, that's the focus here. All of them down anywhere between 2.5% and 3%. The main problem for these gentlemen, or these airlines, I should say, is the fact that they've canceled their flights here for the next week, whether it's to Israel or to Dubai, but they have to do that because they don't know the situation, and jet fuel prices adding to the pressure on the airline stocks. We talked about this last week. This is one of the primary reasons why you see the airline stocks under some pressure here in the first quarter. Very little is going as planned for the first quarter, whether it's been the storms on the East Coast, jet fuel prices.
All right, so that looks good.
In the Middle East. And I know there will be some people, Scott, who will sit there and say, well, look, how much of the flight schedules for United or Delta go to the Middle East? It's only maybe 0.5% to 1.5%, depending on the carrier. But the longer this goes on, that has ripple effects. And these have been areas where all of the airlines have been looking to their exposure. The Middle East has been a red-hot market, especially when you talk about Dubai. That's a market that...
I did take some Chevron off for a profit. Been in that since January, rolling those up and out. Chevron, I'm just reducing my exposure a little bit and see if there's any kind of need for re-entry on a lower level. Let's see, Chevron at the high. Okay, a little extended. 60-minute 20 EMA. Okay, trending. Let's see, I sold it in the first hour. So I got a pretty decent fill up here. As it pulls back, if it holds 187, I'll get back into these calls. 190, 195.
Also optimistic that 2026 was going to be record profitability, and it still may work out that way. But the first quarter hasn't gone as planned, Scott. You had the storm shortly after we talked with the CEOs that essentially shut down the eastern half of the United States for a couple of days. That's going to be a big hit.
USAR. Let's take a look at USAR, the critical metals, USAR. Okay, this is turning the corner. So this is a good example. Looking for this kind of price action over here on the left. Once we get above the 20 EMA, USAR. USA rare earths, metals. Okay. Once we get above the 20 EMA, you start to get long. Put your stop underneath, trailing stop. And you take it off on these kind of gap ups, fade. Starting off again, USAR looks good. Let's look at MP Materials. That took off today. MP pushing off the 20 EMA. All right, so you can see for the last couple of months, nothing to do here. Now it's showing you that, why does this happen, Vinny? Because people start getting active again. You see the volume pick up. Okay, that's your cue right there. Don't buy it right here, though. Buy on ABCD pattern. USAR, MP Materials, Critical Metals, CRML. They're all changing direction. For the last 6 to 7 weeks, I've been doing nothing but fading. Okay, futures pulling back now.
Fewer faces talking to fewer faces is a potential issue. Phil, thank you very much. We'll follow the story, of course. You bet. That's Phil LeBeau with the update on the airlines. Let's get an update now on the headlines with Christina Partsinevelos. Hi there.
Hi, Scott. The late civil rights leader, Reverend Jesse Jackson, is back in his home state today as part of 2 weeks of events to honor his life. He's lying in state at the South Carolina State
Oh,
House
wow.
after dying
Jesse
last
Jackson
month
passed
at
away?
the age of 84 years old. Jackson's body will be returned to Chicago
Wow.
next for a large celebration of life and final homegoing services at the headquarters of Rainbow Push, the social justice nonprofit organization he founded. Ukrainian President Vladimir Zelensky says U.S. brokered peace talks with Russia are still set to take place this week, despite the war in the Middle East. He said Kyiv was considering a new location for the negotiations.
Bitcoin, that's had a good day today. Hopefully we get multi-week, multi-month rally out of Bitcoin off the low. I have a pretty decent sized position in BITX. Okay, so I've been looking for this base to break out. BITX, 2 times Bitcoin. Okay, fairly inexpensive way to play Bitcoin. The ETF. Okay, so if this does get any kind of movement, what I'm looking for on this is a 50% retracement at a minimum. So you can see the high up here, over here on the left, around 63. That's your high, around 63, your low down here. So at a minimum, 236. 236 is right there at 25. So that'd be a $10 move. All right, so 1,000 shares, that's 10,000 right there. Okay. 382 would be 32. A nice double there, 15 to 32. 50% retracement back to $38. That would be really good if we can get that far. Bitcoin needs to cooperate, of course. You can see the indentation here, Kirby. So once we get above this level around 18, the ceiling's about 26. So you got about a $10 move inside this Kirby. So I'm just waiting for the day that it continues. Today's a pretty decent day. Bitcoin looks like it wants to keep going. Check out BITX, fairly inexpensive way to play. Fairly inexpensive way to play this. Okay, BITX. Okay, ExxonMobil, Palantir. We already talked about Palantir. Let's see what else is going on here. MSTR, Axon. We talked about Axon. NVIDIA, we talked about Intuit. Intuit had earnings on Friday last week. Global Foundries, Thomson Reuters. That's one that we identified early in the week. Last, okay, early in the week. Last, we had that pop on Tuesday into Wednesday. Now we're flagging. I have TRI. I have some calls. And that's in April. So I had the April 100, 105 calls for Thomson Reuters. Okay, TRI. That looks like it's going to start. Okay. Let's see what the papers look like. New York Times. Let's see if that is doing anything. NYT. Okay, NYT. TRI. Palantir, IS, TRI.
So pricing, I wouldn't expect to take a big leap down. My hope is that we continue to stay in expansion. The customer inventory index, we've been talking about that every month. That's very, very low. It's at
Rebecca Energy Complex, a major focus today with oil prices, natural gas prices higher. For more on where things could go from here and how to trade it right now, we're joined by the famed energy trader himself, Mark Fisher. He's the founder of MBF. It's good to talk to you today.
Yeah, I got his book. He's got a good book.
These news events.
Thompson.
I'm good. So I guess first, what do you make of the moves in, let's just take oil first, both WTI and Brent, $3 and $4 higher respectively off of their, off the big jump. What's the message in that?
Well, the message is if this was 5 years ago, 3 years ago, the price would be $110. So obviously, the marketplace realizes that there's a general oversupply. At least that's the fundamental view of it. And with all the added production being added by the Gulf states,
All right, we're starting to get a bounce in the futures.
crude and Brent.
Okay, S&P.
That could occur in the Strait of Hormuz could change.
What's
this,
NVIDIA
you know?
do?
Yeah, but I think the more interesting, not interesting, that may be the right word, but where everyone has no idea what can happen is, and that this is in gas oil, heating oil, and that you can see that all the cracks have blown out tremendously. Well,
Look at the volume on that last candle. Look at the volume.
heating oil is up equivalent of $12, right? And that could go much higher, which leads back to the point is, what is the real threat in the Middle East and from everything? And it's really the refinery capacity. You saw Saudi Arabia shut down their main refinery today, and that to me is the biggest risk in this whole equation.
What do you make of the Qataris shutting down their LNG output? It's no small output. It's 25 to 30% of the world's natural gas supply is now offline. How are you thinking about that?
Again, that's the second part of the equation. But the Qataris, if things calm down, could go ahead and that supply can be put back on the market with a couple of days. The problem is, if God forbid something was to happen to the refinery capacity in Saudi Arabia because of a strike, and with no new production, no new facilities here in the States, and very little refineries being built because everyone wants to put these refineries out of business, the real risk is sort of like if you and I were building, if I was buying it, if we were going to make pizzas and there was plenty of dough and sauce, which is crude oil, but there weren't enough ovens, the price of pizza would go up anyway because there's not enough ovens. The example I just gave you, the refineries are the ovens, and now the biggest oven in the Middle East just put themselves offline. Not to diminish the fact that what happened in Qatar, doesn't affect the TTF and LNG prices in Europe, right? But to me, the bigger concern is refinery products, which heating oil creates jet fuel, and with the precarious position we're already in these product markets, that would be my number one concern.
I mean, you've obviously lived and traded through many of these geopolitical episodes, including ones that have taken place in the very same region with the very same players. What does history tell you on how long you should game out these kinds of moves in these kinds of markets before they settle back? Because I asked you the question in the context of someone like Ed Yardeni putting out a note and he says, and I quote, "In our short war scenario, oil prices should fall in the coming weeks after a ceasefire." Now, that might be something that's so obvious to many. I guess I'm asking you, are you in your own mind thinking that this is a short war scenario? Just how are you thinking about it in the context of how you've thought about similar incidents in the past?
Well, similarly, that's what is the market has reopened and immediately corrected itself. When we had the Iraq crisis, price was $31 overnight, opened up at $20 the next day. Here, I think the way I look at it is when you look at where we are in the markets right now, and I don't know. I mean, I'm not in the military. I have no idea if this is going to be short or long conflict. But I do know that because of the various factions in Iran, even if there's a ceasefire, does that mean everyone's going to stop lobbing missiles from the IRGC? Does that mean everyone's going to play by the same set of rules? Or you could have renegades that can just, take matters in their own hands? I don't know. I'm not that smart. So to me, I would be concentrated on the
Looking for a follow through. It'd be lovely to close bullish on the day after being down 175 points overnight. S&P.
And you blow companies out of the water, you can't just build them back in 2 minutes. This is not like a Lego piece,
And that's even from the public equity standpoint. If my viewers and those on my desk, some of whom obviously well, we're even talking about publicly traded refinery names.
Okay, here go the futures again. Futures on the move.
Top of the list, correct?
Right, which I would leave to Joe and you guys, because what do I know? I know nothing about But what I will tell you, the interesting thing is the market that's come off, that's acted like markets past, where it's buy the rumor, sell the fact, have been the metals markets, right? The metals markets opened up much higher last night and have come off substantially from the highs. Right? Typically, markets that are going to correct, that's the pattern that you look for. Right? But on the other hand, not that heating oil and gas oil have been basically in the same place or high since last night. So again, to me, as my intuition and what I don't know how many years I've been 40 something. Oh my God! So and how many years of doing this, right? I would think that everyone in Wall Street has sell typically it's been sell energy, buy metals. I don't know if that works anymore. On the other hand, every time, how many times are people going to get short energy, crude oil in the mid to high 50s, and then get stopped down in the mid to high 60s and lose $10? It's happened 3 times already.
True.
In the mid 60s or now in the 70s, right? And then what's the appetite?
This guy's good.
To get short again at $55. What are you going to make? $8, $10 to lose $10 and do it 3 times?
To be able to trade futures on crude oil over 40 years and still be in business, you got to know what the hell you're doing. Crude oil is probably one of the most volatile commodities to trade. If you've ever traded it, you know what I'm talking about.
At some point, you just got to say enough is enough. So I would think, to me, I'm concerned about, will everyone, when there's a ceasefire, is that going to be for everybody? Or are there going to be people, are there going to be renegades who are going to take matters into their own hands? If Venezuela, on the other hand, it looks like everyone's playing ball. It's a different story. Here, I don't know.
Well, we'll see how it plays out. There are a lot of unknowns, of course. Can't thank you enough for joining us, Mark. Thank you very much. It's Mark Fisher with his insights on what's happening in energy. You were pointing out to me right before the show, you're watching charts of tankers and prices and prices of stocks.
Well, and you have to pay attention to that. Right now, as it relates to floating storage, we're probably 20% higher than we were over the last month. Very large crude carriers are seeing a significant premium right now on their cost, up 700+% over the last year at some of the highest levels we've seen since 2008. So here are some of the names. It's Frontline, ticker symbol FRO. It's TK, ticker symbol TNK, and then also DHT. If you were to believe that there's going to be a significant disruption as it relates to the Strait of Hormuz, this is exactly where you would go. I don't foresee that happening, and I think the price action today and these stocks is telling you that. Remember, India, China, Japan, for them to get their oil, it has to come from the Strait of Hormuz. That's happening. I think Mark made an excellent point as it relates to the refiners. I think that's where you have fundamental tailwinds as it relates to where pricing is going to go.
Do you still have exposure?
I still have Valero. I'm holding on to that. You could go Marathon, Jimmy. I know you like that one. You could also go Phillips. That's one of Josh's names. I think that actually is the best trade of everything collective we've talked about.
Wow. AVAV got crushed.
Those stocks are the ones that are reacting the most. All right, we'll take a quick break. We're back right after this.
AVAV got crushed. AeroVironment. S&P. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from closingprint.com. It is Monday, March the 2nd, first trading day of the month. We had a lot of selling, I would say, last week. Stayed below the 50-day for the most part for the last couple of weeks. S&P, a lot of distribution. But was it distribution? Was it just profit taking, taking stocks off, lagging stocks? We don't know. But what I will tell you is if we can hold this level and push higher, you'll see most likely, and Money Magic will probably back us up on this, you most likely see some flow into some of these names that have been beaten down. And we'll be able to determine whether or not that's bullish or bearish flow tomorrow, next day. For now, S&P is acting really strong. I'm very impressed. Very impressed with the reversal. We are currently green on the day after being down 175 points. Wow. Futures. Remarkable. Just freaking remarkable to be down 175 points. First trading day of the month. First trading day of the month. March. Wow. Just, yeah, very impressive. Very impressive. I did take some profits off into strength, CVX, Chevron. It felt like, we've been in this one since January. Now it's just purely a feeling. Is it overbought a little bit? Can it pull back to the 921? If it bounces, I'll probably be back in it again. Chevron started off on January 3rd with the Maduro thing, and then as it opened up that Monday, we started the position, scaled in. When it dipped and bounced back up, we added to our position, and ever since then, we've just been rolling up 155, 160, 160, 165, 70, 75, 80, 85, 90, 90, 95. So if this pulls back, I'll be getting back into some Chevron. Took it off this morning on that first hourly candle. That first big pop. Okay. So Chevron gave us an out at the highs this morning on that big candle right there. Boom. And if it fades a little bit more, it'll give us an opportunity, perhaps. We'll see. Yeah, Conoco too. Yes, Conoco. COP, CVX, ExxonMobil, PSX, APA, etc., etc.
BNAI. IBRX. POET. TURB. IBRX. TURB. VATL. IBRX.
Netflix. Well, the New York Fangs, I have to say, I'm very impressed with the New York Fangs. Every single one of these. Here's Apple at the high of the day. Apple, high of the day. That's a little too loud, right? A little too loud. Okay, Apple high of the day. Amazon trading at the high of the day. Got to get through this level. Google. Okay. Microsoft, high of the day. Still in the base, but all of these stocks are showing bullish activity. Higher highs, higher lows. NVIDIA, higher highs, higher lows. 60-minute, got a ways to go, getting back into the range. Tesla, all of these are bullish. They're in the top of their range for the day. For now, obviously. Tesla sitting on the 200-day. Same. NVIDIA bounced off the 200-day. We got a bullish engulfing candle. Netflix. Nice follow through. I would love to see Netflix continue. Money Magic was saying there wasn't a whole lot of volume. We'll know tomorrow if they filled in higher or lower levels. Call wall, put wall. Okay, so we'll know that tomorrow when Money Magic updates his stream. Okay, his channel. Okay, Netflix. Meta. Okay. What I'm looking at is where price is in today's candle. We're in the top of today's candle. We're at the 50-day. Meta gets through this level. We're going to see the 200-day next and then probably a follow through. I got a feeling Meta's going to get some more activity. Netflix, we talked about. NVIDIA, we talked about. Google. Broadcom, what's Broadcom? Broadcom needs to get above the 200-day. Okay, looking at the stocks that are moving off the low. Palantir based, and then broke out. Big gap up today. Probably, I would expect there's a lot of people not paying attention to Palantir. So once they see it, they'll probably start to do something with it. This is just the beginning. All right, so we based for 3 days right above the 20 EMA on the daily and the week, daily and the 60-minute. Now that it's taken off to the upside, our trailing stop, I would say I would go probably with the last candle or so. If you're buying up here, I wouldn't advise it, but if you're buying up here, put a stop underneath 144, that last 60-minute candle. Got a feeling it's going to follow through. But if it doesn't, and you get stopped out, you can try again at, say, 140 to 142, right in this area. Hopefully tomorrow we wake up and Palantir is challenging 150 again. 155. That's what I have, 150, 155, 150, 155, 160. Call spreads, debit spreads. What else? Let's see. MicroStrategy, MSTR strategy. Been basing for like multiple weeks. Once this breaks above, it's going to be obvious. When this breaks above, like, say, 142, we'll start heading higher, and the 20 EMA is going to turn up. That'll be a trailing stop again. Bitcoin, I like BITX because it's an inexpensive way to play it. Same thing, flat base for several weeks. Once this starts to turn, it'll be pretty obvious. Riot, same thing. Another inexpensive way to play it. This turns back up. IBIT, a bit more expensive, but doing the same thing. Intuit had earnings last week. Intuit. Okay, so this is a really pretty chart. Okay, pretty obvious, right? You want to be short or on the sidelines with Intuit. Okay, they own Tax Cut as well as a couple of other businesses, I believe. They also own MailChimp. So moving above the 20 EMA. 20 EMA is crossed up to the daily 20 EMA on this 60-minute time frame. Now that it's starting to rise, this is where you want to start thinking about longs. Put a stop underneath the previous or 2 hours ago candle or today's low. 409, 408. Look for this to follow through. So Intuit looks good. That's the top of the NASDAQ 100. CrowdStrike, a lot of talk about security last week got hit. Now it's coming back up, giving you a bullish setup. S&P 500, let's see. GLW. GLW is Corning. Fiber optics for connections Routers. Oh, Cisco is one I wanted to see too. Cisco, trying to turn the corner. Cisco. That's on the watch list this week, right? I put that on the watch list. Cisco was a friend of mine. He was a kid. Cisco. Yeah, Cisco. All right. Constellation Energy, CEG, Constellation. All right. So this is another good example. In February, this moved above the 20 MA, Constellation Energy. It has earnings this week, right? Or no, they already had earnings. They already had earnings. Let's just go take a look at that. CEG. You want to see all four metrics green if possible. Constellation Energy. Okay. 3, earnings growth, not that great, but revenue growth looking pretty good. This is the Baltimore area, Baltimore Gas and Electric, Constellation Energy. They're getting more into AI, providing power for, much like Baker Hughes. Okay. So we'd like to see all four metrics green. Constellation, Baltimore Gas and Electric. Many of these companies are branching off into providing for behind the meter. Power solutions. All right, that's CEG, Constellation Energy, and Baker Hughes. Baker Hughes selling turbines to these big data centers. Provide your own power locally. All right, future's trying to push a bit higher. What else? What else here, Vinny? Valero refining. A lot of these gapping up. Valero, I did take a little bit off of Valero as well. If this dips back down to the breakout level, I might do something. Valero was one we took a couple of weeks ago, several weeks ago. It broke above this 190. It moved higher for a few days and then immediately consolidated. So we got like a base on base pattern. Now it's breaking out. Doesn't look like it's going to come back now, Valero, if you're in it. Oh, okay. Futures trying to do something here. Futures, let's get back to futures. Okay, trying to break out futures. Okay, what's that? That's 68.88. $68.88, $68.88. Watch MACD's trying to turn up. Watch the volume right here too. Watch that volume. Trying to go. Let's go see what hedge flows look like. All right. Okay, hedge flows. Okay, right here is a level.
I'll see you a little bit later. Thanks for being with us today. Yeah, it was great having you. What's your final trade there, Farmer Jim?
Lockheed Martin, we're obviously going to be restocking missiles.
Okay. Steph, is that you with Netflix?
Yeah, I don't own it yet. We now can focus on the very strong fundamentals.
Well, you said you don't own it yet?
Not yet.
It's leading us on a little bit. All right, well, if you buy it now, you're going to buy it higher than it was a couple weeks ago. Joe.
Farmer Jim should own some CF Industries.
Maybe he does. All right, I'll see you at 3.
Thank you very much, Scott, and welcome to The Exchange. I'm Kelly Evans, and we have a huge reversal in markets today. Take a look at the action here at 1 p.m. Eastern Time. Stocks have staged a massive comeback following the attack on Iran over the weekend. The Dow was down 600 points last night, and at the lows this morning, even after we opened, it's now down 15. The S&P is positive by 9. The Nasdaq is up 0.5% right now, and the 10-year yield is back about 4% to 405. That may have a lot to do with some details in the ISM. We'll come back to that in just a moment. Take a look at oil as well. Big part of that reflationary, inflationary story. Crude, WTI, the U.S.
Let's see, 1 o'clock. So Brett's going to be on here.
Meanwhile, natural gas is
Okay.
in the UK slightly more so, 40% in the UK. And 32% in Europe after Qatar Energy, that's the world's largest LNG producer, did hold production after some drone attacks on key facilities. That's sending prices much higher overseas and a little bit of an impact here. As for other signs of a flight to safety, we've got gold off the highs, still in the green, but by just 1% or so, as investors are looking for some of those safe haven homes. Around 5,300 for the gold price today. The dollar is still up about 1%. That's a big move to 98.5. That's the highest level in 5 weeks, and it's now positive on the year. But let's begin with the latest developments. What we know this afternoon on Iran. The president spoke just a short while ago, saying the U.S. will easily prevail in this war. Interestingly, not ruling out the presence of boots on the ground in an interview earlier today as well. And we've also heard officials insisting this will not be an endless conflict. Eamon Javers is live at the White House. Eamon?
Kelly, these were the president's first live remarks since the strikes began on Friday evening overnight East Coast time here in the U.S. The
Future just looks like they want to go here.
Helming an unrelated event that was designed to award medals of honor to 3 U.S. service members. The president also beginning that ceremony with some comments on Iran. He listed U.S. objectives in the region.
All right, Scott Redler watching Bitcoin as well.
Degrade the Iranian Navy to stop the Iranian effort at a nuclear weapon, and also to degrade the Iranian capacity to fund terror networks throughout the region and around the world. The president also said that he's committed to this.
Bitcoin, watch your Bitcoin stocks and proxies, watch them. We're starting to fade a little bit off the high. Bitcoin has a reputation of pulling back and popping quite a lot, actually. So you want to make sure you keep some of those profits.
The president acknowledged the loss of 4 U.S. service members who have been confirmed killed in the fighting so far. Those all apparently killed in strikes by the Iranian regime on a U.S. base in Kuwait. We'll wait for more details on that strike as they come in. And the president here also suggesting that the United States regime change.
All right, took a little bit of BITX off. BITX just took a little bit off there. My position, I think, was too big. Whenever I look at something too much, I know that my position is too big. It's too big. Baker Hughes. Netflix is okay. I'm just checking my position sizing right now. Haven't done anything really. I was very surprised that the markets are as resilient as they have been today. I was expecting to hear a lot of negative comments today in the trading room about the markets and everything. But we had a nice opportunity, nice bounce. All the New York Fangs bounce. That was really unexpected. They're still holding up their bid too, for the most part.
Chief Economic Advisor at Allianz and the former CEO of PIMCO. Mohammed, welcome to you. We're going to hear from a series of key voices this hour, culminating with
Let's see. Is Brett on yet?
just your response to what you've seen so far with Iran.
Come on. Let's see. Where are you, Brett?
So I think in terms of economics, a lot will depend on the duration.
I think they're starting. Okay. Okay, let's see what Mohammed has to say.
Of the conflict. The longer it lasts, the more it spreads, the more stagflationary it is.
Oh, he is on. Okay.
Now, the good news is that this global economy has absorbed.
Okay, let's see. Brent.
These webinars we've done, we've covered many things. But just the idea of assessing volatility when you do an outright, because the single put may be cheap, or you should go into the structure. And I think what is counterintuitive to this a little bit is that works for the bounce too. So if you were trying to play a rally maybe this morning, my argument was that an outright call may be too expensive because that ball should be a little bit elevated. So we can kind of tackle those two things in kind. But what do you got on the Monday, Wednesday, Friday stuff? Let's start with that and check out some of the things that are going on in that space.
Yeah, absolutely. So for many people, and the reason why I'm on a bit of a kind of like self-imposed speaking tour, as it were, as far as these things are concerned, My job is
We're gonna listen to
educators,
Brent
obviously,
and Matt
to
Cashman here for a
continue to
minute.
Message to people that they should trading before they trade it. And my concern when these things, when I heard that these things were coming to fruition, is that what we've kind of got here is this kind of perfect storm as far as many of the people who trade 0DTE exclusively now got involved with that over the last 5 years, right? I mean, that's where you really see the actual volume ramp up over the last 5 years, as far as that's concerned.
Absolutely.
And if they've been trading that, chances are they're probably trading European style cash settled options, right? Like that's kind of the benchmark for most of what the 0DTE has been up until this point, right? If you're trading S&P 500 options, chances are you're trading European style cash settled options. Now, the problem, not the problem, the challenge here is to understand that with most people who have gotten involved in this space, and maybe this is like the only options that they have ever traded, the duration of these options, right? The Mondays and Wednesdays on these names that have been listed in single stock options, 0DTE Mondays and Wednesdays, look very similar to a Monday and a Wednesday 0DTE option on an SPX contract, right? But there's a huge difference between them. One of them is European style and most likely cash settled, and one of them is American style and physically settled, meaning it settles to stock, right? It settles to the underlying asset. That's what physical settlement means. Cash settlement obviously means it settles to cash, right? And the reason why those index products usually have those is because there's not an actual tradable underlying for those, right? An index, there's no way to actually buy or sell the actual index itself. There are futures on it, but regardless. Okay, here's why I care. Here's why everyone should care, is because American style options have a very different risk profile than European style options. Namely, that they can be exercised and thus assigned at any point during their life cycle, right? European style options cannot do that. European style options can be exercised or assigned at the moment of expiry, and that is it, right? That's part of the reason why people love trading them for institutional reasons, right? It's a very kind of like mathematical, it's not terribly complex, the actual expiration mechanism. It's mechanical. On the American style side, you can actually exercise or not exercise during a window which includes some time after the close. Okay. And so that window actually technically exists for European style options, but very seldom do people use it because if it's a cash settled option, it just expires to cash. And it's not really, you're never really financially incentivized to actually abandon an in the money option because you would be foregoing the cash with which it was going to settle at, right? Well, American style options are different. You can actually abandon an option that is theoretically in the money. You can also actually technically exercise an option after the close that actually closed technically out of the money, right? Let me give you an example. So stocks trading 100 spot 1-1, right? 111 cents, $100.11. You are long the 100 spot 5 calls, right? You're along the 100 half calls at 3 o'clock Central, 4 o'clock Eastern. Stock closes and it settles 100 spot 1-1. After the close, earnings comes out, stock goes up $10. It's now trading 110, and you, long the 100 and half calls, have decided, lo and behold, that it's in your best interest to exercise your calls, right? At 4:15 Eastern time or 4:07 Eastern time, whatever it is. You can do that with an American style option, right? And you get the stock. The problem is that during that window, right, if you're an American style call seller, you're not totally sure whether or not you're being assigned or not.
Yeah.
And this is part of the reason why these haven't been listed yet, right? Because of that very fact. I think the market and the kind of ecosystem in general was wrestling with you know, like these are complicated. These are more complicated than any like normal cash settled European style option. And so what we have is the NASDAQ asking the SEC to be able to list these. And then once they start listing, everyone's going to list them, right? Because all
Cat's
the
out of the
exchanges,
bag.
yep, everyone does that. And then you can imagine, right, because of what you have seen in the zero DTE space as far as the indexes are concerned, that you can imagine some serious volume going into these options. I want people to understand that these options are not the same as European style cash settled options. And if you get assigned on these, you have the potential of having an actual stock position, which you don't if you're trading European style cash settled options. And so that's part of the reason why I'm out here talking about them. And you'll see me talking about them in multiple different places because of that very fact. So that's a very long explanation of what this is, but that's the reason why we're talking.
Well, I'm glad you actually brought this up because it's something that hasn't actually occurred to me. I spent so much time thinking about people trading the zero DT options, a high frequency, someone's buying tons of Tesla options versus something else.
Yep.
As opposed to that situation where people could get assigned early, and I can imagine that could create a lot of headaches, not only for the customers themselves, but then, you know, are the margin calculations and those types of things as accurate as they need to be. So that's really quite interesting.
Yeah.
To bring up those aspects. And I never quite understood, and maybe you can answer this, and maybe there's a very obvious answer to this, and I'm going to look like a jerk for asking the question, but why don't they have these cash settled products in the equity space? Is there a good reason for that? Why not cash settled Apple options?
It's a good question. It's a question that I ask an awful lot. You know, if you were to ask me offline whether or not I would prefer to trade cash settled or physically settled options, it's always a little bit simpler to trade cash settled options.
Mm-hmm.
But you know, there's a part of this that's just like built into the legacy of the business itself. People who are long actual underlying want to sell options against their underlying that will actually theoretically call the stock away at some point, right? That mechanism is something that's built into kind of the fabric of the way that those things work. I don't necessarily anticipate that changing at any point in time. I was having a conversation with someone the other day who said, well, why don't we just list both of them next to each other?
Yeah.
Right? Like you can have the physical settle and then let the market decide which option is more popular and thus who wants to use what. I think there's I can't speak from the OCC's perspective, right? Like part of my job is also to represent the OCC and represent, you know, that voice. And so the idea here is that whatever is going to be listed, I want to make sure that people understand what they're trading and what the risks are, right? Mm-hmm. And so it's a little bit above, let's say, above my pay grade to discuss whether or not like everything's going to be cash settled going forward or not. But the important part here is that if you're trading American style options on a zero DTE Monday or Wednesday in a single stock, you have theoretical, right, underlying risk that you wouldn't have if it was a cash settled option. So
yeah, and how do you pronounce Photo Indicate mentions that single stocks could have their closing print more easily manipulated. And manipulated says false. You don't want to say the word manipulation, obviously, Matt, but point is the same. Yeah, like you slip a little bit in there at 414.58, and there you go, right? You could move that word. Harder to do in the SPX.
Yeah, I would say that without using the M word in that situation. What I would say more generally is that each one of these options carries idiosyncratic risks to the underlying, right? That don't necessarily exist in a more widely dispersed option on an index.
Right. And then you have the dividend, issue, which could be very interesting as well. How those things are priced, what happens to them at like 4:14 on that night, and things like that. So yeah, those are a bunch of very valid issues, which I didn't think about. But
yeah,
right here,
it's an interesting part of it. Let me give you a little bit of color as to like how much and what kind of volume we're talking about already. Okay, because I actually reposted this from Henry Schwartz from SIBO. He does a lot of great work as far as like being really transparent about some of the volume numbers. But his post was essentially, in case you missed it, Monday and Wednesday option expirations have become available for 8 single stocks plus IBIT this month, widening the range of underlyings available for 0 DTE and short dated strategies. Okay, ready? Today, this was 2 weeks ago. Today, nearly 4 million 0 DTE contracts traded on these symbols. And with much help from AI and Copilot, I was able to use SIBO Global Markets Trade Alert to produce and schedule this daily 0 DTE single stock flow recap. Wild to see 50% of Tesla volume was 0 DTE, right? This was 2 weeks. This is after this. This is like right after. This was the first week they let them out of the bank. And so you see, let's see, top stocks by 0 DTE volume at that point. Tesla was 1.3 million contracts. That was 50% of the Tesla volume. NVIDIA was 985,000 contracts, 37.5% of the NVIDIA volume. Apple was 500. Yeah, you see it right here, right? 500,000 contracts. That's basically almost half of the Apple volume. So we're seeing these kinds of things happen very quickly, right? The adoption for these things is like, it looks like this. And
yeah.
I did not expect this much volume at first. I thought they were going to be a little bit sleepy, to be honest. And that's not what we're seeing. We're seeing people just like jump right in and trade them. I want people to trade what they want to trade. I also want people to understand these are not the same options, even though they might look like they have the same duration as those SPX 0 DTEs that everyone has been trading. Make sure you understand what American means.
Listening to Brent over at Spot Gamma with Matt Cashman.
2 comments on this.
Conversation.
I'm surprised about at least the Tesla and NVIDIA volume because people were basically trading those 0 DTs anyway already.
Yep.
And the overall level, to my last look, of Tesla and NVIDIA volume hasn't materially gone up. So I think what this is doing is robbing from the Friday expiration, really.
Okay.
Because a lot of people would just come in and come out. And in fact, if you look at that data for those 2 names specifically, and it's a funny thing because those 2 names, like if you just look at the total overall volume on any given day, there's 2 tiers of stocks, right? Or 2 tiers of volumes. There's SpiderQs, SPX, NVIDIA, Tesla. They'll generally trade. You can set your watch to them trading at least 1 million a day, if not more. And then there'll be a rolling kind of cast of, some news happening, like silver's going off today. So that upper echelon is there. You can set your watch to them being in that thing, right? And so it's like, what is it specific about NVIDIA and Tesla that is so that options complex so mature and gets so much volume?
Yeah.
And I have been trying to figure this out, and I thought, well, they're trading NVIDIA and Tesla either A against each other, which doesn't make a ton of sense to me, or B possibly versus some type of index option. I can't find a strong correlation there. So I've been sort of left with the idea that this is people trading this potentially against the stock, and there's some type of high frequency strategy in those 2 names that just keeps churning that volume because it doesn't ever materialize into open interest.
Oh, really?
It doesn't. And you'll see that on a consistent basis. In fact, if you go and you look at, I don't know if it shows it here today for these 2 specific names, but you can come in here and say, how much did open interest change? So here, for example, it's a little tough to see here, but here's what open interest was. Day over day, total change in open interest for Tesla was 300,000 contracts on this day, but the total volume was 2.7 million contracts, right? So,
Okay.
And that's not us saying this is what the buy side changed or anything. This is the total change in open interest. So if you traded nearly 3 million contracts and you only had 300,000 of open interest net change, it's not, it's 10%. It's not all that much, right? So that has to be, in my mind, a lot of just churn, right? High frequency churn.
Yeah, people in and out of it. Yep.
Yep.
For sure.
And that's the way that it works in most options these days. I mean, this shows you what we call our flow ratio, which is just a number I made up to say basically like, look, 200,000 Goldman Sachs contracts trade today, open interest at most changed 15,000. So, it's not a ton there. So
that flow ratio that you have there, that's something that you keep track of on a daily basis for all of those things?
Correct. And the reason is we built this report, and this report's supposed to highlight the buy side changes in open interest. Where did the guys come in? They bought these contracts for next January, 25 Delta options, super interesting as some random name, right? And then what would happen is people go, well, Brent, your report doesn't show this sweep for some random name. And so I put this in because for this explicit purpose of saying, look, there's a ton of volume that takes place every day that doesn't actually go into open interest. And so if you're
Core Scientific,
what they just did, they just bought 50,000, Micron options, and that must mean they know something.
bought to close
By
25,000.
the time that the market closed. So
RKT, Rocket,
So your idea that this meant some, Bridgewater quant.
the 20 call for
quant
March
value,
20th.
is untrue. In my view. So, that's why we kind of plug this in. And so you look at Lockheed Martin, for example, 289,000 contracts traded on Friday. Open interest actually went down 4,000.
Right.
So, on net, it's like there's really nothing happening there. And this is, this is only options volume, not equity dark pool or anything like that. And so, so that's what I found interesting. And I guess back to the point of with Henry Schwartz is, do these names now come into that same NVIDIA Tesla complex where there's some sort of arbitrage trade going on, high frequency arbitrage trade, be it against stock, against itself, against, whatever it may be.
Yeah.
I'm not totally clear on that, but to the core point, there's a ton of activity in that 0DT space, post stock, right?
Yeah.
And that's great for the exchanges. A lot of revenue there. And traders, look, you want to trade it for whatever reason you want to trade it. Okay, as long as, to your point, you know what the risks are.
Yeah. The other thing I want to draw people's attention to is that theoretically, these 7 to 9 names are not always going to be the same. If you go and you look through the SEC, the request that NASDAQ had for this, what they said is they'd like to review it quarterly. And they have a list of liquidity provisions that have to exist in order for these top 7 names or 8 names or whatever to be in the list. And so keep an eye on that, because there's also some interesting things about if one of these names comes out of this list and all of a sudden there's a new name in that list, you're going to see some changes happening where those options are theoretically listed. Now, keep in mind, the exchanges are the self-regulating organizations that decide when and where to list options, They're the deciding body as to what gets listed, and it's within their, decision-making as to whether or not they list options and, how they get listed and in what order and et cetera. So if you have questions about that, you need to be asking questions to the exchanges about what's being listed and when.
All good points. And WizKids here says the big boys can hedge the stock and make enough to cover their costs. And I guess that, the market makers do get different exchange pricing and all those things, and it is cheaper transactionally for them. This volume is so big that I don't think this is just retail people having a good time every day, like the Wall Street Bets guys messing around. This is high frequency shops trading against market makers or amongst themselves or whatever it is. I don't think that this is, Matt's friends sitting around on their Wall Street or on their Robinhood accounts.
My friends? I think they might be your friends.
You're the Chicago guy over there. Everyone's that's true.
Okay. My friends. All right. Some of them are my friends, but fair enough.
All right, so I want to pivot a little bit here, as that was extremely helpful. Thank you for that. And I wanted to pivot to today and just the market action, because this is the S&P 500 here in black, and this is our Hero system, and Hero shows you the delta of the options being traded. So look at every single option trade that's took place in the S&P 500. So spiders, SPX, ESE mini futures. People are selling calls and buying puts. That's negative delta, and that means that the dollar value here that you see goes down, and vice versa, right? Buying calls, selling puts, positive delta trades, and that shows that the market goes higher. And what I've seen related to the zero DTE space is that when we get the market dipping like this, and there's some, I don't want to say weak statistical evidence. There's some statistical evidence that this buy the dip feature is a feature of markets post zero DTE. The reason I pause on that is because the market writ large has been very strong after zero Ds really came out, right? After 2022, 2022 was a pretty bad year for the market. And obviously the next couple of years have been pretty strong. So the argument here, and you're really good at laying this stuff out in language that makes more sense, probably because you're smarter than I am. If you own puts, let's say you owned March puts and you are a big fund, for example, and you have 100,000 puts as your hedge and you can't take those off, they're going to expire. You could use zero DT calls in theory to lock in some of those gains, right? Or trade some of those deltas as they change, right? So market opens down 1%, vol spikes. You can't close your put, but you want to lock some of those gains in, or at least prevent loss in maybe the hedge if the market pops. Is that a viable strategy for a more active fund, or is that something that is unlikely to sort of be a source of zero D options flow?
Is this someone who, so you're saying someone who wants to monetize the fact that their puts have exploded, the market's down, and they don't want to buy futures, essentially, or can't?
Exactly. Because the argument is you buy the future and market keeps going down, that future is going to sting. But you
Watch your MACD here.
A certain amount of delta for the day, or maybe for 2 days out, 3 days out, with an option, and that has a better risk reward, arguably, under different scenarios. Particularly if you're wrong and the market drops another 2%, right?
Sure.
So you can buy a zero DT call as your delta adjustment as opposed to futures.
Absolutely. Yeah. I mean, I think that's, if I were trading in that way, that would certainly be somewhere where I would look as an alternative to doing something like buying futures, because what you're doing is for everyone who understands how calls work and how options generally work, right? You can only lose what you pay for the option. So essentially what you've created is a more defined set of outcomes by buying, zero DTE calls that expire at the end of the day, instead of doing something like buying futures. It's a totally different risk profile to that trade, and the payoff structures is virtually identical to the upside, right? Especially if you're buying something that's like deep in the money or something that's like semi in the money, as far as the calls are concerned. So yes, I would say that. I would also say that if someone's doing that, they are also buying the commensurate amount of premium that exists on the put that's associated with the deep in the money call that they're buying. Right. So you also need to think about that, right? If let's say the market's trading 6,900 and I buy the 6,800 call that's expiring today, I am really actually also paying for the 6,800 put, right? Through put call parity, right? That's something that you need to factor into how you're looking at it. If you want to really look at that from a holistic perspective, you started this conversation by saying, the calls, people are buying puts and selling calls, right? That's something that's also you're going to see that come through in how the skew is priced. If there's a lot of people who end up doing that, because, right, those puts are theoretically out of the money puts. And so, and Mandy Zhu just came out with something, I don't know when it was, 10 days ago, talking about how SPX skew hit a 1-year high, right? Because of all the tariff uncertainties, et cetera, et cetera, et cetera, et cetera. You get the idea, right? It's not something that's, those two things are not completely, they are connected in some ways. I can't give you an exact metric as to how they're connected, but they are.
Yeah. And here to the point of that skew, you can see the risk reversal, which compares the 1 month delta IV of a 25 delta put versus 25 delta call. You can see that risk reversal rank is 0.4. we had the tariff tantrum, you know, is in the last year. So the skew there is indeed higher than even back then, which is pretty surprising to believe, even though the overall level of fall isn't necessarily higher. If you look at that put skew percentile, we're right there. It's 100 right now up here, which is pretty amazing given given everything. And that was on Friday before this Iran situation happened, right?
Exactly.
It was, you know, in hindsight, it's clear, and a lot of our members were saying, hey, how do you hedge the Iran situation or a war? And I was like, why do you think there's going to be a war? And in hindsight, I look like a dope, obviously, because it happened. But, you know, it was sort of signaled, I guess. But back to the point here. This is pre-market S&P 500, and then here the market opens. You see when the market opens, the options volume turns on, right? And the blue line is puts. Orange line is calls. Again, this is just for S&P. And so as soon as the market opens at 67, 75-ish, right, puts come for sale. If this line is going up, that's positive delta generated by puts. And so every options trade, we look at it and we assess, okay, did someone buy or sell this? And overall, the trend is sharply higher, as you can see, to the tune of about $2 billion worth of puts sold. That's unusual, but it makes sense in this environment. If vol, which, you know, VIX was around 25-ish at that open, you know, put skews very expensive, as we just showed, had to be even more expensive, or high, I should say, this morning versus Friday's close. And so it makes sense that people would sell those puts if they're not concerned about escalation or whatever it may be, or you want to monetize your position, et cetera. Now, the orange line is calls, and I think what's interesting here is you can see that call selling was very flat, and then around when the S&P rallied about 68, 50, you see the calls are now coming for sale. So my initial point on this is that this rally is unstable because arguably what happened here was puts came for sale. They could have been longs that were closed short or short period, but when you sell those puts and the market rallies, those put values go kind of towards zero, right? I mean, not all of them, but they certainly lose a lot of value, and that makes the rally unstable. Whereas if these were calls that were bought, those values would be arguably picking up and gaining in value, and there would be a little more hedging flow possibly related to those positions. So that's interesting. And if you want to just break it down to zero DTE a little bit here, I know there's a lot of lines on your chart, but this light blue line is the zero DTE put in this case, right? And then the green line is zero DT calls. Does that make sense?
Yes.
So what's happened here is zero DT calls are being sold as the market rallied, and that vol is probably pretty high. And then what's being sold here, and I think this is quite interesting, is it almost goes against my point earlier about do you lock in your deltas on a debt rate with using your DT instrument? Because what's happened today is it looks like people monetize their longer dated puts. That's what the spread between the dark blue and this lighter blue line is telling you. And I got into this because you were a big time trader at a bunch of shops, and I don't know about a bunch of shops, but you know,
I don't know about big time, but that's fine.
Well, you're very tall, so at least.
Oh, okay. We were referring to my height. Then yes, sure.
I think stature is important, but you know, I've heard through the grapevine that you're an excellent trader. So, anyways, the point is that when you look at that and you see something like those longer dated puts being sold, and I know that this is a fairly vague amount of information, but to me that's a pretty interesting signal, right? That
market's is not doing much of anything at the moment.
As soon as that market opens, what do you kind of take from that? What do you kind of take from that as a driver of market upside? Would you extrapolate anything or think about?
It's interesting. It's a kind of the first thing I look at the first thing I think about when I look at something like this is it's a kind of buy the rumor, sell the news vibe, right? Which in this case is the exact opposite, right? If you were to buy the rumor, sell the news in a positive way, right? You're buying stock before the actual event comes out, then someone announces something that's theoretically incredibly positive, and you sell your stock position right before whatever. This is the exact opposite, right? It's the buy the rumor, sell the news as far as the world is ending. And if you are able to see a situation in which instead of the zero DTEs being the like center of the put selling universe, that it's like farther out in the duration curve, you should, theoretically start to think about the fact that those have commensurately longer and longer dated options and thus have more vega in them. And thus that is some sort of, that is some sort of commentary on what people think about vol more than just directional exposure, right? That it could be that you're getting into a situation where, people are looking at it and saying like, okay, well, maybe we put a pause on the VIX going to 38 now, and that's kind of how I would, if I were looking at this and trying to read the theoretical tea leaves, I would probably think about that as, as some sort of something you should pay attention to, right? And when you say they're, like monetizing puts like that, it makes a big difference if you're monetizing puts that you own that have like 12 hours in them versus 30 days in them. Those are two completely different risk profile options, and they're going to filter through to the market in a totally different way as well.
Frank says the world's ending. Who cares? All right. But I love what you said there because it's confirmation bias for me. Because this morning I was talking about, partial confirmation bias. I was talking about the fact that, volatility is an asset class now, right? It's a pretty big asset class, and there's tons of strategies.
All right, S&P continues to fade.
Forget just the casual, income fund or whatever. There's tons of sophisticated strategies that specifically target volatility as asset class. And I had made the case that at VIX 20 to
Looking for C and D pivots later in the day.
but if you get to VIX 30, just as a barometer.
It's 137 on the East Coast. We're listening to Brent Koshabar from Spot Gamma and Art Cash. Not Art Cashin.
Yep. But I flipped over here to the VIX call page, to your point, and a lot of what our video was last night was about trying to capture the energy of the market on the market move. And so
Matt Cashman. Matt Cashman
near its highs, which was roughly 25, right? And that's when those
of the OCC.
And that vol crush is pretty material. You can look at that. But the other thing that I thought was interesting on your point there is this horizon is VIX calls. So if this line is chunking down constantly, it's telling you that people just basically dumped a whole bunch of VIX calls onto the market. Whether they were long them or short them, we won't know until tomorrow. Writ large. But the 30-day range for this from a delta perspective, which gets a little squirrely, you're talking about VIX options, but $28 million of delta sold so far. That's not a record for the last 30 days. We've done as much as 35 million. So, but that's basically what happened, right? To your point, they monetized the vol. At least that's what this says. And then when you look at the S&P put selling, that's kind of what you got to, put that in that same category. I'd argue as well. So yeah, it'll be interesting if that was new flow or kind of rolling positions.
One of the other thing that's really interesting when you think about VIX options is that you're talking about options on it's Vega options on vol right. It's on variance on variance on variance is the way that I think about it. But I think you also need to make sure that you look at something like the VIX call skew, right? And think about what that looks like and what those options, like where those options are priced in vol terms. Because when you look at VIX call skew, and this was always something that when we first started trading the VIX as part of the index product, is we were just dumbfounded by the skew in there. And, Susquehanna had figured it out like 7 years before we ever touched it, all of the quants there. And it just, it's a crazy, it's a very sophisticated product. And when you look at what the skew looks like, especially in the front of the curve on those calls, think about what that means when you're looking at like a 200 vol, right? In those calls, because that's not uncommon to see things like that up there.
Yeah, so, I'll profess to steering slightly clear of this information of this topic because of general ignorance on watching the big skew a whole lot. And rather than say something stupid, I'll say nothing at all on this topic.
Okay.
Except for to say, that being said, there doesn't strike me as very much movement here. This is Friday's close in gray versus right now. This is the 4/1 expiration, which is 1 month, so that might be a little bit farther out of the curve in that instance. But kind of interesting that it's pretty much unchanged.
Yeah, for sure. I mean, market is really good at pricing these things now, whereas it didn't used to be quite as good at it, But yes, The other thing that I would this goes back to something that you said earlier, which is the difference between a VIX at 20 and a VIX at 30.
CRML. UAMY.
I want people to think about which one is harder to keep priced high. Is skew harder to keep priced high, or is at the money vol harder to keep priced high? And that can oftentimes be a really kind of instructive idea as to how you're thinking about, putting your positions together. In a situation like this, I would say, personally, from my personal kind of like back-tested mind data mining in my own head, it's a little easier to keep skew high than it is to keep at the money ball, because it's just less costly, right? Like those puts, yes, the downside puts are really expensive and, blah, 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 blah. But oftentimes people buy the puts and sell the calls, and you don't end up net paying out a whole lot of premium for something like that. Whereas if you have a straddle that's priced on a 30 vol in the SPX, you're going to be paying a decent chunk of cash for that thing. Now you also have, omnidirectional exposure if you're buying that thing. And so it works both directions, whereas the skew is, a very directional, a unidirectional play, depending on what you have on. But it also just costs less to put something like that on. And so, especially particularly in a situation like this, where you have kind of like geopolitical risks that are just out there, those aren't going anywhere necessarily. Right. It's not as if we just solved this Middle East problem and all of a sudden it's like, oh, okay, well, everything's fine.
4 weeks will be fine.
Yeah, it's going to be a persistent thing, but you might not be getting the moves that would justify a 30 or a 40 VIX, right? And so sometimes what you'll see is like the skew stays higher for longer than the actual at the money straddle does, because in some ways you have to kind of, you gotta make one of them cheaper than the other. Everything can't just be all expensive all the time. You know what I mean?
Yes, and that harkens back to the point of the Mandy Zoo from the SIBO, and we were just looking at the put skew, and it's 100, ranked 100, which means that in our measurement, the 25 delta put, so slightly out of the money put versus the at the money put, the spread in ball terms between those two is as high as it's been in the last year, which again is shocking given the April. I mean, I thought the world may end in April more than I do here today, at least the financial system, right? And so that was quite a time. But the overall level of implied ball is not really that high. Like VIX 21, VIX strike ball, look at that, it's not terribly high. And so I just want to drive home this point because I hadn't really thought about that before. And what you're basically
New York FANG components are hanging in there very nicely today. S&P bouncing. Just listening to Brent Kuchbar over at Spot Gamma with Matt Cashman from the OCC.
Extremely, there's a big gap there, right? The gap between the ball gap between those two options is as high as it's been in the last year. The bit of call skew is just really kind of in the relative gutter, I guess is what I would say here, right? No one wants calls at this moment. And then the overall level of implied ball for at the money is not at the all-time, or not at the 90-day high, I guess I'm saying, right? So, yeah, extreme put skew on the at the money, and then the calls are just, who cares, right?
Yep.
No one wants calls.
Yeah. Well, and oftentimes you'll see that, right? When skews move, they tend to kind of like tilt like that, right? What we talk about is what is called vol path. Essentially, it gets very steep because of the fact that, like what I said, I mean, it's sometimes it's easier to keep the puts more expensive than it is to keep the at the money straddle more expensive. And one other thing, in retrospect, relative to April, right, relative to the tariff tantrum or whatever we want to call it, Liberation Day, in that situation, what you got was the market was completely caught off guard, and you got massive underlying movement, right? That thing was moving.
Yeah,
it was
8%
not
a day or something. Remember, that was wild.
Yeah, what happened this morning? Like the SPOOs were down like 30 or whatever, and then they just rallied back. Like that's nothing. That's like a 0.75%. It's nothing.
Yes, and you know, we've beat this horse to literal death at this point, but the effective range of the S&P since really Thanksgiving, and I know this is not the best chart quickly, but we entered this range. This is 6,800 here at Thanksgiving. We had a little dip after Thanksgiving, but we're essentially in the same range now for, I don't know, 3 months now. We've just been bouncing off this level, but the put skews remained extremely elevated. To that point, this is the 10-day change of the, and I know it's a little hard to read, so let me try to show this in a way that you can actually view it. But if you look at the history of the spiders, right, the risk reversal call it, difference between the put and call heavy, this is the 10-day range. It has not moved from this lower left corner. In other words, these puts have been relatively bid for the last 10 days in a very tight path. Like STX is just some random stock, right? That's whipping all over the place, and single stocks are moving. But S&P has been, okay, puts are elevated and they're stayed there, which to the point, someone's pinning those things up there, and that ball is not really coming in, which is quite interesting.
Yeah. Well, also think about what, you know, not to beat the dead horse again, but think about what April of last year, what your P&L looked like if you were long at the money options.
Yeah.
Right. I mean, you were monetizing those 3 and 4 times a day, right? Like down 100, up 100, down 50, up 50, up 100, down, right? I mean, it was intense. There was a lot of movement going on. And so it was easier to keep things more expensive then because people were actually like making money scalping it. In this situation, it's a totally different underlying movement profile.
100%. We've been jammed in this range, and just to put that back into context, this was the VIX back in that period, right? So for these,
there you go.
The same. I've actually run some technical analysis here on the VIX, and
how's it looking as far as your technical analysis, Brett?
It gets people angry, and what I found is that
That's
I
always
used
a
to
good
sort of been like, you can't do technical analysis, and then I find that I get more enjoyment out of doing technical analysis just to agitate people.
Yeah.
Well,
The old what is it that Kara Swisher says? Enragement equals engagement.
There's some truth on that point. Do you have anything spicy to say?
It's what the entire social network is built on. It's our entire lives at this point.
That's so funny. Okay, we have about 10 minutes left, and I wanted to drive you to ask about a point on options trading into these movements. This is fixed strike vol, and I think a lot of people hear that and their eyes glaze over, but this is just the strikes on the top, the expirations on the Y. And what I'm looking at is the change in volatility from Friday's close to right now for the given strike on the given expiration. Pretty simple. Interestingly, it's all higher, and I say that's interesting because the S&P is now flat, NASDAQ is flat, VIX is up fine, but obviously you have the war, which is not is a non-trivial thing.
Yes.
You know, but the vols they're up just a really pretty, I don't know, marginal amount, I would say. These were about 2 points wide, or 2 points of change, right? And the reason I think this is interesting is because I can't tell you what these vols were this morning at their highs, right? But if you owned a call this morning on the open or sold a put this morning on the open, irrespective of arguably the S&P move itself, your long option probably lost a lot of value, right? Generally speaking. Now, if you bought the zero,
hold on, your long option lost a lot of value from what? From the open until now?
Yes.
Okay. Yeah. Okay. Fair enough.
Now, you could have bought the 0DD call perfectly, market rally, 50 handles, you made a bunch of money there. So I understand that there's, you need to put a bunch of asterisks on that. But the reason I bring it up for this, and then maybe it'll be like, Brent, that was such a ridiculous statement. In the calculator here, and I think I explained this last night, or I tried to do it on the fly, and I don't think I did a great job. So I just want to bring this back up. Or if you look in the founder's note this morning, we mentioned this. I think a lot of people go, especially at 7 o'clock in the morning, people are like, Brent, what are you talking about? But the argument I made here is if you want to play upside, I made the case that outright calls are expensive. So I wanted to caution it still is recommend call flies in this instance. They can call spreads will work better because of that ball coming in, right? So as a lead options educator, you are going to, I think, explain this in a much more eloquent fashion. I'm going to load in a short dated option in here.
Okay.
Let's just say 5 days or 3 days expiration. So let's say you came in this morning, you're like, hey, this is gonna bounce and I wanna play that, so I'm gonna buy some calls, right? So we'll buy the 6,900 call this morning. And
with the futures trading where? Or with the index?
they were at 6,800, so that's 100 points.
100 points out. Okay. 5
Now
days.
the ball for that option was probably a good, I'm gonna say 5 ball points higher for that very short dated option.
Okay, fair enough.
Argument make, all right? So we adjust the skew here in the calculator such that the teal line is the current implied ball, which is probably fair for where it's been and where it's gonna be for the next couple of days, I would argue. And then this is where that ball was this morning. And the reason this matters is because if we just wind this up now a little bit and say, okay.
New York Fangs are still hanging in there. Apple's starting to see some profit taking. Apple,
And this may be a little bit of a challenge for y'all to see this.
Microsoft. All right, we're starting to see a little profit taking. People getting impatient, I think.
You're wrong on this view. You didn't say it the right way. Okay. People want the right answer, irrespective of Frank's ego.
All right.
So S&P is here at 6,800, and there's 2 lines on this chart right now, right? There is so let's say the S&P rallies up here, 67.75. If the implied ball stayed where it was, 5 ball points higher, right? The P&L of that option estimated at 6,880, right, would be 500 bucks. Okay. That all declined, as we know, from this morning. So this is actually a loser of $250, which is the yellow box. Hopefully you guys can make that out okay, right? So when you are in these environments, and I think this is a tricky environment because you go, I bought the call because I knew the market was going to bounce. Market's up 70 handles from this morning. I lost money, right? And it's one of those gotchas that I think is hard. There's like a tough heuristic here where my point is go with the put fly, call fly. Maybe you could have gone call spread, right, and offset that. But can you explain a useful way to think about having to, or when you need to offset that volatility cost, in the loss of value because that IV contracts versus, so you made money on the delta exposure, I suppose, and then I don't know if I'd really want to necessarily call that Vega, but the implied ball comes in on this very short dated option, and you kind of pay the price there, right?
Yeah. Well, I think about it when you describe that to me, I consider this what I would call kind of underperformance of the vol. And the reason why is because theoretically
S&P in a range.
You assume whenever you're buying or selling anything at any vol that you're expecting a certain amount of performance out of it, and if you get up to the strike where you thought it was going to be profitable and it's not, the market the vol underperformed what the market did. And so oftentimes, I mean, let's be real. When you walk into a situation like that, and for a long time when I first started trading, particularly index options, I was always really confused when I would walk into the pit and there would be like mass chaos, and the people who I eventually understood to be like fantastic index options traders would walk into those situations and they would sell everything, right? They would like walk in and just kind of like indiscriminately just like launch everything, right? And I was always just like, what is going on? Like, you guys are crazy, right? And part of the reason why they did it is because they had access to all of these different products where they could buy stuff back in differing ways, and they were buying stuff cheaper in the SPYs, and they were like whatever, and so they were able to replicate the actual vol, and there was a premium associated with the SPX, particularly where they would just launch everything in the SPX on the open, and then cherry pick their way into buying things back to, as the vol started to kind of do this. The only time that I really see in situations like that where that doesn't work out well is when you get an incredible amount of underlying movement, right? Yeah. You did the same thing on the open during the tariff thing in April of last year. You absolutely got your face ripped off, right?
Yeah.
Because what you got was this underlying movement that was like not modelable, right? People didn't expect it. And thus what you got was options that outperformed their actual modeled vol.
Right.
So what you're seeing here is underperformance. In that situation, you see outperformance. And it just, if you have any kind of inkling that this thing might perform in the way that it's modeled right now, chances are you're probably not going to get a lot of bang for your buck out of buying an elevated vol, right? When
Yeah.
you're walking in, if everyone's like sitting there waiting for the VIX to explode, chances are the VIX isn't going to explode, right? If everyone's just like watching it, like, is it going to explode? You know? I mean, it's, if everyone's looking at the same thing, right? The watch pot never boils. It's like, and so that's the way that I think about it. But I always think about those things in terms of outperformance versus underperformance relative to the skew and the level of implied vol just generally, right? That's how I kind of contextualize it always.
So if you're coming in this morning and what I think is interesting, I want to do one or two things. Number one is the market has this resistance line above it, right? And it's you know, we're showing the chart here, right? Like it can't get over 6,900, and I, whether or not you think it can, fine, but the odds of us saying, well, the war doesn't really matter, so that's going to open up a new high in the market, probably pretty low, right? As opposed to the downside, which, well, heck, that is, there's uncapped downside if things escalate and God forbid the wrong ways, right? So in the event that the S&P rallied here, vol would almost guaranteed to come in, stay at or under where it was. Whereas in the tariff situation, you remember we're up 8%, so all up, and so totally to your point, and that's the context, I guess, that is really critical here. But what would you look at? You know, you come in, you're a retail trader like always here, and you just say, this is how I know that the vol is probably too rich versus too cheap, and I need to worry about call spread, call block.
All right, we're pushing a bit lower, S&P.
An Ivy rank or something like that.
All right, all the New York FANGs were up. They're starting to fade off the high. Apple, Microsoft, Nvidia, Netflix, Meta, Google, Amazon, Broadcom. All right, they're all starting to fade now.
Previous, you know, is delivered vol versus implied vol, right? Like that, if you ask me that question, that's always how I'm going to answer it. It's not a perfect way to evaluate it because one of them looks backwards and one of them looks forwards, right? Delivered vol, historical vol is what has happened. Implied vol is what the options are pricing going forward. But I always, you know, especially during my relative value trading days, we're just constantly looking at implied vol divided by, or, you know, like delivered vol essentially, and looking at what that ratio always looked like. And I was always comparing the 10-day option to the last 10 days of delivered vol. And if you're looking at those things and they're like, you know, the ratios are like 1.5, right? You might want to be like, maybe it's not, like, maybe the implied vol is a little higher than it should be because we're just not getting the same amount of delivered vol out of this thing. It's just not moving the way that it's priced, and it has to kind of like have a certain amount of premium built into it because of all of the geopolitical risks, but the thing's just not moving, you know? And that's one of those things that's like, I don't know, bro, like, do you really want to be long vol here? I mean, yes, but maybe not. I don't know. I mean, and so that's the way that I always looked at it. I always looked at what is the ratio of implied vol divided by delivered vol? Is that, you know, ridiculously high? And if it is, I would always kind of be like, maybe I should go look to buy vol somewhere else, right?
Yeah, I love that simple heuristic. And you know, here's the implied vol, or excuse me, realized vol of the S&P. 5-day realized, 1 month realized, 2 etc. They're all at 11, 12, basically, right? And then you go, okay, well, VIX is I know VIX is not necessarily the perfect measure for S&P realized vol, but it's at 22, so that's 10-point spread roughly there, right? Which is really quite wide. Market bounces, it's going to close basically unchanged today. These realized vol metrics are going to reflect essentially nothing happened
Exactly.
which is
Even lower, they'll be even lower tomorrow, than they are.
which is really quite a fascinating thing. And then you can also come in here, and I thought this chart was interesting. I haven't looked at it recently, which is what you just made me think about. But there's 1 month implied vol versus 1 month realized vol, and so everything should be kind of on a perfect line in a perfect world, right? With these two, but you can see where the vol is priced in a little bit high. So realized vol is 50 for gold, but implies 30. Weird. I don't know. Oil is at the opposite side. Oil is pricing in more kind of Armageddon. And then Spider, you can see right there. This is the 1 month option. So if you're trading weeklies, you have to adjust that a little bit. But that's not really that much of a spread, to be honest. I mean, this is on Friday's close, but I don't know, 4 vol points, I guess is. But that's the kind of thing I think that a nice little chart would be a little bit easier. But
yeah,
Markets continue to fade a bit.
To be honest with you, when I was looking at this stuff actively, I constantly
We're back below
single option tenor
in the red, back in the red again on the S&P futures.
TE options, or I had to think about it for an everyday expiry. But I had
Still a pretty impressive move off the lows from last night.
always up on my screen, and then I always had the actual, the ratios of the 10-day to the 10-day option, and the 20-day to the 20-day option, and the 50-day to the 50-day option. I'm just kind of always looking at those things to look at how and exactly kind of like this for everything that I traded. I always wanted to know, where are we relative to how much things have moved? Now, obviously, there are situations in which, it doesn't matter what that says, because, a new paradigm has, right?
Yeah.
A new vol regime has come upon us, and none of that matters. And that's the art part of this relative to the science part, is understanding when that switch gets flipped.
Right.
Like I said, you are looking at something that is backward looking versus forward looking, and you're trying to make a decision about what to do right now. But for lack of a better tool to be able to contextualize what things look like, I can't find a more simplistic or a more distilled tool than implied vol divided by delivered vol.
Yeah.
It's
That's
just
the top of funnel idea to the point.
Exactly.
Like if they put every naval vessel in the U.S. Armada in the Gulf Coast, in hindsight, again, well.
Yeah, I mean, then everyone's going to look around and be like, well, vol was too cheap. Well, yeah, of course, right? World War III, yes, whatever vol you have is going to be too cheap, but it just, right, within that top of funnel you're talking about, if you're looking about a little bit more granularity, it's a way to do that and be able to distill some of that down into something that's easier to look at and think about.
Yeah, that makes a lot of sense. So just back to this idea to close off this. So the vol contraction in this instance cost you, you think you make money, you lose. And then just to round this out, if you add in the short option leg, just to see how this would offset, and again, it's not a perfect simulation, but hopefully it drives home the idea. And so you go 69.50 on the.
All right, we're trying to bounce. It would be lovely to see a bullish close today.
But now you are getting
starting to bounce.
Offsetting that vol contraction, such that now
it's 2 o'clock, 2:04. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're just listening to Matt Cashman from the OCC, Options Clearing, and Brett Kuchabar from Spot Gamma, chatting in the background.
So this again goes, I think, some ways to the art of trading in some respects, because there's a balance there, and if you don't have an incredibly sophisticated volatility model, it's like, how do I weigh this out? But it's critical, because I think this is a morning probably where a lot of people bought calls maybe and they didn't make anything, and that is one of the most frustrating things in existence as far as I'm concerned.
Agreed. And that's when most of the kind of rhetoric that this whole thing is rigged and all of that, right, comes out, and people, I do want to drive home the point that as a market maker, there's a reason why market makers reach to hedge optionality with other optionality first and foremost, right? The idea of hedging like with like is really important because of things like this, right? You look at what this would have looked like if you had just bought calls and sold futures against it, right? You would have gotten absolutely hammered versus buying calls and then selling other calls against it, right? You get a little bit less hammered. And the reason why is because you're trading optionality and then hedging it with other optionality. Like you're buying an option, you're selling an option. And that's why you'll see market makers reach for that first and then the futures second, unless what they're trading has like pure directional exposure, because of the fact that like hedging optionality with other optionality it's just cleaner, and your Vega exposure, regardless of the duration, is going to be less than if you were to hedge with futures, right?
Yes, and I think that's a fantastic place to kind of, I think, bring home the final point here, is that when you have the situation now where you have a lot of exposure to the downside, right? And if you're a market maker and people are buying puts, right? I'm concerned about the war. I'm going to buy puts, and that's selling me puts left and right. There's no way for you to protect yourself there with futures. If I'm piling what I say convexity on top of you, you can't hedge that with a linear hedge like futures, right? And I think a lot of people don't quite understand this. And so the way that you would do this is you would buy or own in your inventory teeny puts that 99.999 times out of 100 offer nothing to you except for a carry cost. Yep. But your risk manager will come to you at the end of every day if you don't have those and be like, you're out of business. You know, if we move 3 standard deviations, you're out of business. We're not going to let that happen. So you got to own these things. And then when vol really spikes, that adds P&L to your portfolio. And I would argue in this environment sometimes, when then you get VIX 60 or 80 and these little teeny puts are paying off like crazy, then maybe you can offer liquidity to the market because you're generating P&L, you can get more stability in the market. And then maybe that's why there's such strong links to super vol spikes and bottoms in the market, because this liquidity provider can kind of come in because their hedges are working so well, and that allows the market to turn around. But you have to carry net long options is essentially the way that I guess I would say it. Please correct that as wrong, because if you don't, you go out of business on a multi-standard deviation unexpected move.
Certainly, yeah, it's certainly one way to look at it. I mean, I tell this story an awful lot. There was an old O'Connor guy who, when I first started trading soybean options, took me aside and was like, if you really want to trade these things in good size, like in big size, which I'm getting the idea that you do, you need to be going into your position and buying 3-month strangles that are way out of the money, and buy like 5,000 of them in 3 different accounts and stick them in there. And then every 3 months you have to roll them, right? For the next 3 month, 5,000 lot strangle. And he was like, it's going to cost you a lot of money to do this. And the one time that it saves your ass, it will actually keep you in business for the rest of your life, you know? And he did that because, you know, he said that to me because he was a commodities trader who had traded commodities like that have a very specific volatility profile as far as how they move. And he knew that I was coming over from the single stock and index world and was like, listen, bro.
Nice little bounce.
Different than
About to go back to green on the day.
to have some units on your sheets, right?
The New York Fangs are starting to bounce as well. Remarkable recovery after being down 175 points on the futures last night. Here we go. We're ripping.
Right. And so now this is, you know, not a recommendation to do that, but that is in many ways how I ran my book for a really long time, you know, and that's like, it saved me more than once. I can tell you that for sure.
It's a great story. It makes me think of Captain Condor, who does basically the opposite and gets blown out, or like a Universa fund, I think they're still around, where they buy those options and maybe they got to carry them for 2 years, but when that event happens and everyone's crying, man, they're like, yes,
yep,
we're buying new yachts.
Yeah, exactly.
It's hard. It's hard. Everyone likes those negative skewed payouts where it's like, hey, I'm going to collect a dime every day. Look at me. I feel so good. And then, you know, out you go.
Yeah, exactly. And then you get carried out, right? Like kicking the trash can over as they pull you off of the floor by the nape of your neck.
Yeah.
Trying to sell more puts on your way off the floor.
Yeah,
right?
one more week, I would have bounced. It would have bounced, and I'd have been fine.
Yeah, 2 more days. That's all I needed. Yeah.
Well, before we wrap up, we've taken now more than your time than you allocated us. So thank you so much. If you're interested in Spot Gamma stuff, go to spotgamma.com/Flow Patrol. Type your name and your email. We'll send you our Flow Patrol report for the next 5 days. Matt's not allowed to endorse anything, but if he was, I suspect he'd endorse this report. I suspect it's all hearsay. Please don't respond to that, Matt. I don't want to cause any problems.
I love it.
But I learned so many things today, so thank you so much. I actually got a page of secret notes I was taking down here with my
Nice.
my S&P pen, my SPX pen.
Oh, all right. I love it.
Yes.
Well, I'm always happy to be here and to help in whatever way that I can. My whole idea is that I hope that I can leverage some of all the horrible mistakes that I made trading and try to make sure people don't make them going forward on their own. So.
Yeah, we're gonna chop up the opening segment about the zero DT options or Monday, Wednesdays, whatever. We'll chop that up into a separate segment too, because that was just some great, information that everyone should be aware of there. And Matt, you put out tons of education, tons of webinars. So how can people get a hold of you, or should they go for all the things Matt Cashman?
Yeah, so I write a bunch on LinkedIn and a little bit less on Twitter, but the main place where you can find the options education is optionseducation.org, which is our website where we host all of our educational resources, and they are free of charge and on demand because we are fully funded.
Nice bounce. Back to green on the day,
We
barely.
never charge you for anything. All you have to do is create a login and a password, and you get access to all of the options education.
Okay, there goes Amazon,
What I talk about,
Apple,
about it, there's gonna be
Netflix, Nvidia. These are all turning. New York Fangs are turning.
And I'll plug your calculator there, because if you really want to shift the Greeks around and see how it changes an options price, it's great. I mean, Spot Gammas is very good, but if you kind of want to get feet wet with the basics, the options calculator is amazing. I didn't know it was there for forever. I was always looking for it. When I found it, it's like the OCC.
It's definitely our most used tool.
It's great.
It's our most used tool, and it's a fantastic, and it's a very simple calculator, but it's a great way to learn how things work when you start moving things around.
Yeah, 100%.
Check it out.
Awesome. Well, thank you again, Matt. And I'll be seeing you at the OCC conference, excuse me, I think in May.
Yeah, in May.
We'll try to do something a little bit before that, maybe.
All right. I'll
All
talk to you guys soon. Thanks for having me.
All right, that was Brent Kuchabar from Spot Gamma and Matt Cashman from the OCC. S&P, nice little bounce there. Nice bounce. Let me see what I want to do with Netflix. Netflix, let's see. New York Fangs looking good. Okay. Netflix NFL. Is that 2 times long T-Rex? 32. NFXL is another one. NFXL. About the same price. NFXL. Looks like Netflix wants to hold this level. I'll look at doing something again tomorrow. Let's see how it opens tomorrow. If Netflix can follow through and get into this Kirby overhead over here. I'll probably add to a position. Netflix. It's got to get in that area there. Netflix. Okay, that should be good. Netflix looks like it wants to go.
HIMS.
Hi, Tick Alert plus 800.
High tick alert. There we go.
OWL. BATL.
Okay, nice little rally there. Yeah, nice follow through here. S&P on the move. Wow, nice pop there. Nice pop back into the range. How far are we going to go with this? S&P right through this level. S&P 500 right through this level. Wow, pretty impressive. Look at the volume.
HIMS. BATL.
S&P. All right. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're coming into the last hour and 40 minutes of the trading day.
BATL.
Looking good. Looking good. Sing it, Janice. All right, we're flagging up at the high here. Okay.
Unusual option activity in here today, and this was in the June monthly options, but these were deep in the money calls. This is on the 150 strike call, so high delta,
High
really
tick
deep
alert
in
plus
the money.
800.
Traders
High
lost
tick alert.
87,000 of the June 150 strike calls, paid an average debit of about $38.58 per contract on those. So the break even where this trader starts to profit is above 188.58.
High tick alert.
The next 108 days. That's only about 3.5% above the current share price in NVIDIA. So buying deep in the money calls, you're paying a hefty option premium.
but with the expectations that we're going to see a continuation of this rebound that we've seen over the last couple of sessions in there. They did sell out of a long position that they had the March monthly options that expired about 18 days. They were long the 160 strike calls. They sold out about 90,000 of those and reset their position in the June monthly options, but they actually went down in strike down to the 150 with the expectations, hey, that we're going to see some more gains.
All right, continuation, S&P. There you go. S&P on the move.
Overall, tech is oversold. So, but another guest of mine did not want to bite on tech, just yet. Let's talk about Uber here, which has been in a downtrend off its $101 high since last fall. Some of your thoughts on the trade you found today?
Yeah, stocks in bear market territory since hitting those all-time highs in November. We're down about 27% from those levels. They did introduce a partnership with Joby. They're going to use the Uber Air, which is supposed to launch later this year in the Middle East, in Dubai, where they're going to give all electric air taxi directly from.
Yeah, MACD is pretty nice, eh?
One of the concerns I think
Continuation.
moving forward is they have partnerships with about 10 to 12 autonomous companies across the globe, where they're going to try to use the technology that Uber has. Their app is one of the best, their algorithms one of the best, to partner with a lot of these robo-taxi firms. But if you listen to what Waymo said recently, where they partnered with them in a couple cities with Uber, but the new cities that they're launching in, they're not partnering with Uber. So this has been a concern for a lot of investors, because Uber needs that partnership moving forward. Even though you saw spectacular growth the last couple of quarters, 200 million monthly active users, engaging 40 million trips on a daily basis. They were growing double digits as far as revenue, over 20%. So pretty good quarter, but there are some outliers out there, and that's maybe why you've seen the pullback here a little bit. But we did see some bullish activity in here also, and this was on the April monthly options. So about 46 days to expiration, where a trader bought 2,700 of the April 80 strike calls, just out of the money to the upside.
Looking for Palantir to continue over the next several days. Palantir looks like combination of shorts covering and nice follow through.
So this trader's betting that we're going to see some in Uber over the next month and a half, and maybe this 27% sell-off from those all-time highs is not warranted, and they expect a reversal here.
Yeah, and look, it's been trying to climb back. Yeah. I'm curious to see if Lyft has been trying to climb back too. A little more flat lately after a gap down. Let's talk about Oracle. Your thoughts here?
Yeah, shares rebounded today, up about 2%. Remember, information technology and software, IGV's up over 1% today. So we're seeing a rebound in some of these software names that kind of got lumped into that sell-off here. Now, Oracle's not a pure software name, right?
Okay, let's look at a few of the stocks on the watch list. Netflix, obviously, looking for that follow-through. It's into the Kirby. Netflix. This Kirby over here on the left. The gold stocks taking a breather. AEM, Amazon, still basing Amazon. Baker Hughes, Constellation Energy, CEG. Trying to get through the 200-day. Constellation looks like it will. Chevron took some profits off in the first few minutes of the trading day on this pop over here. Starting to turn back up, so they're still buying. Chevron, no reason to think that this can't continue. Back above the 20 EMA. We came down, almost touched it, turning back up. So this looks good for Chevron.
In this AI future, to say the least. Now, we did see some bullish activity in here also, but this one's really short-term positioning. This is in the March 6th weekly options that expire in just 4 days. Trader bought over 5,000 of the March 6th weekly, 155 strike calls. Paid an average debit just under $2 for these calls. So the break even, where this trader starts to profit, is just below the 157 level over the next 4 days. That's about 5.5% above the current share price in there. So a lot of bullish activity today, Nicole, on
what looked like was going to be a bearish day, but yeah, this trader thinks that Oracle is going to rebound also. By this trader.
It was a 90% down day, and we've really seen a rotation here, and many of the sectors, in fact, have up arrows at this time. And you gave us a few bullish ideas here as well. Tom White, great to see you. Thank you so much every day for Options Corner. Coming up, we'll take a look at the state of the U.S. manufacturing, looking at the latest report from the ISM, everything you need to know. The watch list. We'll be right back.
Kick off the morning with the data and moving markets. Morning Trade Live breaks down the macro moves driving the price action from Fed policy to global growth.
Okay, so
And geopolitical
with an hour and 30 minutes to go, basically, we've got 1-to-1 up volume on the SPY, 1-to-1 on the Qs, the Dow Industrial Diamonds, 2-to-1. New York Stock Exchange went from 1-to-1 down to 1-to-1 up. NASDAQ Composite 1.5 up. And IWM almost 2-to-1 up. So market's looking pretty good. Nice follow through.
Moving averages, oscillators, and much more. Best of all,
RKT.
directly to an education coach. It's interactive learning. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I
Bitcoin taking a break at the highs. Maybe we get a follow through into tomorrow. Bitcoin.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education.
Apple back up to the highs. Apple back up to the highs of the day. Apple. Okay, we're above the 50 day, so we get a follow through tomorrow and maybe retest 276. Short term, that'd be nice. Apple, Nvidia, hanging out near the highs of the day. Bullish engulfing candle on Nvidia off the 200-day moving average. Tesla on the 200-day. Pushing off. Can we get back to the 50-day? Futures look like they want to go here. Futures look like they want to go.
These indices have been to the downside. The S&P was down 2%. The Dow was down a couple of 100 points. The NASDAQ as well. Look at this. We've bounced back into the green here at 2:28 p.m. across the board. All of arrows. Of course, be nimble because anything can happen at this point. Also, we'll take a look at a few market movers. Apple higher after announcing the new iPhone 17e.
Imagine if the powers that be in Iran were to surrender and there'd be potentially peace in the Middle East again. Imagine if that happened. What it would do for the market. Conversely, if there's more conflict there, I mean, we could test 60. Here we go. High tick alert again.
Let's look at the cruise lines because Norwegian Cruise Line, for example, is down 12%. Posted mixed fourth quarter results, lower the full year guidance.
Extreme high tick alert.
Extreme high tick.
Execution and cross-functional alignment have fallen short. Of course, on a day like today, all of the cruise lines, airlines, they all started off in the red. Uncertainty about where they can go and not go, coupled with the higher oil prices. That's never good for truckers, shippers, airlines, cruise lines, etc. All right, joining me right now, looking at manufacturing. Let's do a spotlight there. Susan Spence with us, chair of ISM Manufacturing PMI at the Institute for Supply Management. Nice to see you again. Thanks for being here. So, some of your latest thoughts on these manufacturing numbers that came out.
So
pretty excited to see we have held an expansion for a second month in a row. Structurally, we still have the tariff uncertainty, and we feel that new order flow aren't going to continue in earnest on an upward trend until customers of our panelists feel more
Extreme
comfortable
high
ordering
temperatures.
for a longer term than just a few months at a time. So the demand indicators held in expansion, lost some, but still above 50. That's great. I think the big surprise to a lot of people was the price index taking an 11.5-point jump. So our indexes are diffusion. It is not equating to PPI or CPI, but the uncertainty of tariff demands, suppliers indicating that they are going to charge more. Our panelists are saying overall a far greater share number of them are seeing higher prices in February. So the good news remains that 4 out of the 6 big industries making up 72% of manufacturing GDP are in expansion. Ironically, petroleum and coal products are not one of them, but fully expect that to change given what's going on over the weekend. Sentiment, we were happy to see demand sentiment is still strong as it was last month. For every 2 people seeing strong demand, there's only 1 that doesn't see it that way. The overall hiring versus managing or firing sentiment is much
Look at the volume.
since last summer. We haven't seen these numbers for every person hiring.
Look at the volume.
0.4 or not. We'd rather see that reversed, of course, but it's
Lots of volume here.
4 as it was in the late summer.
MACD's flattening out now.
So what we need to see, of course, is
Was that capitulation, extreme high tick? It's hard to say.
via the Supreme Court.
Got a lot more stocks going green. A lot more stocks are going green.
Back in either Section 232, as it has for aluminum and steel, cars, lumber.
Okay, 276 stocks advancing, almost 50 on the Qs. This was down in the toilet earlier. It was like 100 stocks advancing. We're almost at 300 now, S&P 500.
Piece of it has been decided now. If the orders flow, I think we're comfortable that we can stay in expansion. And finally, the employment index, still in contraction, but a little better than last month. We need that to continue to creep toward expansion, and we think that it will if the order flow is coming up.
You know, I mean, it sounds like at least we got some glimpses of good news. So many times we spoke, there was a lot of underlying, sometimes the headline might appear better, but in this case, the labor picture seems to improve from the last summer. You know, there is demand, but we should brace ourselves for inflation, right? The demand and manufacturing numbers in a year from now, do you think this means good things for manufacturing and our economy? How do you interpret it for a longer term?
Well, I want to remind folks, overall, we still have expansion. Anything above a 47.9, I believe, is our BRIC figure. It can stay that way, but we need, again, certainly these customers need to see more certainty around what is the administration going to do via an economic policy. Will they continue to look for ways, in their minds, in their words, to punish the U.S. for decisions that are being taken that may be more of a negotiating leverage, but the ability to resource to a different country, it does not happen overnight, as we know, and so we're hoping that the customers will stay flexible and not make rash decisions based on what has been going on just in the last 8 months. So we're looking for demand to come back. Our panelists were pretty optimistic in December when we did a semi-forecast. They do expect a revenue pop of an average of 4% across the sectors. We hope we see that, but it's got to come in order flow.
And when you talk about the different industries, I mean, you were mentioning commodities like steel and aluminum and all that, but you had here some of the areas of growth.
Not a bad recovery.
And metals and
Down 175 points. We're up 20 now, pushing a bit more.
You know, we focus on all 18, but really the big 6, and in my mind, especially when you see chemicals.
We have an hour and 24 minutes to go. Hour and 24 minutes to go.
But that's without any real physical damage and only insurance damage. But if you get to a strike that actually takes something out,
and people see on TV, traders are starting to see flames on TV, it always changes. It doesn't always have to happen on the first day. It's about how long does this last? So, and what is the Iranian capacity to lengthen this conflict and to continue to inflict damage? So far, they can inflict damage in the Gulf. So we'll have to see about that.
Yeah. So let's very quickly, I want to end with the Strait of Hormuz. I know we've focused a lot on this, but you would agree.
Let's see if they can run this higher.
This is the critical choke point for not just oil. And I want to be clear, it's not just about oil. We're looking at a live map, all little red dots and arrows. Those are oil, gas, or chemical tankers. It's not just a choke point for oil, as you know, almost.
Tick cumulative is green. It's rising. We got about almost 300 stocks advancing now.
Of the world's chemical fertilizers, ureas, phosphates, whatever, they go through there as well. So people, it matters a lot to eating. So if you were still in the White House, what would the recommendation be to get this flowing again? Would it be some kind of U.S. naval escort through it? Would it be try to get the insurers to agree to something, some kind of a multi-day potential ceasefire? How do we?
All right. S&P looking really good here. S&P.
So it's a great point because that's what I'd be watching right now really carefully. That's what we did ahead of the Russian invasion when oil prices, increased, or after Libya in 2011. I think you have to look at a couple of things. One, right now, the Iranians cannot close the Strait of Hormuz physically, but you don't need that. You need the insurance companies to not put a ban on traveling through. So I think I would look.
All right. So futures trying to go some more here.
If you're going to be blocking,
Trying to push.
30% of oil flow worldwide, right?
This is 6,900 now. 6,900.
Alternatives to put pressure on the insurance companies, other financial guarantees that I can work with.
Didn't think that was going to be possible.
To be able to get them to start moving again.
6,900.
I need to get momentum that at least.
Let's see what Trace is saying. Okay, so we're taking this level out right here, 6,900, 6,905. 99 percentile.
We put some air defense against missiles and UAVs specific to that area. Just like we're defending our bases, we should be defending that choke point. So I would start looking. I wouldn't implement anything today. I'd wait a couple of days and see how this develops. But if I have to, don't wait too long if you're the White House, because if the market decides this is going on too long, that I have a physical shortage in the market now, this could be a runaway train that goes from, oh, it's only up a couple of bucks to it's up $25.
Mistake, Amos, to I won't use the word drain, to not have a bountiful SPR right now, regardless of whom was responsible for that decision?
I was responsible for that, so I take full responsibility. I think it was the right one. We had a war that was going on, and oil prices went to 122, and we were about to go back into a deep recession as a result. And it worked. Oil prices went down to below 100 and ultimately to 85. There is still plenty of SPR to be able to do a release, and we purchased back a lot. And I think that we should continue purchasing every time price is low. I think we have plenty of SPR, but you have to use it in the right way at the right time. Responding to 20% of the market being off because of Hormuz, the SPR is not built to do that for long. So I would look at other options to be able to do that.
Okay, we got an hour and 20 minutes to go. Can we push this a bit more?
Using that to augment that when I need it.
We're at 6,900. You'd expect to see some resistance here. Right there, 69. You can see 99 percentile. 97 million trading right at that level.
We sold at 95. We purchased at 76.
You're sure we're not going to? I still don't. Are we going to regret it? I guess I don't know. Maybe it's too late now. I don't know what else can we do. Can we force?
All right, we're off of that. We're trying to push through this level, 6,900.
Yeah, thank you. Really appreciate it, Amos Hochstein joining us there. Bitcoin, Ether, Solana, all moving higher. Jan Van Eck is coming back. We're going to talk crypto right after the break.
Okay, watching for a follow through.
sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vitus and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides. Lucas Downing is with us, co-founder of MoneyFlows.com. And we think about what's going on in the world of chips.
A little fade from the high for now.
They're out. I mean, it's been a wild ride. NVIDIA really gave us a nice number, not only for the quarter, but also for the outlook. I mean, people...
60 minutes bullish. Looking for a push through 6,900 would be nice.
Yeah, it's good to see you, Nicole. 2026 has been one of those great years where you get indices that are basically flatlining, but you have a lot of stocks under the surface that are just doing tremendously well, and it's just no longer this Mag 7 story that everybody has grown to love over the past few years. So we wrote a piece talking about what's happening in memory and storage stocks. I know I've been on your show months ago. We were talking about this, but you know, at Money Flows, we focus on where the big money has been going, and it has been literally nonstop money going into Micron.
All right, S&P pulling back.
SanDisk, and also Lam Research. And when you look at the fundamental drivers behind it, right, we know that there's a big bottleneck that is happening with a lot of the chips based on all the AI demand.
Oh, boy.
Estimates especially continue to go higher and higher. And so as long as earnings continue to be on the high end, and likely they might even be lower than what they will come in at, when you have a bottleneck for over the next 2 years, these stocks are priced to go higher and higher. And so we continue to like this theme into 2026.
Micron, SanDisk, Lam Research. How different are they from one another, or is it just a group thing? I mean, which one's the best, and what do they offer that's different from the other? Why do you think these are the best plays for 2026?
Well, I think Micron really kicked everything off back on their last earnings call, where they basically said that, listen, demand is extremely high right now. There's a big shortage. And that's when earnings really accelerated from the estimate side. And so this went for not only this year, but also next year. So they're kind of like your major player, and you tend to have these big boom bust cycles that happen in the semiconductor space. So Micron is one of those. But when you have a bottleneck that is so severe, where there just aren't enough chips out there for the level of demand for a couple of years out, you know, this is where a lot of the investors are flocking. SanDisk is another interesting place. This is more of kind of like the flash type of market, and it was spun off from Western Digital about a year ago, and the stock has gone up, you know, something like 1,200%. And you know, a lot of people are like, I don't want to chase that type of name. However, you know, whenever you look at what's happening in terms of the pricing environment for all of their products, you know, they're able
Taking a look at the New York Fangs. They're hanging in there pretty nicely. Netflix is pushing a bit higher. Netflix. NVIDIA's holding. Apple's at the high of the day.
operating income. So in 2025, sales were $7.3 billion, and their earnings were $700 million. You go to 2026 estimates, revenues are going to double to $15.2 billion, and then your operating income is going to be $7 billion. So that's a tenfold difference. And then if you go out to 2027 estimates, it's $25 billion in sales and $15.6 billion in the operating income. And then lastly, to kind of round this out, we've got Lam Research, which is one I've owned for a long time. And this is more of a, you know, a fabric.
Netflix pushed a bit higher.
Together. And, you know, you listen to their earnings calls about all the needs that all these, you know, chips what they need in terms of things getting smaller.
Love to see NVIDIA follow through again tomorrow after that bullish engulfing candle. Pretty decent odds for that. 270 stocks advancing out of 500. More than half advancing. The Qs, 44 advancing out of 100. Let's see what IWM looks like. IWM trying to push as well.
Do you look at the other tech names or software as a service? I mean, we saw, IGV getting pummeled, for example, which really is the basket of these software stocks. Such a different story. Down 1 year, down year to date. I mean, down, 20% in just 3 months. Is there opportunity there eventually or not necessarily?
Oh, yes, we definitely see that. So, I mean, at Money Flows, we're obviously looking at what's going out as well as what's going in. And software has just been a really painful trade. And we've seen signs of capitulation, what we would call forced selling over the past couple of weeks. If anything, it does look like there's been a pause. And we do think that the space is more constructive than what it was heading into all of this. So, we've been recommending that some of the higher quality companies.
All right, starting to bounce now, IWM. S&P starting to bounce. Okay, I don't know why it does this. Not sure why it does this, but if I just hit default, it'll do that, right?
Great company. They just had terrific guidance. I just think a lot of people are offsides.
No, that is the default. Okay.
A lot of the mega caps, and that's why we're starting to see a lot of.
My apologies. Not sure why TradingView does this.
So great company.
It's a pain in the butt.
People are positioned differently for it, and they're given more room, and they're giving more pluses to all the smaller mid cap names and in tech.
Okay, starting to push back up. S&P.
Thank you so much, and a good look there at the memory names that he really liked, which included Micron, SanDisk, and Lam Research. Still ahead, we're taking a look at the Berkshire Hathaway's first quarterly report since the departure of Warren Buffett. Greg Abel's quite able and plans to stay on for 2 decades, so showing his commitment to
The IRS's direct file program, which allowed eligible Americans to complete their taxes online for free and directly with the government. The Trump administration said last April that the program would be ending because it wasn't widely used. Brian, back over to you.
All right, Angelica, thank you very much. All right, coming up, some of the day's other big movers, including that stock. It's an electric utility. It's on pace for its worst.
Okay, Apple making a new high of the day. Apple.
In 20 years.
Just about ready to make a new high of the day. Apple. Trying to break out. Apple's trying to break out. Looks good.
And 400 branches, all at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com. Welcome back to the watch list. We're watching Berkshire Hathaway. Lower today did report its fourth quarter results. The first results out without Warren Buffett at the helm. He stepped aside. He obviously retired at the peak. And now McCrae Sykes is with me, portfolio manager of Gabelli Funds. Mac, taking a look at what we saw from Berkshire and Greg Abel, who's now on board. It says he's going to be on board maybe for 20 years.
Yeah, Thanks for having me, Nicole. Great day for Berkshire Hathaway, in terms of getting the feedback and for investors as well. So always delighted to kind of think about this stuff on the Monday after the Saturday. I thought Greg did a terrific job laying out the annual letter this year. Certainly big shoes to fill.
Okay, trying to push a bit higher. Not a bad recovery day.
Went through all the businesses, so you got the sense of his understanding about them, and he was critical and accountable in terms of what his expectations are going forward. So, a little
All right, let's see what VIX looks like. VIX, big drop today. US 10-year, US 10-year yield. Back to 4%.
I think investors have come to believe in the consistency, transparency, and clarity with the conglomerate. The culture has been well ingrained. So I think that was the signature with this annual letter as well. He threw in a few pieces of humor, so trying to emulate his mentor, but not obviously trying to reach that level. So I think it was a pleasant mix and great feedback. In terms of management changes, we've already started to see that. You just look at the disclosure around the annual meeting this year in terms of adding an extra panel or a Q&A with Katie Farmer and Adam Johnson. So we're starting to see the emergence of some of these leaders. They were announced at the end of the year, and so I think you'll see more of that as they help with Q&A and the leadership roles and life after Buffett.
What do we think about what's in Berkshire Hathaway's portfolio? Let's go over that a bit.
Yeah, so they continue to have a pretty concentrated base of those core investments, whether it's Apple, Amex, et cetera. A firm like American Express, I expect that to be a core holding for some time. They have been removing some of the Bank of America stake, the Apple stake. They have some motivations for that, I'm sure. But, I think they'll continue to like those businesses going forward, and we'll have to see. But there are a number of core businesses in there which, I think will be around for decades for them.
And we think about some of the other things, whether it was insurance and rails, those were also a big part of the portfolio too now. Coca-Cola.
Sure. Actually the Chubb stake that's increased there, they've done pretty well. Coca-Cola, et cetera. I mean, look, who knows insurance better than Berkshire? It's 44% of their operating earnings. Again, is a little softer this year. We're going to see some headwinds due to rates. Every 50 basis points of the $370 billion in cash is almost $2 billion headwind. But still, that's
Okay, trying to push a bit higher. Looks like we're going to threaten the highs again.
So we feel pretty comfortable about the insurance business as well as their investing that they do outside of those insurance businesses.
And what do you think when you look at just the big picture of the market and the opportunities for investors? I mean, Berkshire Hathaway will always find opportunities and ways to spend money. They have so much money on the sidelines to invest. But your thoughts to an investor here?
Well, we saw two deals last year. One closed in January, so the acquisition of the Rodin Company. So that was kind of interesting in August.
Okay, here we go. We're trying to push to this level.
And then you had the OxyChem transaction, which closed just after January 1st. And that brought over, about $1 billion of contribution to operating earnings. They paid about $9.5 billion for that. So a nice owner's earnings yield on that. And, look, it's such a big pool of operating earnings that we calculated going forward about $850 million per week that they're generating there. And so certainly a lot of good opportunity to put that cash flow to work, whether it's on the private side, whether it's on the public side. They continue to be moving in and out of companies there. Obviously, we would like to see a bigger decline, more stress in the market where we can really put some capital to work. When during the financial crisis, they really were
Trying to push through this level. We could get some short covering and pop through this level. I'm almost certain there'll be some stops overhead. Okay, a stop run wouldn't be surprising. Watch the volume again. Here we go. The volume picking up again. MACD's trying to turn up. We've got an hour and 3 minutes to go, hour and 4 minutes to go.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award.
All right, we're still running up against resistance for now. Let's see what it looks like. Having traded up against it a couple of times, let's see what it looks like now. Let's increase the opacity.
Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get with Schwab Investor Checking, the checking account built for investors.
RXT.
Inside the minds of pro traders.
All right, Netflix continuation. Netflix continues. All right, nice little follow through on Netflix. Okay, we're trying to push higher right now. Netflix trying to get through 98 to get to 100. Call walls at 100, 100. Okay, Netflix pushing higher. Apple's also at the high of the day. Microsoft just off the high of the day. Nvidia's trying to get something going. Trying to muster some interest.
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to.
Let's go, Netflix. Let's run it. The fact that Netflix will run in the evening session is even more important. We always look for institutions, footprints. They usually show up in the evening session after 2 o'clock. Not always. It's not an exact time. It's just a general time that we look for bullish or bearish activity. So right now it's bullish. And we know that JP Morgan upgraded the stock. So there you go.
This place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm going to be sick. We have to buy that now.
Invest your way.
Okay, S&P not able to get through this area yet. With a few minutes left to go. 59 minutes to go. Let's see what they have to say on CNBC. Okay, they are currently on commercial break watching the S&P. This level overhead. Netflix is still pushing. Netflix looks good.
Thanks for watching Power Lunch.
Historic day, big turnaround. Closing bell starts right now.
All right, guys, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. And this make or break hour begins with the markets, of course, which continue to react to the conflict with Iran. Take a look at the majors here with 60 to go in regulation. We started to turn
late morning after a negative start. And take a look at that. We're green across the board. The Russell's leading the way. Good for nearly 1%, but everything's gone positive. There's been some buying in the banks. That has definitely helped. The mega caps as well. So that's your story as we begin this final stretch. Look at NVIDIA.
First trading day of the month, Scott. Tell him, Scott. It's first trading day of the month. End of the month window dressing on Friday. If it wasn't the first trading day of the month, I mean, I can speculate, but that certainly got to help. Buy the dip. We had a tremendous dip last night. Still a coin flip. I mean, anything can happen news-wise. So I'd be trading more like debit spreads, less, 100% shares. I'd be more interested in trading directionally with call or put spreads. Looking to participate, but not having a lot of exposure. That could very easily get whacked if the markets, if something happens. New York Bang.
The American people, our country itself, would be under threat. And it was very nearly under threat.
Scott, a little bit of a shift in emphasis here from the president today, really talking about targeted strategic objectives for the U.S. military in this campaign, the campaign that he said could last some weeks. Over the weekend, we heard him call for the Iranian people to rise up and take control of their government. He suggested in media interviews that he'd be willing to work with whichever Iranian leadership emerges, but it's not clear who that will be. He said in one interview that he'd had an idea of who successor leadership could be in Iran, but that those officials that he was looking at were also killed in strikes over the weekend. So not at all clear what the next steps are here, other than this ongoing military campaign to degrade those military capacities of the Iranian regime that the president talked about in the East Rim, Scott.
Okay, Eamon, thanks for the update. Appreciate that. That's Eamon Javers at the White House. For more on what all of this means to the markets, let's bring in Chris Verone. He is Chief Market Strategist at Strategas. He's here as you see at Coast 9. It's good to have you. Great to be here. Interesting day. First off, the price action. What do you take from that?
Man, the less you know in this business, right? It would not have been kind of what you would have anticipated last night. But you go at S&P, went out at a new high on Friday. That's generally not where your big problem is. The trends were up into this. The leadership was decent. Yes, it had a more defensive field with the last couple of weeks, but industrials were still largely in gear. I think it's important that the financials and the banks respond out of this. They flashed oversold in our work late last week. I do think it's critical. If we're going to kind of stay on this narrative that the economy is okay, probably will actually want to see rates up and banks responding to that here.
More than just one day, which, look, totally, most are positive now. We've just cycled through some of the names. Interestingly, JP Morgan is still in the red, but that's been a point of
Making up for lost time and lost ground now.
Credit some of the
Netflix.
equity-like names, which we can get into in a moment.
I do wonder if we've reached some crescendo on the private credit software relationship that became front and center really the last couple of weeks. Remember, these private credit stocks have been weak for the better part of 8, 9, 10 months. I think they went negative in our work last April, so we're talking about
60
10 months
minute.
of relative underperformance. It really didn't bleed into the banks until the last 2 or 3 weeks. On Friday, you had about 75% of bank stocks make a 1-month low. That's generally a condition you actually want to lean into, particularly when the group is in an uptrend. So you have that in the financials here. I think it's essential they respond. What I've seen time and time again in this business, Scott, is when you get an event like this weekend, it tends, frankly, to reinforce more of what was already happening. And I think the biggest thing happening, not just this year, but the last 4 or 5 months, has been this equal weight over cap weight. I think, if anything, this just accelerates that moving forward.
The wild card, of course, is if this becomes more protracted, more prolonged, and or it gets worse to some degree. Correct me. The president talks about 4 to 5 weeks, could be longer. I think, as Amy was alluding to, there still are a number of unanswerable questions at this point on how this all unfolds and what comes next.
So, first thing, of course, we know we don't know, right? Be open, be imaginative, let the market guide us. emphasize that it's not like strength out of the energy stocks came out of nowhere 2 weeks ago. I mean, energy has been persistently getting better, and globally, probably since September or October. And the turn of the equities predates the improvement in crude. It was really late summer, early fall, where we started to see the incremental improvement in the energy stocks. I do wonder if you get a little sell the news type event here with both oil and the equities, but they're largely in good long-term uptrends, particularly the stocks. If they sold them, I'd be willing to step in and buy weakness.
So I mean, you don't want a big spike in oil. I mean, Wells Fargo says the worst case scenario is the S&P to 600 at 6,000, excuse me, if an oil shock actually happens.
So I think even maybe more important than what S&P level we trade to or not, it's in this environment where energy has assumed more of a leadership role, where does that leave consumer discretionary? Because such a big part of the story for many entering this year was, okay, tax refunds and stimulus. I always get uncomfortable, and we've talked about this before, when the narrative precedes the stocks moving, and there's this fully formed narrative that first half 26 is going to be excellent for consumer. I think notable, even today, discretionary pretty weak. It's been pretty weak. It's kind of near the bottom of our sector ranking. So that to me is the big wild card. If we're right on the economy and the economy's in pretty good shape, doesn't discretionary need to get going here?
Yeah. And I mean, staples, right? The outperformance has been pretty marked, right? The staple stocks have been going up at the
Okay, S&P just dropped off from that area, rejected S&P. Okay, so they're not done fooling around with this. Nice volume coming in, selling volume. All right.
I think you're generally in pretty good shape. Energy materials in good shape. But look at the reversal in silver today. Speaking of, what's already in the price of the reversal in gold today.
Got 52 minutes to go. 52 minutes to go. They're selling up here.
So anytime you have an event like this, spend time thinking about how can the consensus be wrong, what could change.
All right, stay with me for a moment. We did mention, of course, the very top of the program today, a turn in many bank stocks helping to turn the market around as well. So much focus in that area of late, which is why Leslie Picker's interview today with JP Morgan CEO Jamie Dimon was so important and so timely. She joins us now from Miami Beach with more. Hi, Leslie.
Hey, Scott. Yeah, Dimon has long said that markets have underappreciated or have been underappreciating geopolitical risk. So I was curious, against that backdrop and what you mentioned with bank stocks and other equities today, what he thought of the reaction to the events in the Middle East, particularly as it pertains to the risk of inflation.
I don't think this thing in an isolated way will. I think there's some risk there's more inflation than people think, and that could be like a skunk at a party if that ever happens.
Okay. Pretty quick drop there. Puts catching a bid late evening.
In addition to skunks, Dimon has also been concerned, as we've talked about many times on this show, cockroaches. I asked him what he meant by the cockroach comment and what he said last week about people doing dumb things in terms of underwriting. He said he didn't mean for those comments specifically to refer to private credit, while noting a downturn would be broad-based.
So credit will have a normal cycle. I believe that it'll be worse than a normal one when it happens. So there will be one, and that's because of complacency.
I asked him about the recent software and private credit volatility, and he really said the issues are about credit broadly, prices broadly, Scott, so not really seeing much of a specific issue in software and private credit, as we've been talking about for so long.
No, but he did say to you, which I really thought it was a great interview, Leslie, and you got to cover so many things on so many important topics that we're all thinking about, of the private credit and software-related concerns. In every credit cycle, things go bad that you might never.
Low tick alert minus 800.
Low tick alert. All right, so we're dropping off here. Late evening. Quick retracement. Today's gains.
Into some of the largest private credit names. Interesting that he tells you when you do have a cycle, it's going to be
With 49 minutes to go. 49 minutes to go. Market's dropping off here. Check the volume. MACD dropping off.
CEO Lloyd Blankfein's assertion that would be extremely risky and could have unintended consequences
specific standards when you're underwriting things, particularly for retail, that there needs to be significant communication. But by and large, he agreed with some of the concerns raised by Blink Fine a few weeks ago with private credit going into retail.
Yeah, yes, I agree with him in general, is how he put it to you. Good stuff, Leslie. Thank you so much. Leslie Picker in Miami for us. And speaking of private credit, the fallout in the software space, obviously front and center. Oracle's credit default swaps hitting their widest level now since the global financial crisis. Seema Modi following that for us. Hi there.
Hey, Scott. Well, the market initially cheered Oracle's plans to raise about $50 billion in debt and equity to fund its massive data center expansion plans. Since then, questions have emerged around the cadence or pace of equity dilution affecting current shareholders. That's not only weighed on Oracle's stock in recent weeks, but its 5-year credit default swaps, which have widened to levels not seen since 2009, so it's a 17-year high. A credit investor also telling me that CoreWeave's earnings last week have revived concerns around the topic of CapEx, the amount of capital needed to fund its data centers, and adds that Oracle credit default swaps are also still being viewed by the market as an AI proxy. We are about 1 week away, Scott, till earnings from Oracle. The exact date is yet to be announced, but when they do, we know management will have a lot of questions to answer around its latest financing deal.
Yeah, no question. Watching it closely as we always do. Seema, thank you. Finally, NVIDIA shares among the mega cap names that have been rallying today. It's been a tough stretch, as you know, for that stock. Christina Partsinevelos is here with more. It's an interesting move that we're watching here.
Yeah, it's been a tough stretch for a lot of these mega cap tech.
All right, we're down 10 handles. We're up 10, 15 handles, down 10 handles now.
Quickly move past the U.S. strikes on Iran. Meta, Netflix, Microsoft, and Tesla all recovering from earlier losses. Meta and Tesla specifically swinging at least 3% today. But NVIDIA is the king with the big swing right now, down over 1% at its lows, now up more than you can see on your screen, almost 3%. So it's almost a 4-point reversal, the biggest in the mega cap group right now. Driving NVIDIA specifically, anticipation ahead of GTC, that's their tech conference later on March 16th, where NVIDIA is expected to unveil a new inference-focused platform, which is built on their new Grok chip technology, so things with slower memory.
No stop run today. It took out some stops down below, though. Pretty quick drop there. Let's see what the New York Fangs are looking like. All right, so a little profit taking, but generally a pretty decent day for the New York Fangs. Netflix hanging out up the highs.
The other thing that's happening in your world this week is Broadcom, right? Those earnings are coming out. Honestly, a name, Christina, I feel like we haven't talked that much about, and I'm not exactly sure why.
Well, the problem with
Baker Hughes, Palantir. And for Palantir to follow through tomorrow. Palantir. Bitcoin, looking for that to follow through as well. Pretty decent bid on Bitcoin today. If we can break out of this consolidation zone, that'd be nice. Tesla pulling back now.
During the earnings call, we'll see. It's on Wednesday.
All right. Yeah, we'll pay attention to that for certain. Christina, thank you very much. We do have some breaking news. The market's taken a little bit of a turn. It's regarding the Strait of Hormuz. Let's get to Pippa Stevens.
Oh, figures. Okay, figures.
What do we know here, Pippa?
Hey, Scott. Oil is spiking right now after the Revolutionary Guards commander did say reportedly the Strait of Hormuz is closed and that they will set fire to any ship trying to pass. That is according to Reuters.
It's pretty interesting. You know, anyone firing on ships, I mean, they're just gonna pinpoint where the rockets are coming from, and that's not gonna exist anymore. You gotta be crazy to do anything now. All right, S&P continues to drop off here. Okay, it was looking good.
Report citing Iranian media, so I would say take that for what you will. But nonetheless, the mere reporting of that is enough to shake the market up just a little bit. We've seen, as we said, remember we came on the air, everything was green. The Dow's now back down about 200. S&P's down about just about 11 points or so. Nasdaq's still hanging in there, as is the Russell, but everything is well off of the levels that we saw.
Yeah. I mean, this is going to be volatile for the next few days, most likely. Next couple of weeks. Even more than it has been lately, as we spend most of our time below the 50-day moving average. Let's see what the New York Fangs look like right now. All right, still in a bullish reversal pattern for now. MACD stochastics rising, RSI rising. So look for that momentum to continue tomorrow. Okay, what does breadth look like? Breadth. Okay, these are all pushing lower except for mid caps, small caps. Mid caps and small caps, these are looking okay. Big caps still pointing lower. NASDAQ still pointing lower. All right. RSPCT, equal weight index, trending. New York Stock Exchange, XII, the Arca Institutional Index. Okay. New York Stock Exchange.
We think this is going to be a shorter event, but I definitely would not underestimate. I mean, this is the biggest deal I think any of us on this panel have seen in decades in terms of the reshuffling of the Western versus the China, Russia, Iran, bloc that is really coming apart.
So, Lauren, it's a good perspective that Bryn gives us. How does that filter in?
New York Stock Exchange, buyers at the low of the day today. All right, now we got a reversal again. Market is psychotic right now. Nice reversal. Look at the volume coming in. Shorts covering. Back down to this area over here where we bounced before. Okay, we bounced right over here. Bouncing in the same area. Volume's coming in. Okay, can we get back up to the high? We've got plenty of time. 42 minutes to go. Shorts cover.
It means currency hedging, including ex-US equity, ensuring a little bit of ballast there. And it also means regional diversification. It's a thing we've talked about quite a bit, Scott, and it's not about one specific event, but rather...
Not a bad day. Not a bad day. It's a hell of a lot better than I thought it was going to be. When I looked at the markets last night, down 175 points, futures. I just turned it off and said, you know what? Let's see what it looks like in the morning. And sure enough, we recovered. We recovered. And you would expect to see the New York Fangs in the toilet. Nope. Nope, not even close. Not even close. That's got to, if you are in any of these stocks, you got to be very happy with the performance today. All things considered.
It's going to be a jumpy market, yeah, for the foreseeable future, a headline-driven market, which we've seen before. You got to be careful not to make too many decisions based on that kind of stuff.
I think particularly headline-driven decisions, the first casualty of war is truth, they say, right? And who knows what headline is right, what headline
Starting to rally again. S&P starting to rally again. Looks like shorts are quick to cover. Take their gains quickly. You stay too long in a put and it evaporates. Unless you got some time. New York Fangs are hanging in there pretty well. With 40 minutes to go. 40 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, March the 2nd.
I think you're still going to have a lot of disparity among these names. I think the Googles and the Apples, to me, feel safe, safe in quotes. I think, Meta is spending, Amazon's spending, Tesla's doing its own thing. And so I think investors are going to continue to be choosy. And obviously you and Christina were talking about Broadcom. I continue to think that NVIDIA, they have amazing numbers. So great to see it up today. NVIDIA should be at like 212, 215, not 180. I just think there continues to be are we at the peak for NVIDIA earnings or Broadcom? And I think the answer is going to be no. And so I do like especially NVIDIA, Google, and Apple. And the other ones, I think you got to be careful on the spending side. I think the market will penalize them like they're doing Oracle.
It is interesting, though, Laura, isn't it? Of late at least, we've been skeptical about the AI trade a bit. We've been critical of some of these large mega cap names, but at times like this, it's not the first place we go back to. Maybe
higher low printing. New York Fangs look fine. It'd be lovely to see everything close at the high of the day, but that's unrealistic. Well, all in all, Not a bad recovery day. Thought sure it was going to be a lot worse. Oh, so that's a relief.
Incremental investment move, in our view, needs to be towards quality and diversification. It is so straightforward, but has not been popular for the last 15 years of one-way market up U.S. tech outperformance. Again, I think that tech is a part of that bolstering picture of a portfolio, but the incremental moves into the broadening of the S&P 500, into credit where we have quality and sort of infrastructure enablement and geographic diversification, again, just so important as investors reposition for this new reality.
Guys, we'll have to leave it there. I appreciate your understanding of that and your patience through some breaking news. Chris, thank you. Lauren and Bryn as well. Let's send it now to Christina again for a look at the biggest names moving into the close.
Scott, we got a big mover. AeroVironment shares sinking after Raymond James triple downgraded the drone maker to an underperformed for strong buy. It comes after it lost exclusivity to a $1.4 billion satellite contract with the Space Force. We've actually seen this huge swing. What I mean by that is that it was up as much as 20% just this morning, and now you can see it dropping in the other direction, now down about 20. Berkshire Hathaway also in the red after posting an operating earnings decline of nearly 30% in this last quarter with Warren Buffett as CEO. It comes in underperformance in the conglomerate's insurance segment. Shares down roughly almost 4.5%, but 6% just over the last year. And last but not least, CrowdStrike shares. They're climbing right now, about 3% on an upgrade to overweight from neutral at Piper Sandler. The firm says AI-related concerns for the cyber stock are just overdone, and it views AI as an opportunity rather than a displacement threat. So that's why you're seeing shares higher. Scott?
Thank you. We'll come back in a little bit. Christina.
Looking for a higher low, higher high.
Here up next, OpenAI striking a deal with the Defense Department after the Pentagon cut ties with Anthropic. We hear from an Anthropic investor next. He's Lo Tony. He'll tell us what it means for the future of the AI arms race next.
It's going to be vertically strengthening its AI infrastructure, or is it more than that?
We saw NVIDIA's report come out. It was just good on revenue, on earnings, outlook. And then you saw a price drop go down 8% in 2 days.
Oh boy. Hope everyone had a good day today.
Again, a lot of irrational behavior around lots of things like how AI will
Tesla slacking off a bit. Microsoft fading from the high. Apple fading from the high. So is Amazon. All right. So we're seeing a little profit taking. Seems normal. Seems kind of normal at this point.
Should I get out? Should I get out? Should I get out? And that's what's creating a little bit of, again, irrational behavior. Stay true, stay diversified, don't make any big bets, especially when you're seeing a market that jumped up in VIX at 25. Now pulling back.
Be interesting if Iran's name gets switched back to Persia again. If you know anything about the history of the area, there's a lot more to it. A lot more to it. Okay, so S&P just sitting here. Can't figure out if it's going to drop or pop. The Bollinger Band's coming together, squeezing.
CapEx budget for AI for 2026. If those costs of those build-outs go up a lot by energy going up, it could pull back on how they're going to deploy that money. So again, it depends on the duration, the price escalation of energy. But if energy goes up, it usually is negative on CapEx and could slow down the growth rates that they've been so bullish on for the past 2 years, year and a half.
Doesn't seem to be reflected in the price of technology stocks today, though, Robert. Fascinating chat. Thank you so much for joining us. Robert Conzo, the Wealth Alliance there. Coming up next, we will dive into the energy sector as we see crude oil spiking high due to the Middle East conflict. So we'll see how high prices can climb. Thanks to a fast on top.
Futures holding for now. Just below flat for the day. It's off 8 handles at the moment. We've got 33 minutes to go. This last hour seems like it's taking forever. Apple, Microsoft, all of these off the high of the day now. People taking profits. We'll come back in tomorrow, look for a follow through, see if we can get it. A lot of oil and gas names faded from the high. ExxonMobil starting to turn end of day. Palantir off the highs. S&P. Thomson Reuters looks pretty good. Coming off the low. Okay, let's look at, let's see, USAR. That was good earlier. USAR. Near the highs of the session. Trying to get through 21. Getting a little rejection there. If it gets through here tomorrow, 23. 23 will be good. MP Materials had a bullish day today. Engulfing price action over the last several days. Looking for MP to be back up here at 75 pretty soon. CRML. All right, look for that to get above the 50-day. All right, those look okay. Newmont Mining. Gold, GLD. Silver. Gapping down, silver. Uranium up. Raytheon up, gapping up. Raytheon, Lockheed Martin. Okay, all of these look okay. Lockheed, Northrop, General Dynamics. Okay, all of those look good. AVAV got clocked today. Triple downgrade, I guess. That'll do it. Triple downgrade usually do it. Overall, the markets don't look bad.
Seeing a big jump in oil prices, we're up more than 7% in crude, more than 7.5% in Brent today.
Okay, so S&P, we were down 3% from the highs this morning. At the low, we bounced. Still below the 50-day in the lower half of this range. So the way I'm looking at this is we need to get above 7,000, start trending, or if we lose 6,800, we start to get more bearish. Looking for risk on, risk off signals. Junk bonds are risk off at the moment. Bitcoin's risk on. Biotechs are risk off. Those are risky assets. IBB. Okay, we got a little bit of a bounce. Bitcoin with a bounce today. Need to see that follow through. Bitcoin. Okay, Bitcoin looking good. Squeezing. So this is probably going to get moving soon. If you're trading options, you're definitely liking what you see here because once this gets going, your options are going to explode. Implied volatility is going to pick up. And get paid. All right, so that looks good. Risk on if this follows through tomorrow. Coinbase. Okay. The banks with a bounce today. A little bit. Goldman Sachs. Okay. Materials. Holding at the highs. Communications. That's Meta, Netflix, Google, etc. Paramount Skydance. What's that doing? Paramount Skydance. Reversing back into Friday's price action. But Netflix looking good. Netflix gets into this Kirby over here. This indentation where very little volume is traded. If it gets into this area through 100 is the call wall. Gets above 100. You know what dealers are going to do? The dealers are going to start covering. They'll start buying shares. That's going to create a squeeze. How far that squeeze takes us? Got maximum resistance up here, just shy of 110. Okay, I have the 100, 105, or 15, 110, I believe. Let me see, Netflix. I have the May 100, 105. May 100, 105 on Netflix. Looking for a follow through. Using options, a spread's going to cost less. I'll be able to participate. I won't make as much, but I don't get exposed to too much risk as well. So it's a good trade-off for me. I'm happy with it. You know, I can trade 10 of these instead of 1,000 shares of Netflix and still benefit from a nice move. Conversely, if Netflix takes a dump, I exit. I maybe lose 50 cents on my options, you know, out 500 instead of, you know, very large amount on the shares. So I like the idea right now because just a little bit too much risk on the tape right now. So Netflix, I have May 100, 105s. I'm pretty sure this is going to continue. Not straight up necessarily, but over the next several weeks, I think we'll be up at 110 soon. Got a JP Morgan upgrade. I think 120 is their target, 120. Okay, that's north of the 200-day. So I could see that happening. Oh, Netflix. NVIDIA. Also a nice bounce on NVIDIA, producing a bullish engulfing candle today. Okay, bullish engulfing off the 200-day. Where do institutions usually show up? At major moving averages, the 21-day, the 50-day, the 200-day. So while we don't know if this is going to hold tomorrow, if it does, and we follow through and get back above the 50-day, that's huge for NVIDIA traders on the bullish side. We're starting to get a bounce now with 27 minutes to go. S&P is starting to show signs of a potential bounce here, or it could just stay here. Fought back from really bad news earlier this morning. Down 175 points. The S&P futures back up, almost flat on the day. Like to see a follow through tomorrow. Core weave at the highs of, no, it's not the highs of the day. It's the highs of the, let's see, core weave here starting to move back up. Core weave. Okay, I did roll core weave out to April for those of you who took that credit spread. I took the puts off. I took the puts and rolled them out to April. Same strikes, 80.75. 80.75. Gets it back above 80, 82 or so. I'll take that off for a profit. Got a credit of $25 per contract. I have 10 of those. So added another $250. Got rid of the ones that expire this week. And of course, the calls will be worthless. Calls are way up here. Okay, so this is where I am right here. 80.75. Okay, 120, 125, nowhere close to that. Okay. So I rolled it out a month. More than a month. Out to April, so plenty of time. And that is CoreWeave. Back to what's actually moving the markets right now. What's actually moving the markets? NVIDIA had a really good day. It's up 3% at this point, just off the highs of the day. Honeywell breaking out of a nice consolidation. Honeywell looking really good. For those of you trading Honeywell in the trading room. Honeywell. Nice. 3 weeks tight. 3 weeks tight. Honeywell 3 weeks tight pattern. One of my favorite IBD setups.
LNG, particularly off the back of what we saw over in Qatar, stopping their production. We're talking about 20 to 30% of global LNG now offline. Just talk to us about the broader market impact of that.
No, it's interesting because I know overseas LNG prices are pushing quite a bit higher, but here in the U.S. they're barely budging, and a lot of that is because of logistical issues. So if we're talking about natural gas here in the U.S., I think there's going to be, at least for now, unless things worsen, there's going to be kind of a minimal impact. And I actually also think the news lured in some premature buying this morning and pushed prices higher. And now that we're starting to see prices come back down, I think a lot of those buyers get remorse and liquidate. And if that happens, I think we lower natural gas to about 240. So we're in a supply glut in natural gas. I don't think today changed that, at least here in the U.S. I'll add one more thing. While we're focusing on energies and metals and these kinds of fun things, the U.S. dollar has quietly put in a little bit of a bottom, and I think that continues. It's a triple bottom on a weekly chart. And if the dollar moves higher, it's going to be very, very difficult for commodities such as crude oil or natural gas to hold gains. In fact, it's going to be bearish at some point sooner rather than later. So keep an eye on the dollar. If it continues to move higher, that's going to work against all commodities.
Really appreciate you taking the time to take a closer look at oil and energy with us in the wake of everything unfolding with Iran right now. Carly Garner from DeCarly Trading. Coming up next, we are going to focus on the defense sector. We've got RTX, Northrop Grumman, L3 Harris, many others all trading higher in reaction to this conflict in the Middle East. That's next on Market on Close. Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints.
Honeywell looks good.
Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily. Identify who's buying, who's selling, how it's going to.
Okay, Honeywell looking good, having a nice day. Honeywell breaking out, 3 weeks tight.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
We're back here on Market on Close. I'm Marley Hayden alongside Sam Bodice. Let's turn our attention now to the defense sectors. Welcome in our next guest, Tony Bancroft, Portfolio Manager at Gabelli Commercial Aerospace and Defense ETF. Tony, thanks for being with us. Great to have you back on the show. You would love to start with the reaction that we're seeing in the defense stocks in response to this ongoing situation in the Middle East. Seeing big moves to the upside in Northrop, in Raytheon RTX, and L3 Harris. Do you think the markets are correctly pricing these moves in? We've already seen such a run-up in these names already this year.
Yeah, it's great to be back, Marley. Sam, I think the reality is that there's going to be quite a bit more spending needed in order to resupply, the weapon systems that have been expended over the weekend and today. And it's probably going to continue with the amount of the barrage of ballistic missiles that Iran has been launching. They're going to have to replenish these supplies, and then they've already talked about increasing production rates, tripling, quadrupling over the next several years. So all things being equal, the primes and the suppliers of them are going to be probably spending quite a bit more. You're going to see defense budgets likely increasing. If you saw the $1.5 trillion defense budget, even a fraction of that, a minor fraction of that is a material increase to the already, unprecedented $1 trillion defense budget. So I think it's pretty well, set for probably longer term spending from here.
Okay, so a ton of hardware has obviously been utilized to pull off what the US
All right.
has done over
Okay.
the weekend. But Venezuela, remember that was only
Honeywell.
months ago. Can you believe it?
We got 19 minutes to go. 19 minutes. S&P just hovering here. Okay, volume picking up again. A little volume there.
But do they continue to move in sync, or who is more likely to benefit from some of that up?
The non-levered growth-based defense ETF this year up about 18%. You know, it holds a lot of the large names that we're talking about, the Raytheon, Lockheed Martin's, L3 Harris, and then some of the smaller suppliers, companies that we probably don't know as much about, but are just as important to these weapon systems. A company called Albany International, which is a small aerospace and defense supplier. They make actually fan blades for jet engines, but on top of that, they make
Okay, Honeywell, nice.
3D weave composite
Honeywell.
for missile systems as well. So these are very expendable.
Nice industrial, Honeywell. What is their latest earnings, Honeywell? HON. They don't have really great earnings. That's the only issue I have.
Is the U.S. defense industrial base currently capable of ramping fast enough to meet the potential demand if this does become a longer duration conflict?
Yeah, Marley, it's a great question. You've heard a lot about missile mass. I mean, right now, there's thousands likely of Iranian ballistic missiles, intermediate and short-range ballistic missiles. They've obviously been using sort of the barrage game plan.
Some cases, it's not even on net revenue, it's on gross revenue. So that takes
Netflix hanging in there.
The other thing is,
S&P just flat.
Lifetime sportsbook handle, but what you're looking at what Kalshi would call trading volume, you say just in 2025 alone, there's more than $1 trillion in that. Talk to me about how do you compare handle, how much people wager on sports books, and trading volume on the straight prediction markets.
Oh, and it's way more than even that. So I think what they're doing is they're essentially saying, here's how much is actually at risk, or here's the total payout that could be won. We typically report how much is actually wagered as handle. So those are different things. Imagine if you make a parlay bet that's a 10-1, the amount wagered is very different than the amount of the total payout. So we're trying to draw an apples-to-apples comparison.
Polymarket and Kalshi got a lot of attention this weekend because of event contracts they're offering on Iran, with some questions about whether there was some insider trading, especially on Polymarket. I went on DraftKings predictions. There were no event contracts on Iran at all.
Okay, trying to squeezing a bit, S&P. With 15 minutes to go. 15 minutes to go.
They do have potential insider risk, but the bigger thing is we just don't think those are the right types of contracts for us to be offering. This is an entertainment product. When you start betting on people living, dying, wars, it seems to cross a line that I think is not really what we're looking for. We'll see what happens. I mean, there will be guidelines issued at some point by the CFTC, and I assume it will include what types of markets are permissible. So once we have more clarity, we'll know more. But for now, we're going to make our own decisions on not offering certain types of markets.
Jason, thank you so much for having us in on Investor Day. Appreciate that. And Scott, one note here, the CFTC has just announced today that they're hiring a new top cop, former federal prosecutor, lawyer who's dealt a lot with crypto issues, David Miller, who will now be in charge of investigations and enforcement at the CFTC.
Broadcom back to the highs of the day. Netflix highs of the day. S&P basically flat. It's down 4 handles at the moment. Can they goose this up? Paint the close a little bit. Okay, 13 minutes, a little bit more than 13 minutes to go. All right, S&P turning back up. Watch these end of day runs. We could see a nice little rip here, or not. Just watching though, watching. See if we get any kind of rally off of this. Let's see what hedge flows look like. Hedge flows. Price action above, hedge flow line down below, turning back up. Okay. There's a little pocket of negative gamma above. If we were to get above that, that could run, but I doubt it. There's a little purple right there too. You see it? Right above current price, where it says hedge wall. Just behind that, you see purple. That's going to be resistance. So that's the pocket of resistance that we ran into at 6,900. Couldn't get through it. Bitcoin turning back up. Bitcoin can run after hours and overnight, of course. 24/7. Is it 365? Bitcoin. Hope you had a good day today. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Monday, March the 2nd, first trading day of the month. Pretty good. Pretty good. I'm pretty happy with the way markets turned out. Could have been a hell of a lot worse if it wasn't the first trading day of the month. Maybe I'm making a big deal out of nothing, but after, window dressing end of the month, which was Friday for February, starting off the month, first trading day of the month, put money to work. Nvidia came off the 200-day like a bolt of lightning. Netflix following through. Apple looking pretty good. It's back above the 50-day or trying to stay there. Microsoft is still basing, looking like that might do something. Amazon and Google trying to push a bit higher. Yeah, so it turned out to be a decent day. I'm not unhappy. Don't want to be greedy. That's the thing about trading. It takes time. What looks like it's just borderline right now, it could be much higher tomorrow. A lot of these stocks could be much higher, like Netflix could be at 100 tomorrow fairly easily. Once it gets above 100, you know what happens with the dealers. The dealers have to cover their hedges by buying shares. So Netflix above 100 would be something I'll be paying attention to. If you're trading Netflix, you need to make a note. Watch the 100 level. Let me see what Money Magic levels are. I'm pretty sure that's what Money Magic has, right? Money, that's what you have on Netflix, right? Netflix 100. Yeah, so the first call was at 100, then at 105. So we'll get above 100. Those dealers start buying shares, the underlying, in order to hedge their shorts at 100. Now, Money was saying earlier there wasn't a whole lot of flow, so we need to see that as well on Netflix. Let's see what Netflix looks like right now. Netflix, let's see what's down below. Netflix premium today, 237 million. 237 million buy calls, the 150 strike call. You see that right there? NVIDIA, 237 million, 61,500 contracts. And they sold calls at the 160 strike. Okay, so we're trading below 100. So you got to trade, you got a spread, basically. You got a call vertical, 150, 160 call vertical. Call spread.
As well as stability in terms of their integrity. So
Call spread.
The factors involved in what's going
Buy a call, sell a call.
and all the needs for computation
Spread.
AI data center
Looks like a spread.
Stability and consistency in, of course, semiconductors. So if they can avoid
Buy puts.
hyperscalers can avoid downtime.
Woo-hoo. Let's see. All right, so they're taking profits in puts at this point, or closing puts. This is Netflix. Oh, that's NVIDIA. NVIDIA. All right, Netflix. Here's Netflix. Netflix Premium. That makes more sense.
Which goes back to essentially March of 2025. So we're looking at an entire
Buy
year
put.
turnaround with the stock
I call
revamped its business, which was mostly in
5,500 of the calls.
semiconductor
The 90 strike call. Buying the 100 put. Very little open interest at 100. 100 put for March 27. Yeah, let me see what money has responded at all there. Netflix flows need to pick up bill. Okay, so yeah, money's been watching the Netflix for us as well as himself. Okay, Palantir turning back up now. S&P kind of turning. Captain, what you doing, Captain?
Game changer, if you will, use case for technologies, especially with the high demands of data centers and computation.
So, I mean, it certainly pays to be adaptable, I suppose, in an environment like that. I mean, we talk about some of these companies with the exposure to the auto sector not performing as well to those that are exposed to, as you say, the more...
Okay, we've got 7 minutes to go. 7 minutes, 10 seconds to go. 7 minutes. 7 minutes to go. There goes Tesla's turning back up. It's shorts covering. Tesla didn't get it as far down as they thought they could. Tesla turning back up. Snowflake turning up. So is Broadcom. Same thing with Amazon. Microsoft seeing a little short covering. Little dip there. Wasn't enough for them. So it looks like we're going to bounce here on Microsoft. NVIDIA sideways. Looking for that to follow through. Netflix looking for a continuation. S&P. I'm very happy. I'm very happy. I've only said it a dozen times. Pretty happy with the way the trading day turned out. Thank you, money. Appreciate that. Yeah, that's what I have. That's what I have.
So the point is that, you know, if you look at last quarter, they lost 4 cents or near break even.
All right. Let me just see if this is the same for Netflix. Yeah. Same as yours, right?
They were expected to lose 13 cents for the full year, which again is a lot less than on an annualized basis than last quarter. So moving in the right direction, and next year they're expected to be profitable on an adjusted basis. So the best moves in stocks don't necessarily happen as they're growing their profits.
Ditto.
The best moves come at that inflection point where they're nearing break even and do make that threshold break to positive profits from essentially losses. And that's happening here for AHR, and I think that's why the stock is higher, and that's why these analysts keep looking at this quite carefully.
It's the proof of that path to profitability that seems to be helping out here. Yeah, makes sense. All right. Nice.
Yeah, I got the same thing, money.
Technology, so Air Test Systems today. Thanks so much for that, George Silas. Marley, I'll send it over to you in Chicago. Thanks so much, Sam. We are nearing the end of our market section, and we'll be bringing in Kevin Green to break down the levels that he's watching on the S&P 500. Plus, we'll have earnings from MongoDB on the way. That's next on Market on Close. Stay with us. Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Okay, there goes Broadcom. End of the day just popped. Broadcom. There goes the S&P turning back up. All right, it looks good. S&P coming out of a squeeze with 4 minutes to go. 5 minutes, basically. 5 minutes to go. Volume picking up. Look at that volume. Looks good. Volume picking up. All right. Tesla, there goes Tesla trying to take out the high of the day, looks like. Tesla going.
No matter the hour, you can trade brilliantly with Schwab.
Catchy tune. Jenny Horn. Okay. Crypto having a good day today. Bitcoin turning up. Look at that volume compared to earlier, the selling volume. Look at the buying volume here. Zip it good. Oh boy, hope everyone had a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com with about 3 minutes, 50 seconds to go. It is March the 2nd, first trading day of the month. I don't know. My personal opinion, the markets acted really good, all things considered, with the business in Iran aside. We were down 175 points last night. We bounced back up. We're green again. All right, so we're green by 2 handles. So they're going to paint this candle green. Bullish engulfing candle on the S&P. That's a bullish engulfing candle over there, right? That's bullish engulfing. Okay. That range encapsulates all of Friday's price action. All right. Good job, bulls. Nice work. Anybody hear from Frank? How's Frank doing? Frank, you listening? Just let us know you're okay.
Thank you, Pippa Stevens. All right, Shan. This day hasn't gone as Mike Santoli was suggesting, as many expected it might. Are you among those?
Yes.
I think what you're seeing, Scott, is this reaction to the events in Iran.
Yeah, Rob, I have 5 and 7s. Nokia. Looks good. Nokia. A big move on Nokia, breaking out. Yeah, I need to take these off. Need to take some of these off anyway. Oh. My son made 70% on he had the 5 call. Made 70%. He was upset that he sold Friday. I told him to sell Friday. I said, yeah, but it could have got rejected. That's his first options trade. Okay, let me get this.
TPET. AIRS. STAK.
AIRS. QPUX. OCUL. IONX. SOUN.
TPET. TMDE. ZPAO. RCON.
QUBT.
TMDE.
All right. Had to step away for the closing bell, unfortunately. All right. So that's it for me, folks. I have a hard stop. Have a great evening, everyone. Take care. I'm your host, Cousin Vinny, coming to you from theclosingprint.com on a rather interesting Monday, March the 2nd. Recovery to flat on the day. Take care. We'll see you in the morning tomorrow. Ciao.